Let's stop at this cat scale anyway.
Definitely. Will you use the Weigh My Truck app?
No, I'm no good with technology.
It's easy. Just try it.
Okay. Wow. You can process the entire weigh on your smartphone and email your paperwork anywhere?
That's right.
So this is how we've been getting through the cat scale so fast.
Yep, and you pretend not to like technology.
Forget this accuracy. Like a truck on a cat scale. When you weigh on a cat scale, you get a no excuses guarantee. If you get an overweight citation after weighing illegal on a cat scale, we'll either reimburse you for the fine or go to court with you. At over 2,000 cat scale locations, we've got your
We got 5 things for you to know ahead of the opening bell. President Trump says he's made his choice on the next Fed chair. Speaking with reporters, the president said he knows who he's going to pick to succeed Jay Powell, but he didn't give a name. Disney, Zootopia 2, bringing in $156 million domestically at the box office over the 5-day Thanksgiving weekend period. It earned more than $550 million globally since it opened on Wednesday. That's the best debut ever for an animated film. South Korean police are investigating that country's worst data breach in more than a decade. It came e-commerce giant Coupang, which has been called the Amazon of South Korea. Information from more than 33 million customers was leaked. And data analytics firm Databricks is in talks to raise $5 billion at a valuation of $134 billion. That's according to the information. United Health Group finally will reportedly sell its last South American business to a Brazilian private equity group for $1 billion.
When we come back, the latest on the Chinese economy, plus retail winners and losers from Black Friday. And a reminder for you, we can get the best of Squawk Box in our daily podcast. Just follow Squawk Pod on your favorite podcast app, and you can listen anytime. We'll be right back.
China's Beige Book is out with some upbeat third quarter data. The group says that China's national revenue and profit growth has improved, but a private survey today showed that the country's factory activity unexpectedly contracted last month. Join us now, China Beige Book COO Shahzad Kazi. Things have not, well, it's good to see you. Thanks for being here. Things that haven't been great. It's kind of gloomy over there anyway. Stock market's been okay, but what, for people that don't follow it closely, what has the last 6 months look like for the China economy?
Yeah, the last 6 months have actually, by comparison to the consensus out there, have looked better in our proprietary data. I think a lot of what's happened here is that the government was releasing very, very strong data in the first 6 months of the year for sure. And since then, really almost mathematically, because of the way they calculate their GDP, they have been rolling out much more negative, I would say in some ways, and data, and the economy certainly has been slowing in official numbers, which has painted, of course, a picture that the Chinese economy is now slowing down. We, on the other hand, say things were actually worse when the tariffs were at their peaks, and since then have gotten better.
What about, I mean, credit is not great, not that many, it doesn't seem like there's expansion, but you're bullish on manufacturing right now?
You know, I wouldn't say necessarily bullish on manufacturing, but the reality is that it's not falling apart. The PMIs will tell you the story of contraction, but the economy most certainly is not in contraction. Even industrial production, while it has slowed down in recent months, is certainly nowhere near contracting. But I think the thing that tells you most about the fact that there isn't this large amount of stress necessarily on firms is the fact that you don't see high levels of borrowing still, despite the fact that credit costs are actually still at multi-year lows.
Does this give China more leverage or less leverage in dealing with us? And are they, where does trade stand right now? Everybody's complying with the latest agreement. We haven't heard a lot of rhetoric from either side about this. China has been off the map for the trade problem.
That's right. I mean, I think there's this managed calm and de-escalation that is taking place, certainly from the U.S. side, but also to an extent from the Chinese side. I mean, they're slow rolling out the release of some rare earths, the light rare earths, nothing that we are going to need for defense and aerospace and such. And we certainly are hoping that they start to increase their soybean purchases, but we've massively scaled back our own export controls, which of course raise very serious national security concerns and alarms. So, both sides are playing this little dance here, I suppose, till the lead up in April when President Trump goes over to China for the big summit.
Did China show any negative effects from U.S. trade moves in the last 6 months?
The brief period, in the last 6 months, not so much, but the brief period where there was this massive and rapid escalation of tariffs, we very clearly saw the results, whether it was April and even going into May, but then of course those were brought down about as rapidly as they were ramped up.
But we heard that they were in a great bargaining position and they could withstand it. Who can withstand it more, us or them?
They certainly have the ability to withstand it more in the short run because of the lack of the kind of political pressure that we would face over here. But the thing is, they've shown us that they have shown us how much leverage they have through their rare earth export controls, for which we unfortunately didn't have an answer. And now we've kind of capitulated, especially on export controls, especially on technology.
Because of the rare earth. That was their trump card, so to speak.
That's right, and I think that only makes Xi feel more confident and stronger. Marry this with the economic data, I think they have a lot of leverage.
But using a card like that sets things in motion that puts the United States and other countries on alert that, hey, we cannot allow this to continue. We're going to change it. It may take years to build up to the point where they no longer have that lever over you, but you don't use a card like that unless you feel so threatened that you know something really bad is going to happen if you don't prevent it. But what you're doing is not preventing it, but putting it off.
That's right. You will provoke a response. Now, of course, China will consistently compete on price. So even if we manage to get all these deals off the ground, mining, processing the rare earths, et cetera, can we ultimately compete with Beijing if they just keep cutting prices? That's number one, which is why my message constantly to folks in DC is we have to find a way to also compel our companies to contract with these producers, because otherwise they're going to go for the lowest provider, and that's most likely going to be a Chinese company.
Has the landscape of who they export to, have they tried to change that to become less dependent on exports to the U.S.? Have you seen that?
That's clear in their numbers, but it's a combination, I believe, of a lot of it is actually trade diversion. So direct trade with the U.S. most certainly has been going down. Our numbers show it as well. So it's hard to replace America. You can sell more to Africa, but you're not selling the same kinds of stuff. And then you can do the trade diversion, which is really the big problem that needs to be tackled.
They don't buy our bonds as much, are they? I thought there was a low point that we hit in Treasury purchases from China.
They've been slowing down their purchases as well. Recently, I believe the trend may have reversed a little, but really, by historic standards, it's slowing down. Yeah.
Bonds they're ready to go under 4%
Right.
on the 10-year.
Yeah, it hasn't had that kind of effect.
There's an FT, I almost tweet, I don't feel like tweeting anymore, Becky, but there was an FT article today, opinion piece in the FT. Europe needs to decouple from the United States.
In the United States.
Go for it.
Yeah.
Good luck.
Right.
Good luck, Europe. You're killing it right now.
Yeah.
You don't need us. Go for it. I want to see that. All right, Shazan, thank you.
Easy.
All right.
When we come back, Swiss voters rejecting a big tax on the country's wealthiest citizens. We've got that story next. But first, the AccuWeather forecast with meteorologist Bernie Rayna.
Now we have another storm pushing across the central part of the United States. More snow in Kansas City, St. Louis, and Chicago with some delays. We'll keep it dry along the East Coast and the West Coast, but boy, is it cold along the East Coast this week. Your AccuWeather travel forecast here. No big travel delays except in Chicago this afternoon with the snow. And watch, we do have some rain in Texas today. To help you make the best decisions and be more in the know, make sure to download the AccuWeather app today.
You can see it's getting worse for Airbus shares. Reuters is reporting that the aerospace giant has discovered an industrial quality issue regarding dozens of A320 planes. The flaw is said to affect the aircraft's fuselage panels and is delaying some deliveries. The report says there are no immediate indications it has reached aircraft in service. Is that a separate issue from what we were just talking about with abrupt loss of altitude because of solar radiation? This doesn't sound like because the previous story that we told you about, they had identified it and fixed more quickly than anyone thought thousands of planes. So this.
Well, when we talked about that, this is a new issue. And by the way, when we talked about that and being repaired, the stock was off by about 7.7%. Now you can see it's down by about 9.5% this morning, too. So that is adding additional pressure to the shares. In the meantime, Switzerland voting overwhelmingly to reject a proposed tax on the super rich. 78% of voters said no to a measure that would have levied a 50% tax on all inheritances and gifts of more than 50 million Swiss francs. That's about $62 million. That proposal came from the youth wing of the country's left-wing Social Democrats. Money that was raised from the tax would have been earmarked to fund policies to combat climate change, but people looked at it and said because it was such a huge tax, a wealth tax that goes along with this, that it did not have a great odds of passing from the very get-go.
Great use of money, wealth tax. Perfect. We'll stop that. Coming up, what drove Black Friday retail spending higher? We're going to dig into the numbers and key stocks after.
Welcome back, everybody. You probably already know this, but it is Cyber Monday. Shoppers are hunting for deals, and we are coming off a record Black Friday spending period. Adobe Analytics says that U.S. shoppers shelled out $11.8 billion online. That is up more than 9% from last year. Joining us right now is Dana Telsey, Telsey Advisory Group CEO and Chief Research Manager. And Dana, let's talk about not just online, we'll do that, but let's also talk about what we saw in the stores. Because overall, I think Black Friday sales shopping numbers were up by 4.1%.
Exactly. It looked like a solid Black Friday. The weekend seems in line to track to that 3 to 5% type of holiday season sales gain for the season. Overall, what you saw in stores picked up versus last year. It was expected to be basically right around 1.7% for Black Friday. Online's always stronger. It's a smaller part of it, a faster growth rate. It was up at just over 10% compared to around 15% last year.
Wow.
Consumers had a sense of urgency. I thought it was more promotional this year than last year, but the promotions are really surgical. In order, for example, it may be the same percentage off, but if you spend $100, maybe you get a tote bag. If you spend $150, you get the tote bag and you'll get a blanket. So that was the difference.
You saw it being more promotional, and by the way, I didn't realize you had 35 people working for you. You sent your people everywhere to check these things out in the store. You thought it was more promotional, but promotional to the point that it actually hurts the retailer's margins, or no?
I think it was planned. I think all of these promotions are planned. When you're looking at Cyber Monday, which is today, expected to be the biggest online shopping day of the year, the promotions feel similar to what it was on Black Friday. But get it today, because these promotions are not going to be at the same rate as we move through the season.
Okay, that's what I was wondering, because I have not felt a sense of urgency. I ended up shopping online Saturday and Sunday. I figured, hey, it's not going to be any different than other days, and I did get some pretty good deals. But you think they disappear after today?
Yeah, and maybe the day or two before Christmas, they'll come back, but you may not have the choice of goods the day or two before Christmas that you have now.
So what's your overall feeling about the consumer? And the reason that sales are up is more because of consumers feeling good about things, or because prices are up from inflation?
Prices are up from inflation, but I think consumers want to celebrate. It's been a tough year. The macro volatility that's out there, the economic pressures, inflation, definitely the consumers to say, wait, what are we going to do that gives us cause to celebrate? And when you look at what is new out there, because it's newness and value that define holiday 2025, you got the Labubu dolls, which are very popular. You got Andrew's Aura Ring, which is still very, very popular. Nintendo 2 is out there. And you've got Legos. And it's cold outside, so dark suede boots basically are very popular.
Yeah, you said that not only were there a lot of promotions, there was a lot of innovation.
Yeah, there is innovation. There is more newness, because in order to get consumers to spend a higher price, give them something new and different. And you're seeing it even in clothing, whether it's sweaters or whether it's denim jeans. Wide leg is all the rage.
What's who are the winners? Who are the losers? Maybe top three.
Yep.
Each list.
Ralph Lauren, fewer promotions this year than last year. Walmart, always a winner and continuing to drive sales. And frankly, the other players out there that are winning, I mean, look at Victoria's Secret. You're seeing more traffic in Victoria's Secret this year than you did last year. Department stores also picked up. Macy's did better, particularly Bloomingdale's. I think when you think of the pressure points out there, you're still seeing some of the women's apparel companies. Bath & Body Works was not the winner this year that it's been in years past.
Any other losers?
I think overall you're seeing pressure points overall on some of the apparel out there. You're seeing it on some of the footwear out there. And when I think of where the cause is, it's the cause because if you were not innovative enough, that is definitely the pressure point. Watch also on, when you think about women's apparel, think about some of those players. You know, you watch the Ann Taylors of the world, are they getting the traffic that they used to?
We talk about the Federal Reserve and whether it's going to cut rates or not, and talk about that and the impact it could have on the markets overall. Is it a big deal for the retailers?
It'll help the retailers. Anything that gives consumers more spending power is a help. And look at next year, whether it's tax refunds, whether it's SNAP, whether it's a $2,000 check, we need all those elements in order to be able to drive spending. And the reason why? Prices are going higher.
Okay. Dana Telsey. Thank you, Dana.
Thank you.
It is just before 7 a.m. On the East Coast, and you are watching Squawk Box on CNBC. I'm Joe Kernan, along with Becky Quick. Andrew's off today. We do have some top stories, though. President Trump now saying that he has made his choice on who he wants to lead the Federal Reserve after Jay Powell. The president said he knows now who he's going to pick, but didn't give a name or when there will be an announcement. U.S. and Ukrainian officials meeting for talks in Florida aimed at ending the Russia-Ukraine war. Secretary of State Marco Rubio said the session was productive, but more work remains. Rubio, Special Envoy Steve Witkoff, and President Trump's son-in-law, Jared Kushner, represented the American side. In talks, Witkoff is expected to meet with Russian President Vladimir Putin in the next several days. And Airbus shares are lower. Reuters reporting that the aerospace giant has discovered an industrial quality issue regarding dozens of the A320 planes. The flaw said to affect the aircraft's fuselage panels and is delaying some deliveries. The report says there are no immediate indications that it has reached any aircraft that are actually in service. Checking the futures, they're in the red, been there all morning long. 178 points on the NASDAQ. Less than 200. We were more than 200 at one point on the Dow. S&P's gotten a little better, down about 39 points. Treasuries, the 10-year was flirting with 4%, not quite. Back now to 4.04. In energy, saw oil below 59, or below 60 at 59.33. Let's get to Dom Chu with a look at this morning's pre-market movers. Good morning, Dom.
Good morning, guys. So we're going to start off with a check on Bitcoin prices right now, which are dropping roughly 5% pre-market and falling below the 90,000 mark yet again, just a hair above 86,100 at this point. It's the biggest one-day fall since early November. Now, Bitcoin's valuation often kind of mirrors what risk sentiment is in the marketplace overall. So this lower valuation level kind of shows how investors might be feeling going into the final month of 2025. So as a proxy for risk, Bitcoin maybe not the best kind of move right now if you're bullish on the market. Now, crypto stocks like Coinbase, Robinhood, others, Strategy, and Bullish all falling alongside of it with that kind of ecosystem effect overall. So you can see here some of those big Bitcoin type players and cryptocurrency market players are down roughly 4 to 5% now. Moving over to the gold and gold miners, different physical gold. The story's a little bit different. Gold reaching its highest level in 6 weeks now, driven by investor expectations of a possible U.S. interest rate cut in the coming weeks and shifts in Federal Reserve leadership. Now those investors looking for more steady investments as some certain uncertainty approaches. Gold miners like Newmont, like Hecla, Coeur d'Alene, others moving positive pre-market, so you can kind of see some of these moving at least to the upside, green for the most part for the precious metals. And finally, shares of Tesla right now are dipping just around, call it 1.25%. This is all in a Reuters report that car registrations in France dropped by 58% in France, 49% in Denmark from this time last year. The report also cites CEO Elon Musk's political involvement in the U.S. for the drop in European sales, but despite the drop in France and Denmark, there are also reports now that Tesla has sold more cars in Norway in 2025 than any other automaker ever in a full year. So shares are up to 5% so far this year overall on that. But the European auto sales picture a little bit more mixed. Norway on the upside, France, Denmark maybe on the downside, guys. Joe, I'll send things back over to you.
All right, Dominic. Thank you. We'll see you again. You got an hour or so.
All right, a new report in the Times of London says that the UK is set to agree on a major pharmaceutical deal with the United States that would mean zero import tariffs on drugs into the United States. It would also lead to an increase in spending on medicines by the UK's National Health Service. That report says that the agreement is expected to be announced in the coming days. You can see this morning that AstraZeneca shares are up by about 0.3 percentage. GSK shares up by 1.1% and Haleon up by 0.8%.
All right, coming up, what could be next for investors following a turbulent November? We're going to look at the signals from the options market. Next, Sparkbox returns in just a moment. Futures are still down but not out. Joining us now on what the market, options market, is saying about equities, Amy Wu Silverman, head of derivative strategy at RBC Capital Markets. Last time I try to remember exactly what you tell us each time because it's an episodic thing, and you update us on the latest things. I think that were people not hedging last time, or they were starting to hedge the downside last time?
They were starting to hedge, Joe, and one thing we talked about was this idea of the skew being sticky, but all that meant was even as we got sell-offs, people still added to their hedges, and it was kind of a not great sign, because typically when you get a market sell-off, you would think people are like, okay, I got my move, I'm gonna be done monetizing those hedges, and that wasn't happening. People are adding more. And we were talking about how that was a little ominous going into year end, and we continue to see it, unfortunately. So, unfortunately, I'm not a bearer of positive news today.
Yeah. So, in this case, the consensus could be indicating the right way it's going to go. Instead of, I mean, sometimes we like bearishness. We like people hedging at times. But in this case, you think they're going to be right, and there's reason to be concerned.
Yeah, you know, there's been a push-pull this entire year in the sense that even after April 2nd, even that big rally, institutional investors were still pretty bearish, and they got whiplash. So they unfortunately had to, you know, start piling into the right tail. But it was always retail coming in, stepping on that bid, and that push-pull has waned to some degree. And I just thought that price action the day we had NVIDIA earnings was really telling. If you thought about how the narrative shifted literally midday from everything's fine, AI is going to take care of it all, to this vicious flip. And one thing we didn't see beforehand was that same thing. We didn't see those call option pile-on that we saw in NVIDIA pretty much every single time in earnings post-COVID.
None of this is probably surprising given the size of the move that led up to all of this, right? Is it still within what you would call a healthy, sort of a, I don't know, a little cathartic that some of the fluff gets taken out? There's air pockets under some of these things. Is the long-term bull case intact?
Yeah, so it's a great question, and I do think we talk about these volatility potholes, and so far we've just had this kind of garden variety drawdown where you're sort of within 1 to 2 standard deviations of what's normal for the market. So we can actually measure that both in terms of the cost of protection, 1 standard deviation down and 3 standard deviations down. What worries me is if you go past that, because one leg of the school that we had been counting on was that retail always buys in after a 1-2 standard deviation drawdown, and that kind of keeps momentum to the upside. And the question is, if we go 3 standard deviations down, then do we start to get downside confirmation, which feeds on itself? We haven't seen that yet, and frankly, most investors I talk to are still pretty bulled up about 2026, and a lot of what they talk about is the big beautiful bill, the rates, you know, the stimulativeness, and then even the baby stock fund being a way for more folks to start participating in the market versus less.
There are people that argue that, I just saw that Bitcoin should be part of your portfolio because it's not correlated. It seems more correlated. It seems the most correlated to anything, to a risk-off trade, and moves have always been, you know, 1 or 2 times what you see in equities, I guess, in terms of percentage pullbacks. But it's got to be somewhat, it's not a tail wagging the dog. It's concerning that it's at 86 and maybe headed lower from there, isn't it, for everything else?
Yeah, it frankly has just been this pure risk on, risk off.
That's all it is.
Like so far, I mean, arguably, if it is digital gold, it should start to decorrelate. I mean, frankly, if you want something that's relatively uncorrelated, then just go with gold. Or you know, I mean, like if you actually look at the correlations, like that. Exactly, like that's actually been working. Unfortunately, cryptocurrencies haven't, and I think part of that is the cohort who's trading it, right? So when you think about the same people who are piling into call options, maybe trading in their Robinhood accounts and also buying cryptocurrency, when it's positioning-wise a similar cohort, you're going to get these shifts in sentiment.
I hear value investors and others talk about how there's much more gambling in the market these days than there used to be. Less investing, more gambling. Does it feel that way to you?
100%. And you know where they're gambling? They're gambling in the derivatives markets. And they're doing it shorter and shorter term. You know, you have these 0-day to expiry options. So again, they expire within a day. That's now accounting for more than half of S&P volume. It's absolutely stunning. And part of that is accessibility. How much easier is it now to go on a prediction market or to go on your phone or to trade a fractional share, an option? And the second part is the generational shift. So it's not you and I who's necessarily doing that. It's, you know, the generation below and even the generation below that. And I think that will not change. It will continue to become more, not gambling necessarily, but more accessible.
So is hedging expensive right now, or puts expensive?
They are. So if you look just on a year-to-date basis, we started maybe under the 50th percentile on a year-to-date basis. We're at year-to-date highs. Go back about 5 years, we're still in the 80th percentile. So it's starting to get up there, both on a 1 and a 3 standard deviation cost of protection basis. That doesn't mean anything to me in terms of it couldn't go even higher. You know, you could have said that in 2007 and we would have blew through those numbers. So to me, you know, your headline VIX, your psychological numbers, they still don't tell you about the market moves that are ahead, given what we know.
Yeah, I haven't even looked at the VIX recently, but it's not.
I mean, it's you know, it's gone through that psychological 20 handle and it's come down, but we often think about what that means. So you take your VIX, you divide it by about 15, gives you a daily move in the, you know, 1.25 range. The market's been doing that, right? You can always think of it back to the daily moves that implies.
So you started out by saying you didn't really have good news. I guess for the bears you have good news.
I guess so, yeah. If you're ready to do some sort of hedging, which I think, again, a lot of institutional investors have wanted to do, they find this cathartic and, you know, they've been whiplashed so much by the market ripping up and they're more prepared, I think, for that time down.
I always like when retail beats institutional, you know, with the early and the dumb, so-called not smart money does better than the institutions. So that's not everything's been reversed there, right? The institutions have not been vindicated by staying bearish at this point.
And I think what you're seeing is institutional investors are also thinking now about, okay, if I have to kind of stay in the market, because again, I don't want that right tail risk, what do I do?
Right.
So you're seeing more rotation within the market. So you think about the days where there's really big down days. What do? They rotate from Mag 7 or tech into healthcare, for instance, or they go from heavyweight, mega weight into equal weight S&P. So you do see essentially a shift within the market itself. It's one of the reasons for a few months we kept calling it a paddling duck market, because you don't see it on the surface. You know, your VIX stays relatively stable, but those little duck feet are churning. And we see more of that, I think, partly because you still have to kind of keep yourself in the market. You can't step away. And so those heavy rotations do happen on days when you get that Mag 7 weakness.
All right, thank you.
Thank you.
Tough, you usually get a Santa Claus rally, Santa Claus.
Santa Claus grind? Settle for that?
Yeah, you're gonna have to. What can we do?
I don't want to see Santa Claus grinding.
Oh, okay, yeah. Wrong account.
Thanks, Amy. All right, when we come back, consumers need something to follow Cyber Monday. That would be Travel Tuesday. CEO of Kayak will tell us about upcoming deals and travel trends that he's seeing as we head into the new year. Also, as we head to a break right now, check out the performance of some of the major airline stocks. Delta and Southwest both posting double-digit gains over the last month. Delta by more than 10%, Southwest by more than 13%. American and UAL, no slouches either. American's up by 4.7%, UAL by 7.4%. And Squawk Box, we'll be right back. For consumers looking to get away for the holidays or plan a trip in the new year, tomorrow is Travel Tuesday. That's a marketing push for travel deals. Joining us right now is Kayak CEO Steve Hafner. Kayak is owned by Booking Holdings. And Steve, thanks for being with us. When did Travel Tuesday start?
It started, it's like many of these marketing events, it started about, within the last 10 years, and it's just taken off over time. So if you look at what happened last year, traditionally there was Cyber Monday, and there were great travel domestic deals on Cyber Mondays, but it had a hard time breaking out from other categories. So because of the alliteration, people started moving to Travel Tuesdays. And these days, Travel Tuesdays is really about international discounts.
What kind of discounts will people see? How steep will they be? And will they be real discounts off of prices that haven't been inflated to start with?
No, there should be real discounts because they're mainly offered out there for international routes, as I mentioned, and their prices are still high. So your average international ticket is around $1,100. So a lot of companies or airlines, that is, will cut their prices 18 to 20% to try to stimulate some demand. Domestic travel, I think those deals are not going to be as easy to find. So, I think if you're a bargain hunter, international is where you want to go.
Yeah, I've seen this. Some of the flight searches that you've seen for holiday travel are up by 10%. You say international airfares for the holiday season are down by 7%, domestic airfares down by 1%. What are the bookings showing you?
So Kayak's a search engine, so we don't really have great visibility into bookings. It's just query volumes. But I think we do have good visibility into demand in terms of interest and in terms of what price points are. So anytime you see domestic fares holding basically constant, minus 1% I would say is constant, tells you that demand is pretty strong. When you see international fares coming down, usually that means demand is soft and people are moving from an international ticket, which is again twice the price of domestic, down to a domestic ticket to maintain their travel plans.
Is that a result of people having less money to spend overall, being less confident about things, or is that a reflection of something else? International travel was big for a while after COVID, when people couldn't really travel internationally very easily. Is this, some sort of a rotation that has something to do with consumer taste or with consumers' ability to pay for things?
It's probably a little bit of all the above. So look, people want to travel, but in uncertain economic times like what we're having right now, it's a discretionary good, right? It's not a consumer staple. So if you have the ability to get away for 4 or 5 days and you don't want the hassle of going to Europe or elsewhere overseas, you want to stay within a similar time zone, you want to spend half the money, well, you're gonna shift away from those destinations to the U.S., particularly if you've been abroad recently, which you mentioned the last couple of years. So I think that, we should expect that trend to stay pretty much constant, which is domestic airfares flat, and then international airfares coming down to try to fill those planes.
You have a deal with OpenAI where you've kind of partnered up with them. I think they're sending people your way. And the question always becomes, how useful is that? Is it a good customer acquisition funnel? And is there a concern that ChatGPT or some other AI agent is not going to need the intermediaries that have done such a good job over the last 20 or 25 years with helping consumers figure these things out?
Yeah, you're not the only person who's scratching their head thinking about how does AI impact the travel industry and the current ecosystem. Look, at Kayak, we're big on innovation, so we want to launch the latest, greatest features. We have Kayak.ai, which is in partnership with OpenAI and ChatGPT. We think we're very excited by what AI can do to the travel search and purchase experience. So right now, you can go to Kayak, you can type in a query as you would say it on our AI mode. So you can say nonstop flights to Paris next week on Air France and get a response. And I think that does two things that are great for consumers. One is it reduces the barrier to doing search. And the next step is it reduces the barrier to actually consummate a transaction. So a lot of us are working on how do we bring AI and enhance conversion rate and actually move the next step to agentic AI, which is once you've made your purchase, why go to an airline or a hotel site or an OTA to change it? Why not do that on a third-party site like Kayak? And that's where I think a lot of great minds in the industry are trying to get to.
Hey, Steve, I want to thank you for your time. It is Travel Tuesday tomorrow, but we should point out it's also Giving Tuesday. That's been around since, I think, 2012, when kind of the idea that you spend so much on yourselves or on your family or for friends, for the presents you're going to be buying on Black Friday and Cyber Monday, that maybe Tuesday is also a time to give back. So we should focus on both of those things tomorrow. Steve, thank you.
Love that. Thank you. Take care.
All right, coming up, the outage at the CME raising concern about trading infrastructure and the global financial system. We're going to take a look at the risks facing exchanges right now. And basketball legend Michael Jordan's fight with NASCAR now heading to federal court. More on that story. Squawk Box returns.
Some deal news for you this morning. Goldman Sachs is paying $2 billion to buy Innovator Capital Management. That's an issuer of a relatively new type of ETF. Innovator has more than $28 billion in assets under supervision across more than 150 ETFs. The company specializes in defined outcome ETFs, which are sometimes called buffer funds. Those limit investors' downside risk in exchange for capping upside potential as well. Goldman Sachs shares this morning trading at $820.
And Michael Jordan's fight against NASCAR heading to federal court today. Jordan owns 23XI Racing, along with three-time Daytona 500 winner Denny Hamlin. They are accusing NASCAR of antitrust violations after refusing to sign charter agreements in 2024. After 2 years of negotiations, 13 of the 15 teams signed the agreements, which are the equivalent of the franchise model used by most other pro sports leagues. And the lawsuit alleges that NASCAR holds too much control over all aspects of the racing series through exclusivity clauses, ownership of most of the racetracks, and it controls the rules and regulations. NASCAR says it has done nothing to restrain trade beyond normal business practices. The jury trial is expected to last about 2 weeks.
How did that go wrong? You go from Michael Jordan being there and being a
such a good
huge
thing
proponent and beneficiary. Did they be beneficiaries of his stardom coming to that?
Yeah.
To you're winding up.
That's the first I'm hearing about it.
Me too. I had not heard about this before either. But like, how do you let something like that go wrong?
Yeah.
You would think,
Murphy's
please
Law.
bring it in.
Right.
Bring him here.
Yeah, exactly.
Yeah.
Coming up, the pick is in. Apparently, President Trump says he's made his choice to replace Fed Chair Jay Powell. We'll get into that and what to expect at next week's policy meeting with former Cleveland Fed President Loretta Mester. When Squawk Box comes right back. And President Trump says he's made his choice on the next Fed chair to replace Jay Powell, but he isn't making the name public just yet. Joining us now, former Cleveland Fed President Loretta Mester. She's also a CNBC contributor. I guess you don't, you probably don't want to tell us who you'd like, Loretta, but what type of person would you like to be the next head?
Yeah, good morning, Joe. Hope you had a good holiday.
Yes,
I
you
mean,
too.
we need somebody who's going to be a thoughtful leader who can actually corral the committee into thinking about the economy, thinking about what the best path for policy is to achieve the dual mandate goals, put aside all other kind of considerations that are not part of that decision making about what's the best path for policy to meet those goals. Everything else should be outside of the room. Everything should be about the best analysis, the best modeling, the best forecasting we can bring to bear, and then making a decision and then communicating that in a clear way to the public. And I think those are the things that I would like in the next Fed chair. And certainly many people on the list that we've heard about of being under consideration have those attributes. So I think that's what I would like to see.
Loretta, we've seen Fed critics and some of the flamethrowers that follow monetary policy clamoring for reform of the Federal Reserve and really critical of it. But that's even gone a little bit mainstream. And some of the leading candidates have been very vocal about things. I'm thinking about Kevin Warsh and others about reforming the Fed. Do you agree with that? Are there things that need to be done? Have mistakes have been made in terms of the way that Jay Powell conducted, or even his predecessors conducted business at the Fed?
I think there definitely are things to think about in terms of what can we do to improve the performance of monetary policy making. And certainly, the last several years has been very challenging. So I wouldn't criticize the Fed necessarily for not focusing on the goals, but there's always things that you can improve. For example, thinking about scenarios and not putting all your eggs in one particular basket. Thinking about how to use, the knowledge we have about supply side economics and bringing that to bear in the considerations and deliberations of the committee. So there's lots of things that I think are worth thinking about, and the case study of the high inflation, I was on the committee at the time, so I can say we made a mistake in allowing inflation to continue as long as it did above our goal. And so we should have acted sooner, and thinking about, what prevented us from actually making a change in policy sooner rather than later. Thinking through that, I think that would be very valuable. I think what I take issue with some of the criticism of the Fed is I don't necessarily think that it's being done in good faith. I can say there are things that we should improve and the Fed should be working on, and I mean it to make the institution stronger. I think some criticizing the Fed are doing it to make the institution weaker, and that's where I would take issue.
I mean, there are some that actually think the whole notion of making credit more difficult for businesses and small businesses to obtain because rates are too high, actually, that doesn't work necessarily to tame inflation, and is actually counterproductive to what the goal of, I guess those are the supply side issues, I think, that you just alluded to.
I mean, you tell me what your model of the economy is, and then I can tell you whether you're making a sensible argument or they're making a sensible argument. Now, I think there's too much just discretionary. I think, we should lower rates without thinking about, what are the implications of that for price setting behavior, right? You want a Federal Reserve that's not necessarily doing what's expeditious in the moment. You want a Federal Reserve that's thinking about, what are the implications? If I lower rates too much, am I going to create an inflation problem that won't be helpful to those small businesses that may benefit today from getting cheaper credit, but then will have to contend with high prices that continue to rise? And that's the trade-off that the Fed has to be making every time it makes a decision on policy.
How about a Fed chair that basically telegraphs every waking thought? Every week we know exactly what the latest feeling is. Instead of, there are some that think there's way too much transparency, and that just sets you up for failure when you try to predict things that are unpredictable.
Well, I think there is a framework that the Fed should be putting out about how it's thinking about the economy right now. Unfortunately, we don't have that framework. So it should never be that we don't know how the Fed would react if the data comes in a particular way and supports a particular view of the outlook. We should know how the Fed's likely to react. And I think that's where we've kind of gotten a little bit off track. We don't really know when the data comes in how the Fed is most likely to react to those data. The Fed's not prescient, you're not prescient, I'm not prescient. The economy can evolve in a way that we can't predict today. But once it evolves, we should know how policy is likely to react to that change in the outlook. And I think that's where we don't have very good transparency about that. The Fed's so-called reaction function, that's where I'd like more communication and better, more clear communication about what the Fed's thinking in terms of its policy setting.
Okay, so give me your picks then. Top pick and then 2 and 3. Who's your?
Look, I think the president is going to choose someone that he feels comfortable with. I mean, he signaled that all along. And many of the people on the list, I think, could do a very good job for the Fed. But again, they're going to have to really focus on the dual mandate goals Congress is given.
Who on the list would you not want?
Setting everything up.
Who on the list would you?
That's tough.
Who on the list wouldn't be able to?
Who sucks?
Never mind. I figure, you know, I just wanted to see your expression. I wanted to see your expression when you say I'm not going to answer. Anyway, Loretta Messer, thank you. Appreciate it.
Thanks, Joe.
Okay, see you.
All right, when we come back, the 11-hour-long trading blackout at the CME late last week raising questions about how susceptible the exchanges and data centers are to outages. We're going to take a closer look at this wake-up call for the global financial system and which exchanges could be at risk when Squawk Box returns. All right, welcome back, everybody. The company that owns an Illinois data center that sparked worldwide market problems on Friday says that it has beefed up temperature controls. That was the problem. The privately owned Cyrus One told Bloomberg that it had added additional redundancy to cooling systems at the facility, which is about 50 miles from Chicago. The issues on Thursday into Friday, led to an 11-hour outage impacting trading across stocks, bonds, commodities, currencies. It was a mess. Joining us right now with more on the risks to the financial system is Russ Benham. He's the former chairman of the CFTC. He's currently Distinguished Fellow at Georgetown's Pissarro Center for Financial Markets and Policy. And Russ, thank you. I wish I had you here Friday morning because it was something we were all trying to figure out. Here we are days later, and I think we still don't know all the answers to exactly what happened. The center says that it was cooling systems that went down, but it's crazy to think of all the markets that were affected for such a hugely long period of time. There are supposed to be redundancies for these types of things.
Yeah, I mean, it is pretty remarkable to think what happened. Obviously, unique fact that it was on Thanksgiving and Friday, historically a very thin trading day. But these measures, these disaster recovery, this business continuity, these are plans that are worked through with the regulator. The company works with these third-party vendors. So it is a shock. I think we got through it without too much of a fallout given the days, but still a little bit of a canary for the future that we have to be very careful about these third-party vendors, especially with the AI data cooling systems.
Now, this was a data system that the CME originally owned itself.
Yeah.
They turned it over years ago, and then you had that company that got bought in by private equity. KKR, I think, was part of the ownership here. Does that worry you about it not being the CME, or does it worry you that we're just not thinking in terms of enough redundancy or running the backup plans on those redundancy plans enough?
There's a lot of questions that have to be asked and answered. I think the first one certainly is about the redundancy for the cooling system. I know these are not AA batteries you're popping in and out, but certainly you think you would be able to do it in less than 10 hours with a cooling system. That said,
they opened the doors. It was really cold that day.
One would think. The other element to all of this is what you said, though. 10 years ago, CME did sell this facility, and prior to 2016, it was a dedicated facility to the CME markets. After that, CyrusOne bought it, private equity bought it, so you're now going to have a lot of competition for that space within that data center. And within that space, you have to wonder, what are the priorities? There's a lot of demand for AI right now, so is that prioritized over markets? And is that going to jeopardize or compromise the stability and the resiliency of these markets?
Right, but it's not just this data center. There's a new data center they're building next door. There's a new tower that they, I think, put up a few years ago, too. As a former regulator, what would you be doing? What would you be demanding?
And two things. One, you have to start asking a different set of questions than you have historically. Cyber, don't want to underscore the importance of cyber attacks, malware, that it's going to continue to be an issue for regulators and market infrastructure. But now that you have this boom and this demand for AI data centers, it's going to start to sort of clog up the pipes, and it does force you to wonder and ask the questions around who is getting priority, and are there new risks, operational or disaster recovery type risks, that we have to think about that we didn't even just a few years ago, let alone 6 months ago. The other element that I have to think about is 10-hour outage is a long time. Why did that happen? CME, other exchanges, other registrants, you are going through a disaster recovery plan pretty methodically every year. You're testing it. You know exactly what's going to happen if you have a failure. Why did it take 10 hours to figure out or resolve this issue? Why didn't you kick over to this disaster recovery
Well,
sooner?
they didn't kick it to the New York servers, and there's been some speculation that it may be because some of the major firms don't have robust enough systems working off of that redundant location, right?
And that's a possibility, and those are the questions, again, that have to be answered, but was there a line of communication that wasn't happening between CyrusOne and CME? It was Thursday night. Because of the holiday, also Friday, like I said, thin trading day. You have to wonder, what was that information flow on Thursday night? Was there an expectation the system was going to come on sooner than it did? Maybe that created a hesitation by CME to kick it over? Or as you said, was there just a concern about kicking over to the redundant location because of worries about the transition? But again, these are things that are done with the regulator on an annual basis. This is all the planning, this is all the preparation, this is all scenario analysis that you would hope could be executed in a cleaner way. Because as you pointed out at the top, these are critical markets globally. We heard about people all across the globe being affected by these markets being shut down. And if you have a busier trading day, given all that's going on geopolitically from a macroeconomic perspective, it could have a real challenge and issue with markets and tied up hedges and different positions.
So having said all of this, as somebody who has surveyed this very closely, how confident are you in the robustness of our financial systems?
Well, we work very hard, the regulators work very hard with the registrars to make sure that there are plans in place and that there's resiliency. I just think there are constantly new challenges that people are facing right now. The AI demand is a new one, and we're going to have to think about it because it's going to put pressure on the power grid, it's going to put pressure on mechanical engineering and actual hardware, and then depending on the time of day, we're moving towards 24/7 trading, right? These are all new questions that have to be asked about, can the system be resilient enough to handle a lot of these issues that are popping up unpredictably? And I think you have to have a different set of questions being asked and answered, and you have to have stronger redundancies so that you don't have these lags in time between a failure and a recovery.
Is 24/7 trading a good idea to you? Is it something that you think we can execute on?
I've always had a little bit of caution because you think about, as it is, our markets are open a lot of hours, close to 23/5 at this point. Crypto has obviously pushed us towards 24/7, and that conversation continues to happen. And there's actually a lot of risk when you have different asset classes trading at different times of day, some 24/7, others less than that. But we really have to think very hard about the infrastructure and that downtime that you have, even for 30 minutes or an hour a day, just to reset, take a look at the hardware, the software, mark-to-market positions, any number of things that you have to do in those few minutes that you have off. So it needs to be a very gradual transition. If we get to 24/7, it feels like it's inevitable in some respects, but there are going to be a lot of unintended consequences and issues that you really can't predict until you actually are into that environment of 24/7 trading. And I think this is an example of types of things that can happen and really have an impact. Again, we got lucky with the Thanksgiving holiday and a thin Friday trading day. If this was a busier trading day, you could have had a lot worse situation play out.
Did it shock you that it went that long?
It was surprising that it went 10 hours, and I think in retrospect, obviously, thinking about what happened, we're going to learn a lot over the next couple days. Given the amount of work that is put in by the exchange, the amount of resources, both money and personnel, to have disaster recovery plans, I think if they knew it would have lasted 10 hours, they probably would have kicked it over sooner. There must have been some misalignment with news and information flowing between the data center or the exchange that it lasted that long.
Russ, thanks a lot for coming in.
Pleasure to be here.
Good to see you.
Got to get you off the air because things are getting worse as you're, no, it's not you, Russ, but the futures are worse than they were. Bitcoin, we said clinging to 86. It was clinging to 85 until it wasn't, but it's back above 85. It got down in the 84s. It's down about 6.5% this morning. And as I said just a moment ago when I saw it, it was 84 and change. And the NASDAQ's gotten worse, S&P as well. So December 1st, where are you, Santa Claus? He's, I don't know, sleeping or something. Yeah, not funny, Santa. Coming up, searching for the best deals on this Cyber Monday. Maybe some good deals in the stock market. Plus, one of the delivery companies that dealing with the holiday demand surge, the CEO of DHL Express US is going to tell us consumers are picking up the pace from last year. As we head to break, check out some of the retail stocks over the last month. Squawk Box will be right back.
holiday shopping season means more packages are crisscrossing the globe to arrive on time for consumers, we hope. Joining us right now with more on the demand surge is Greg Hewitt, DHL's Express U.S. Chief Executive Officer. He joins us from the DHL facility in Miami Gardens. And Greg, thanks for being here this morning. This is a big day with Cyber Monday and all. Lots of packages getting shipped. We see some of them going on behind you. How much more demand do you see at this time of year versus the rest of the year? Let's say these 2 months of November and December.
Good morning, Becky. Thanks for having me. Yeah, this is our busy time of year. I would say when you look at the holiday season, which runs kind of U.S. Thanksgiving all the way to Chinese New Year, this year we're seeing about a 33% lift from our Q3 run rate. So that's a little below average. Normally we'd see maybe 40, 50%, maybe indicative of some of the changes in the regulatory environment, but still a pretty good lift overall.
Changes in the regulatory environment, you mean tariffs?
Yeah, tariffs, the elimination of de minimis, that's had an impact on our volume. We're down about 30% year over year. The good news is we recently talked to over 400 small and mid-sized businesses, and they were feeling confident that they were going to see a lift in their business. 40% of them said they'd see better orders this year than last year. So that's a cause for optimism.
Did they say why they think better orders this year versus last year? Is it what they're already seeing in their order books leading up to this? Is it the demand they're hearing from customers, or is it something else?
Well, I think in the survey, they're not as detailed as that. I would say that would be probably a combination of maybe last year was a difficult year. Maybe they're seeing optimism in the number of orders coming through. So it was a good one for us. They did also cite that their biggest concern and question was around the changes in tariffs and the changes in de minimis. That is bringing them some concern.
What do you see just in terms of U.S. domestic shipping? Because that has less of an issue with tariffs, I would assume.
Well, at DHL Express, we're an international shipping company, so I'm not really privy to domestic volumes. What I can say is I think overall when I talk to customers, everybody's working through this new environment, the complexity around it, and whether they're a company in the U.S. that's importing goods that they're going to sell domestically, or there's somebody selling online and shipping out or receiving goods in as a consumer, everybody's looking at these changes and saying, how do I navigate the complexity? And with that, that's why we're staffing up, adding more than 600 people in brokerage and clearance operations, finance and duty billing and customer service, to make sure whether you're a company bringing goods in that you're going to do something with here, or a shop buying online, that your goods are cleared quickly, accurately, and the payments that you need to make are accurately reflected and to you in time to get your goods in time for the holiday season.
Greg, did the shutdown do something? I'm asking for a friend. Is there a big backup at customs or something? And is it much longer than normal for things to be getting through at this point, or was there?
No, no current backlogs, no issues at either CBP or within ourselves or the other integrators. I think what you do find is every time a new tariff comes in, every time a change is made, like removing de minimis, there is added complexity. And usually, because those are going in a quick time frame, sometimes overnight or over a weekend, we are all working quickly to adjust our systems, adjust the tables, and accommodate quickly. I think we've done a pretty good job at making sure there are no long delays or issues associated with that. That's why we're adding the extra staff, making sure we've got people that can answer the phones, help customers if they've got questions, and bring clarity to it. The only delays I've seen are when people are disputing or questioning some of the tariff calculations and they have questions and they don't want to make a payment before they understand the details. Things have to sit in bond until they're cleared and processed through, but no unusual delays at this point in time.
Maybe a lot more questions than usual, though, and that's the need for extra demand.
Definitely.
Greg, I want to thank you for being with us today. Greg Hewitt, we appreciate it.
Thanks, Becky. Thanks, Joe. Happy holidays.
You too.
All right, it is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick along with Joe Kernan. Andrew is off today. Among our top stories this morning, Secretary of State Marco Rubio says that weekend peace talks with Ukraine were productive but need more work. A meeting that took place in Florida included Ukraine's new chief negotiator, White House envoy Steve Witkoff, and Jared Kushner. Witkoff plans to visit Moscow for follow-up talks with Russia. President Trump says he's made his pick for Fed chair, but did not say who it is just yet. An announcement from the White House is expected soon. Last week, Treasury Secretary Scott Bessent told us an announcement could come by Christmas. And we're watching oil prices after OPEC Plus agreed to maintain output quotas for the year ahead, including a pause on hikes for at least the first quarter of 2026. Oil is coming off its fourth down month in a row. It's now on its longest monthly losing streak since 2023, and right now, WTI is sitting at $59.13.
I'm going to do this first because I'm ready. Some NVIDIA news. We've been watching the shares of Airbus, the company just confirming it has identified a quality issue affecting a limited number of A320 metal panels. Airbus says it's taking a conservative approach and expecting all aircraft potentially impacted, knowing that only a portion of them will need further action to be taken. Airbus has said the source of the issue has been identified and contained. Here's the breaking news. NVIDIA announcing a partnership with Synopsys to revolutionize the design and engineering of called CUDA and other GPU accelerated computing, and revolutionizing the design. Synopsys is a leader in engineering solutions from silicon to systems, and it helps customers innovate AI-powered products. And the CEOs of these two companies will be on. Jensen Huang will be on Squawk on the Street coming up at 9:30 a.m. I thought they said both. Maybe I was mistaken. Sassine Ghazi. I don't know whether that CEO will be on. I thought they said at 10.
Huang will be there.
Jensen Huang.
CUDA is their NVIDIA's proprietary parallel computing platform programming stuff. It's that's a pretty big deal to hear innovations to CUDA coming.
And it's an expanded strategic partnership. So it's not NVIDIA invested, let's see, $2 billion at a purchase price of $414 a share into Synopsys. I don't know when that was. This expanded partnership will integrate the strength engineering. In addition, I think that's new. In addition, NVIDIA invested into Synopsys $2 billion. You can see how Synopsys is reacting to this expanded partnership. Pretty nice move.
I mean, this is a little different than a lot of the other AI deals that we've talked about that seem circular.
Yeah,
This is something where these are two real companies working together to strengthen things that they've already done together at this point, too.
We'll be able to flesh all of the details out, because they do talk about exactly what it's going to allow, or what the goals are between the two companies. But it gets pretty arcane. And tune in at 9:30. Let's check the futures this morning. This probably isn't going to help. I mean, you would hope it would help, but the die has been cast so far, Mike Santoli. It's not a great start to December.
It's not, Joe, and this comes, of course, after a very strong finish to November. We had an exactly 5% rally from the low a week ago Friday. You had Black Friday trading that also coincided with the end of the market month, so you did have a bit of a markup there. Now, the volatility in Japanese yen and higher yields in Japan has seemingly knocked crypto back, so we're testing the linkages again between equities and Bitcoin. You do see we're still, at least right now, in this trading range. You've been in for a couple of months. Pretty good response to the oversold conditions, as I said, right around 6,500 and change. We did not really get escape velocity in terms of how broad the rally was Thursday, Friday. That's something we're watching right now. Here, take a look at the 3-month chart of NVIDIA relative to the S&P 500. I wanted to highlight this because November, you had the S&P 500 slightly positive in a month where NVIDIA was down 12.5%. So it's tempting to kind of absorb the pressure there, and even that news that you guys just broke didn't seem to be moving NVIDIA stock. Obviously, it's an enormous company, and therefore all of these deals have a very high hurdle to move the needle when it comes to NVIDIA. But it's a question of whether the S&P can really resist any further downside in the likes of NVIDIA and the other Mag 7 stocks. Over the course of November, Alphabet added about $500 billion in market cap. That obviously did a lot of the work to enable at least the rest of the tech sector to absorb what was going on in chips. And also non-tech did have a little bit of a good response, cyclicals and such, at the end of November as well. Take a look here at the 60-40 stock bond portfolio. I always like to highlight it's been a vindication for diversification in 2025. You see here we're actually just about at a new high. Bonds did their job in the downturn in April, actually buffered some of the downside, and therefore almost keeping pace with the S&P 500 on a total return basis. If you include the yields, it's more like 16% year to date. We'll see if that is something that can be carried forward into next year, Joe.
All right, very good, Mike. Appreciate it. We shall see. Calling Santa Claus, calling all elves.
Have you been good this year?
I've been naughty and nice. Sometimes naughty is nice, you know.
No. The Black Friday shopping weekend is over, and now we are in the middle of Cyber Monday with another round of deals for consumers. Courtney Reagan joins us right now from a site that is key in processing online transactions. Good morning, Court. Where are you?
Hi, good morning, Becky. Yeah, so I'm at Visa's Cyber Fusion Center. This is in Virginia, just outside D.C. It operates 24 hours a day, 7 days a week, 365 days a year to detect, protect, and monitor transactions all around the world. The network processes about 110,000 transactions a second, likely a multiple more on a day like here today, Cyber Monday. E-commerce shopping, of course, is likely to peak later in the day into the evening after work. That cadence has changed over the years. And on Black Friday, Visa says it blocked 200% more presumed fraud in the U.S. than it did on Black Friday last year. Now, 40% of Americans, or almost 74 million, are expected to shop today, according to the National Retail Federation, making it the second most popular day to shop behind Black Friday of this 5-day stretch, which is often referred to as Cyber Week, that goes from Thanksgiving until today. Now, despite discount events starting as early as October, Adobe still expects today will be the biggest online shopping day of the year, with $14.2 billion spent. That would be up more than 6% over last year's Cyber Monday. And despite worries about consumer confidence and financial strain and pressure on the consumer, the big unofficial start to the holiday does appear pretty strong. Most analyst channel checks agree and note that promotions are largely in line with last year, give or take, maybe plus or minus. Now, MasterCard Spending Pulse says Black Friday retail sales rose 4.1% across all forms of payment, in-store and online. And then MasterCard's number says online specifically, e-commerce grew 10.4%, in-store grew 1.7% over last Black Friday. So sales may be higher in stores, but we know we have a mixed picture on traffic. Adobe Analytics says Black Friday online sales grew more than expected as well. They put it at 9% to $11.8 billion. And as predicted, store traffic, firms like RetailNext and Surmatic, they say fewer shoppers hit stores this Black Friday than last year, but it was still the biggest in-store day of the year. I saw lines not only before the stores opened, but actually throughout the day as the stores metered traffic. And Visa says that its top categories by spend so far this holiday weekend include apparel and accessories, electronics, and home improvement. Everybody always asks me, are the discounts better, Black Friday or Cyber Monday? My answer is probably an unsatisfying it depends. Retailers hold back certain promotions from Black Friday so that you come back and check them out today on Cyber Monday.
Dana Telsey told us earlier, Court, that if you don't buy by today, you may not see these types of discounts again. Is that your sense as well?
Yeah, I do believe that that's true. I think retailers have done a really good job of managing their inventory. We were really nervous about that earlier in the year, particularly with tariffs. And I think that the inventory is relatively tight. I wouldn't say that there's a shortage, but tight, meaning they probably won't have to dramatically up the discount rate as you get closer to Christmas to clear any inventory. They've done a pretty good job. We do sort of expect this lull, and then you'll always see that pick up right towards the end. This last Saturday before Christmas is often referred to as Father's Day, because that's when some of the dads start to realize, oh, Christmas is right around the corner. So you do often see a jump then, but you may not get the discounts that you'll see today.
Okay, Court, thank you. See you later.
Thanks.
All right, coming up, who's going to win the battle for Warner Brothers Discovery? Then later, is the Santa Claus rally in the works for Wall Street? Mohamed El-Arian is going to join us with his outlook for the markets in the Fed. Squawk Box will be back after a break.
Another AI partnership to tell you about. OpenAI and Accenture announcing a collaboration. Accenture will equip tens of thousands of its professionals with ChatGPT Enterprise to help in their consulting, operations, and delivery work. That partnership will help OpenAI scale its capabilities to enterprises. You can see Accenture shares up about 4% on this news.
How long are the consultants going to be needed to help with the AI? They're like, great, this is awesome. Paramount
Everywhere. Travel agency earlier.
Right. So the consultants get ChatGPT to help with their clients.
I guess my question would be, as
It'll-
a client, are you feeding my information back to ChatGPT to help bolster it? My hope would be no.
If all you're doing is just channeling your customers' needs into AI, Why do you need the middleman?
Right. Good question.
Paramount, CNBC parent company Comcast and Netflix gearing up to submit sweetened offers for Warner Brothers Discovery. Join us now, Matt Bellany, a Puck founding partner. I don't know what you know, Matt, or what the latest. I saw something over the weekend, a report that high-level administration officials supposedly said Netflix would be a problem. It'd be too much market concentration, and that I don't know. So did you see that report? Can you confirm it that the White House?
I did. Now, this is part of an ongoing back and forth that's been going on for the last couple weeks around Hollywood, where everyone is kind of lobbying these accusations that the other guy is not going to be able to pass regulatory scrutiny. There's arguments for all three of these suitors. I mean, obviously, Trump has had his issues with Comcast and the leadership there with MSNBC. Then there is the issue with Netflix and the market share that they have in streaming. Then there's potentially the problem overseas with the Paramount people. The Ellison family is so in bed with the Trump administration that this could cause problem with the state's attorneys general and overseas, where they're now looking skeptically. You have people like Elizabeth Warren openly calling out Paramount for some of the things that they have done. They just agreed to distribute a Rush Hour movie on behalf of the president because he asked them to. So there's problems potentially with all three of these suitors. It's just now become this behind-the-scenes whisper campaign to get the other guy kind of kneecapped, so the perception is that others will have a better chance.
That is a bit of a problem. You don't want to feel like an administration is rooting for one over another.
Potentially no, but it's been pretty open. I mean, Trump has pretty much said he thinks the Ellisons are good people. He likes them. He likes what they're doing with CBS and CBS News so far, installing Barry Weiss there and a conservative ombudsman. So the reality of the situation is not wrong. The Ellison family does seem to have the upper hand here with the administration. It doesn't mean that the others wouldn't win an eventual lawsuit if the DOJ chose to go after them. But obviously that would be a 2-year delay in any merger, and that's not what any of these companies want. They don't want to have to fight litigation. They want whatever deal they get here to be approved.
Yeah, we remember when things get bogged down and what's happened in the past. The deal cannot make any sense 2 years from when you want to do it, or make a lot less sense or something. Nobody, I'm sure, wants that. Does it all make $30 less likely? Or if I were David Zaslav, I'd be like, this isn't right. I ought to be able to look at the richest bid for my shareholders, not who the president wants to end up with the prize.
Well, this is such an unusual situation here. I mean, he doesn't even want a sale outright right now. I mean, Paramount is the only company that we know of that is interested in buying the whole company. Zaslav wants to move forward with this split, so he thinks that he can get more money for the studios and streaming side, and then have a separate spinoff for the cable networks. But if the price is right here, it's not. I mean, it's pretty interesting that the stock price of Warner Discovery is around $23, $24, which is about what the Ellisons and Paramount have offered for the company publicly. So the market seems to think that right now we're there. But if he can get it up a couple dollars, then I think this could be an opportunity for them to sell outright right now.
What about the others involved besides the ones we've mentioned? Is there still a possibility for I don't know, a dark horse to come in that maybe could do better with regulatory issues?
Yeah, there is. This is not a binding situation right now. They're asking for sweetened offers, but it doesn't mean someone can't come in over the top, or when this is all made public, say, oh, this is actually a bargain, we're going to come in there. None of those has emerged, and there are about 50 media reporters that are constantly trying to suss out if there's other interest. Nobody has been able to do that. There was rumors of Middle East money coming in. There were rumors of a couple of other deep-pocketed people eyeing this,
But so far, these are the three bidders, and we don't even know ultimately how serious someone like Netflix is. We think that they are kind of, but ultimately this could just be them trying to raise the price for the others.
Well, I don't know whether Netflix is overvalued or not, but that's the only currency that's worth anything right now. I mean, Comcast at $26, what's it down? 38% or something recently, and Disney, that's a disaster. When we were talking about Jimmy Kimmel, I think it was 112, 113. That's done nothing to, going all the way back to the 7 magical creatures that instead of dwarfs, Disney is a go woke, you go broke situation. I know you probably disagree with that, but nobody's currency is worth anything but Netflix.
Yeah, but the interesting thing about Warner Discovery is that Zaslav seems to be prioritizing cash here. He's asking for a lot of cash in this deal. Netflix obviously has huge stock value. They also have cash, but I think that the Comcast bid would likely have to come in with a partner. We don't know who that partner might be. Comcast could do it, but the thinking is they would likely have a backer or some kind of partner. This is not a cheap acquisition. I mean, if you're looking at the value anywhere from 60 to 70 billion plus debt, I mean, this is a pretty significant purchase, even for a company like Netflix. And, we'll see who ends up doing it.
Matt, just because of the whisper campaign that's taking place, because of the uncertainty on the regulatory front, does it make it far more likely that you're going to see shareholder lawsuits no matter what they decide?
That's a good question. There is a perception here that David Zaslav, the CEO, has a preferred bidder here. Most people believe he would like Comcast to get this company because he has a relationship there and he sees that as an opportunity to split the company first. If that's the case, maybe you might see some shareholders be upset if the Ellisons were sitting there wanting to buy the entire company for a price that would have taken out the shareholders at without any risk of splitting this company. Obviously, if they do that split, David Zaslav stays in the job longer, which many believe he wants to do. So we'll see what happens here. Ultimately, this is a board decision. Hopefully the board will be empowered to make that decision.
So, I wasn't saying it would be a stock deal, but the way that the fortunes of both Disney and Comcast, whether Comcast is because of broadband, I don't know what Disney's problem is unnecessary, but when the stock is acting like that, it makes it harder, you would think, to take on a big acquisition, even if it was going to be for cash. Comcast has a pretty clean balance sheet, though, still. They do.
Not? They're going ahead with the split of Versant, and they're doing that in a way that is not going to saddle Versant with a ton of debt. I mean, keep in mind, Disney, from all my reporting, Disney is not interested in Warner Brothers. And yes, they've had their stock issues, but we're not talking about Disney as a potential suitor.
But it's a reflection of just legacy media. I don't know who's the best. Who's in best shape right now. There's no legacy. It's like Netflix is I don't know if it stays like that. Is it always going to be that way? I finally saw a good show on Netflix after sifting through hours.
Well, Disney had a $500 million weekend at the box office.
Did you see Beast and Me, Beast in Me? Something like that? Claire Danes. It's actually quality. I was surprised because Netflix throws so much up against the wall. Their little sticks for me. But
that is true. And that's the thing with the regulatory issue is it depends how you define the market, because you could make the argument that even if you combined all of these legacy media companies, they still got to fight YouTube. They've still got to fight Amazon, and they've still got to fight Netflix. So, it'll depend how they define this market for whether any of these legacy suitors are able to combine with Warner Brothers, because, it would take the legacy studio business down from 5 to 4 potentially, and that could cause regulatory problems. But if you look at the big picture, the big scheme of things, legacy media is getting its lunch eaten by the digital players, and perhaps they do need to combine to ultimately compete there.
Okay. Yeah, all right. Zootopia. Zootopia 2. Did you see it already? And your
I
kids
actually have not seen it. My kid really does want to see it, but we did not make it. There were long lines this weekend. But
there were.
A 500+ million weekend is nothing to be upset about.
Oh, it's a 5-day
doing really
weekend.
well. And
That's what I
half
wanted
the
to
money
say.
came from China.
5-day weekend. Was it
Holiday weekend when everybody's working.
Yeah, exactly.
Yeah.
But that is big.
That's right, a lot of
It was more than that. It was like 562. It was insane.
And it's good for AMC and others, obviously, because sometimes it's lean pickings on any given weekend.
They have the 4 days too.
Wicked for Good was helping people. All right, thanks, Matt Tony.
Thank you.
Up next, we're going to hear about the importance of small businesses during the holiday season and the impact of tariffs that they might be facing. Right now, as we head to a break, take a look at the pre-market winners and losers in the S&P 500. Synopsys, with that deal just announced in the last half hour with NVIDIA, it's the best performer among the S&P 500. It's up now by just over 7%. DoorDash up by 3.8%. Stick around. Squawk Box will be right back. Welcome back, everybody. The Locavore variety store here in New York City prides itself on stocking its shelves with locally sourced goods. It's one of many small businesses that help form the heart of the city's economy. Joining us right now is Caroline Weaver. She's the founder of the Locavore Guide. That's a directory to the city's independent businesses. She's also the owner of the Locavore variety store. And Caroline, thank you for coming in today. Welcome.
Thank you for having me.
Let's talk about what locavore means. First of all, that's local carnivore. Basically, you're only consuming things that are made within 100 miles from where you are.
That's right. It's a term used to describe people who consume locally.
And what are you finding just in terms of this being a trend, of more people looking for something like this?
I think currently people are a lot more conscious of where the goods that they buy on an everyday basis come from. And so my shop stands to demonstrate that local doesn't just mean cottage industry goods. It means actually manufactured things.
And what type of things do you sell?
Oh, we sell everything from hand-blown glass to toothpaste and wiffle ball. We sell nail clippers, we sell screwdrivers. It's truly almost everything.
And where do you find these things? Where'd you come up with the idea to begin with?
I have only ever been a shopkeeper. I used to own a stationery shop, and as a New Yorker, we have so many wonderful things that are made in our own backyards that people just don't know about. And I grew tired of ordering things online to be shipped to my apartment from Brooklyn, and I thought, how wonderful would it be to have a place where you could find all of these things in one store?
I would guess that maybe the tariffs are helping with that too. Maybe things that are made locally used to be more expensive than things made overseas and shipped here, but now with the tariffs, maybe that offsets some of that differential?
A little bit, and I think that the consumer perspective is changing a little bit. People are seeking out locally made goods because they're aware of the tariff situation, but even for me, all of my things are local, but almost none of those things are made entirely of American parts. And so for example, a lot of it is packaging. So much of the packaging that my vendors use does not come from America.
So what have you found with your vendors? Are they able, it's not just packaging, I would assume it's a lot of the other things that go into their goods too that they have to buy from overseas.
Yeah, and a lot of them are very smart and they stockpiled when they had the chance. And so I don't think we're seeing the full effects of those price increases quite yet. They were all preparing for a Christmas season, for relatively normal Christmas season. And so I don't know that we've seen the effects of that quite yet. My prices, if they have increased about 10 to 15%, but I'm not as immune to it as people assume I am.
How have, I mean, just to begin with, made locally, I would assume it costs more money than buying something from overseas traditionally?
It very often does. The cost of shipping things overseas, even without tariffs, sometimes makes it easier to manufacture locally, but I think there are a lot of misconceptions that local necessarily means more expensive. A lot of the brands that I sell, or all of them actually, are independently owned. They are also small businesses, and they're not padding their margins the same way that big businesses do because they don't have shareholders to pay. They don't have enormous marketing expenses, so it's just priced differently.
What do you, oh, go ahead.
Did you watch the election closely?
I did, yeah.
And?
The election here in New York City?
Yes.
And what, do you want to know who I voted for?
No, you don't need to tell me that, but things could change a little. You know, I'm torn. We had 8 years of de Blasio, and nothing really happened. I don't know about Eric Adams, but I would not want to be I wouldn't be as bullish as being a local sorcerer in New York City with a communist or a social.
I feel differently. I think affordability and safety in New York City has so much to do with what is in our storefronts.
But the solutions to those two issues are solutions that have never worked in the history of the world.
Well, clearly whatever's happening right now also isn't working. So as a small business owner, I'm open to something new.
Well, capitalism isn't working. You think socialism might be something to try out?
I think something has to change, and it's a really, really challenging climate for independent retail and for small business owners right now, and I think a lot of us are fed up with the way that things have been working, and we are open to something new.
What are the biggest problems that you face as a small business owner?
We kind of are marginalized because we exist on the fringes of a lot of these capitalist systems, and with the tariff thing, a lot of what's happening for small businesses is that they're not able to get the goods that they need because manufacturers who are already stretched when it comes to the supply chain are prioritizing larger manufacturers. And so for small business, especially at Christmas time, during a time of economic volatility, if we can't get the inventory that we need to sell, to pay our rent, to pay our employees a living wage, to pay our health insurance expenses, we can't exist.
How was Small Business Saturday? at your store or some of the others that you see around?
In my store, it was great. We had a really busy weekend. I think Small Business Saturday should be either the weekend before or the weekend after because a lot of people are in town. But what we're seeing and what a lot of my other colleagues are seeing is that people are starting to shop earlier this year. We saw it start a full month earlier than what we're used to because I think consumers are a little bit anxious about supply, they're a little bit anxious about pricing, and they're trying to be strategic about their shopping.
Caroline, thank you.
Thank you for having me.
All right, up next, Wall Street ready to kick off the final month of the year. Futures this morning, as you can see, have been in the red. Mohamed El-Arian is going to join us on the markets and the Fed, the possible new Fed pick for Fed chief if the president does that before Christmas, which we've heard he might do from Scott Bessent. We'll see.
Welcome back, everybody. Joining us right now is Mohamed El-Arian from the University of Pennsylvania's Wharton School of Business. He's also Chief Economic Advisor at Allianz. And Mohamed, welcome. There have been some interesting trends in the market lately. What have you made of all these AI trends that looked so concerning 2 weeks ago and then looked pretty good last week?
I actually have been encouraged because I think that AI trade has become more differentiated. People have understood that vertical integration matters. They've understood that multiple sources of revenues matter. So we're starting to see AI being much more fundamentally driven than hype driven.
Explain that. I don't get that because it seems like every time there's a deal, both companies tend to go up. Whatever two companies are there. How are we differentiating between what works and what doesn't?
So let's start with Gemini. I think Gemini 3 was a significant change in the landscape. I think it made people realize that if you are going to be a winner in this arms race, because it is an arms race, you have to have certain attributes that not all the companies have. So you started seeing Google outperform other companies. Now you're starting to see much more consideration of how you're funding yourself. Are you funding yourself mainly from revenue, or are you funding yourself from circular financing? That's all good because you didn't want the bubble phase to get carried away too much, because otherwise there would have been a lot more damage than there would be otherwise.
The idea of data centers being pretty fully booked at this point. I heard one person describing this as saying, we're not in the same situation we were back with Lucent or Cisco or some of those companies back in the early days of the last big tech bubble, because these data centers are still fully booked. So you're not building out empty demand at this point.
Correct, and there's a perception that maybe even a waiting list, if you like, for use of these data centers. I think it's so good we're having them now, because if we didn't have that on the demand side, if we didn't have AI-related activities drive GDP, we'd be talking about stall speed, because the rest of the economy is having a harder time. So we have this transition.
That's because those resources have been all devoted to AI, and they would be resources that could be deployed somewhere else if it weren't for that?
No, I think it's because AI has proven to be such a powerful driver. And on the other side, we're dealing with legacy. We've talked a lot about affordability. The consumer somehow keeps on going, but there's concern. There's concern about the labor market decoupling from GDP, so there's concern about the labor market on there. But if it weren't for AI related, we would be talking about stall speed. So it's a really good thing. And remember, this is just a demand transition to the productivity impact of AI.
You think about some of the stocks, though, that have been front and center for this, those companies like a Microsoft, so many of these companies that for a very long time, Oracle and others, that were able to bring in a lot of profitability because they did not have a lot of CapEx that they were spending. You know, these were very asset-light companies. That's not the case with this. Do you think the profitability will follow the money that's being spent here?
I do, but a lot will depend on adoption. So what do we always talk about? We're fascinated by those who are working on AI, the builders, the exciting new foundational models. What we don't talk enough, Becky, about those working with AI. And that's going to be critical because adoption is going to be important. If you step back, we do need an adoption policy. We don't have that right now. And that's why we risk falling behind China.
Accenture, I think, is number 3 on the S&P 500 list of gainers this morning. It's up pretty sharply after announcing a deal with OpenAI that it's going to be using its ChatGPT with its clients, with kind of putting that out there so that they can get using them and seeing that as an enterprise book. Yeah, it's up by about 2.8% right now. That's all fine and well, but when does the disintermediation show up in terms of, as Joe pointed out, do you need a consultant to put you in touch with ChatGPT, or are these just going to be tools that make them more efficient at their work?
You will need, I mean, Accenture is a perfect example of a company that has understood. So it talks about reinventors, it's reinventing itself. It talks about it having to upscale its own labor force so that it could help others. And I think Julie Sweet, the CEO, is leading in a very visionary manner. If you talk to others, you find a wide dispersion. There are those who are ready to adopt. There are those who say, our databases don't speak to each other. We can't even go anywhere near that. So you're going to need help with a lot of the distribution when it comes to adoption. And I think Accenture has taken the lead on this, but it has understood that the first step is to reinvent yourself, and that's exactly what they've done.
So what are you watching outside of this AI trade? Obviously, that's leading the market, has been for a while, but there's a lot of other things that are happening, Federal Reserve and beyond.
Yeah, I think what you heard Loretta say this morning on your show is really important, is that we need to pay more attention to the supply side. We are captivated right now, understandably, by 2 things. Will they cut this month or not? And who will be the next Fed chair? As important is how will this Fed be reformed? This Fed went to sleep. And I think that what you heard Loretta say, and this is important because it comes from someone who's been inside the Fed, yes, we made mistakes. Yes, we have to talk about our forecasting. We have to think about scenario analyses, not point estimates. We have got to be better at the supply side, and most importantly, the compliance culture has to improve. So there's a lot of things that we have to focus on the Fed because it's so central to our economic well-being.
And that will play out over what, the next year? Or you think this is a much longer term?
So I think what the Secretary said on your show last week was perfect, is we don't need a play-by-play Fed. We need the Fed to cool it. We need the Fed to step back and take a bigger sort of visionary view. And we need reforms. We desperately need reforms. And I think all 5 on the short list are committed to reforming that institution, which is critical not just for the US, but for the global economy.
Is there a point where the market gets uncomfortable with reform, or the market, you think, is clamoring for it at this point?
I think the market right now is focused, honestly, on will they cut in December and who's going to be the Fed chair. There will come a time when when they'll go from tactical to strategic, and these things will matter. It is almost absurd that in the last month, the probability of a December cut has gone from 90% to 30%.
Send it back up to 86 or 87.
90.
Is it 90 this morning? Yeah.
It's crazy. I mean, this should not happen. The whole point of forward guidance is predictability and stability. So there is something wrong that has to be addressed. The rest of the world looks at this and say, wait a minute, the Fed is at the core of the system, and there's so much volatility in what they expect they're going to do in a few weeks. What's going on here?
How do we get away I'm still thinking about this last interview, and if 51% of people under 30 think socialism is a preferable alternative to capitalism, how does that work itself out as time goes by? Does it? You saw what happened in New York, and obviously there's issues that we're well aware of. It's just the solutions that we know have some serious adverse consequences, at least historically, from what we've seen, if we head down that road.
So one of the things I've been doing, although I wasn't allowed to do it on Thursday at Thanksgiving, is ask people, who did you vote for and why? And what you hear from the young people over and over again is what you heard in the previous interview, is somehow the system doesn't work. So if you ask the question, why does the system doesn't work, is because we didn't pay enough attention to not just what is necessary, which is market-based capitalism, but what's necessary and sufficient, which is also to recognize that there are market failures, there are institutional failures, that
usually tied to government intervention.
There are institutional failures, that's government failure. But there are also market failures. There's also market failures.
If there weren't failures, there can't be any winners, right?
I think there can be winners. What happens to the failures is that if you don't address the failures, the people who are left out come back and undermine the whole system. The UK is a perfect example. It makes no sense for the UK to exit the European Union, your biggest trading partner, and yet all you needed to say to people is regain control. This notion of somehow you've been left behind and you can regain control. So Joe, it is about addressing...
What kind of market failures are you talking about?
So we have monopoly power that has to be addressed, and that is something the administration's focused on. We've got to also look at how to make sure that the productivity promise that's ahead of us is something that is offered by many. So there's infrastructure issues.
Well, so your contention is that the market failure of capitalism is that we aren't addressing monopoly issues effectively
My contention is that unless you address institutional failure, which include government failure and market failures.
Well, what type of market failures are you talking about? What are you referring to?
Where competition is not fair. That's simple. Where
That happens a lot, you think?
I think it happens quite a bit.
I mean, look at the way our economy is performed versus the rest of the world. You don't see a vibrant, strong...
The rest of the world is a mess. I mean, if you look at Europe, okay, you promise Europe an 80-20. 80 is going to be good, 20 is going to be bad. Here, people focus on the 80 and want to unleash the 80. There, all they care about is the 20 and they regulate away the 80. So I don't want, comparing us with the rest of the world is really, it's like comparing the Jets.
Well, you look at technology, you look at AI, you look at any of the things that, you look at even healthcare, any of the things, it's expensive, but innovation and everything else,
But it comes back to affordability, and that becomes if they feel like the system's failing them when they can't buy a house, when they can't buy a car, when they can't.
The 21.5% total inflation from the Biden administration's 4 years is why we have an affordability.
Correct. And the key to affordability is going to be income. Remember, affordability is the price level, and people somehow think the price level is going to come down. It's not. It's going to come down.
Wages got to go up.
And then it's income. Income's got to go up.
Right.
And I think that is...
It is again, at least, and real wages are going up.
Mohammed, thank you.
Thanks for having me.
Squawk Box will be right back.
Our next guest says Alphabet could be the top Magnificent Seven stock that you should own in the coming year. Joining us now, Gene Munster, Deepwater Asset Management Managing Partner. Tell us why, Gene.
Joe, it comes down to carving out a niche within everything on generative AI, and they've done an awesome job of it. If you look at the growth rate of search, 2 quarters ago it was 9.8%, then it went to 11%. In the recent September quarter, it was 14.5%. The street was looking for like 11, 12%, so nice upside there. But what my expectation that this is going to be the top performer in 2026 is based on a belief that the growth rate for search, which the street right now is at 11.5% for next year, I think it's going to be closer to 15%, much higher. And the reason is that they're essentially harnessing, they're figuring out how to carve out how to harness this 2.5 billion daily search users and direct them into using generative AI, which is falling out into more search revenue. And specifically, they have this new mode, AI mode. It came out essentially 6 months ago, but they've been now testing ads within AI mode. It's like a carousel at the bottom of the generative result. And as they start to ramp that up in 2026, that should add to growth. And so when you put it all together, Joe, I think that the search is a critical number, and I think they're going to show some measurable upside in calendar 26.
How do you characterize the last 6 weeks or so just in the artificial intelligence sector, Gene?
Well, as somebody who's optimistic, who believes we're still in the second inning, I think the last 6 weeks has been a healthy test in terms of investors asking hard questions. I think the biggest tell for me, or the biggest concern for me, is related to how NVIDIA shares. It's a stock that we own. But the guidance that Jensen gave at their recent quarter a couple weeks ago was over the top good. It was higher than the high expectations. And the stock just doesn't want to go up. And I think, as I characterize the last 6 weeks, it's a tale of two cities. The fundamentals, evidenced by the growth rate essentially next year for NVIDIA, going to be around 60% plus. The street's at just below 50%. Like that's a stark increase from 30% 3 months ago. So we're almost doubling the growth rate, and the stock isn't moving. And the tale of the two city piece is investors just are increasingly not wanting to hear it. And so this period that we're in right now of positive commentary, the NVIDIA Synopsys news, I think is a sign that software still has a pulse in the AI world. If you look at AWS tomorrow, the head of AWS is going to be doing a keynote at their Invent conference. I'm sure he's going to be saying a lot of positive things, but the issue, I think, at the core of the last 6 weeks has been this disconnect between the fundamentals and how investors, and I just to pull it together, Joe, is I think ultimately is that the fundamentals are going to win, is that if in fact we are as early as I believe, yes, there'll be pockets where investors don't want to give credit to these companies, but eventually those stocks will be rewarded.
Okay, Gene, we appreciate it. Thank you. We'll see.
Thank you.
All right, up next, the stories that we're breaking on Squawk Box this morning, including a big new deal for NVIDIA, Gene was just talking about, and new problems for Airbus. We'll be right back.
Happening on Squawk Box this morning, NVIDIA has a new partnership with Synopsys, a chip design and engineering company. That partnership includes a $2 billion investment by NVIDIA in Synopsys. Shares of Synopsys up 7% on this news this morning. In fact, it's the best performer on the S&P 500. NVIDIA CEO Jensen Huang and the head of Synopsys are due to be on Squawk on the Street coming up in just a little bit.
He isn't.
He is, yes.
Totally.
Shares of Airbus off the lows of the morning after the company confirmed that it has identified a problem with some A320 fuselage panels. This comes after a software problem last week that Airbus now says is largely fixed. And Goldman Sachs putting Win on the conviction buy list with a price target of $145 a share. The analysts there seeing an expansion into the UAE as a driver. The stock is in the 131 range this morning. It's up by about 2%.
Conviction is just a bad word to use in reference to
yes.
companies. Goldman, I've been saying that for years. Yeah. Especially, in recent history.
Yeah, it just means you have a conviction, not that you are a convict.
Anyway. Susceptible to a conviction.
All right, we are watching stocks under some pressure this morning. They're going to pick that up and Squawk on the Street. We'll see you right back here tomorrow. Bye.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. Faber has the morning off. We are kicking off the month of December with some risk off after Friday's everything rally. Got some NVIDIA AI news, a read on Black Friday weekend holiday sales, Bitcoin back below 85K, 10-year 407. Our roadmap begins with positioning into the final month of trading for the year. We'll talk about if the Santa Claus rally is in the cards. Another AI deal, NVIDIA taking a $2 billion stake in chip design software provider Synopsys. We have an exclusive with Jensen Huang and the CEO of Synopsys. And the president says he's made his choice on who he wants to lead the Federal Reserve after Jay Powell. Let's begin with the markets, though, kicking off December after a volatile November for stocks. NASDAQ snaps a 7-month win streak in the wake of AI valuation jitters. Meantime, S&P 7 consecutive monthly gains. Same goes for the Dow. That's the longest such streak since 2018. And we've had a few of those streaks, Jim, since 2009. Most of them end after 7 months.
Right. Well, look, I think obviously people feel that last week was a bit of an aberration, that we were looking ugly, and somehow pulled the... Look, did we pull something out of the fire? I don't know. It's very hard to move stocks. I mean, the move Friday may have seemed not real, and I've seen that happen a lot of times. People say it's not real. I question whether this went down. Is that real? I mean, we have Bitcoin being the leader in our market. Well, I don't know. We put up the company strategy. We put up the price constantly. That's the Achilles heel of that market.
It's got news today, which we'll get to.
Yes. And look, and it's also easy to say that yen carry trade. Now, a lot of people, I saw our friend Will Frost chatting about that on X, and I come back and I say, look, I'm not saying either one is important. I will say this. I think that the president's announcement that he has picked the Fed chief makes you realize that the December meeting is not important. It doesn't matter. Raise, not raise, not cut, cut. It doesn't matter.
Right.
And I say raise only because, geez, you look at Atlanta. Some people feel that, we're running hot.
Yeah,
4%
Fed,
GDP.
4%.
And if you didn't have a Fed chief that is on the way out, so to speak, I mean, someone might just say, you know what, we've done too much. So I think that there's a lot of things on the line, but the one thing it's not is the Fed, and the Fed's the most important thing I'm worried about.
We're going to get, as far as December catalysts go, Fed chair maybe, SCOTUS on tariffs,
yes.
Broadcom, Marvell, Oracle earnings.
Right.
Those are that's the things we have left to look forward to.
And Marvell's coming up, and Marvell, by the way, just remember they have a very close relationship with Amazon, and Amazon is perceived to be one of these companies. Who knows what they're going to do? Who are they going to partner with? Our interview with Jensen Huang is going to maybe put things in perspective. That the idea that if Marvell is partnering with Amazon, and we know that maybe Meta is partnering with Alphabet to be able to license a Google chip that's made by Broadcom, then we know that it's just become internecine. And what we really need to figure out is, are we looking at the right spot? I think that today's interview, which is going to be a seminal interview but doesn't seem like it, is about the other kinds of AI. And are we just constrained by business to consumer chatbot AI, and all we care about is Gemini 3, game set match, winner take all, overspend. Whereas the spend should be, think about it, to maybe spread over $40 trillion worth, and we're just seeing one part.
Goldman did have a nice stat over the weekend, Jim. They're not concerned about sort of the hyperscaler access to financing. They think core hyperscalers could add $700 billion of financing before their net debt is more than 1 times 26 EBITDA.
Look, it's Oracle and it's OpenAI. These other guys, they can finance away. I think the question, which was addressed somewhat on the NVIDIA conference call, is the rate, what kind of internal rate of return they're looking at. Right now, what we think is you spend $1, you get nothing. I think Jensen would argue you spend $1, you get $4. That's always what he said. Now, right now is one of those moments where we're questioning absolutely everything to the detriment of NVIDIA.
But rightfully so, for the markets.
Well, the markets are not wrong about what they focus on. It could turn out to be incorrect, but when I speak to NVIDIA for background, I say, guys, listen, the market wants this. And I always, as soon as I say that, I realize I'm playing the horse race, and they're playing to win, place, and show. I'm just looking at who is finishing in this race, and they're thinking about Secretariat.
Right.
And so I'm small.
You think we'll ask them about their communication strategy, which I know have found puzzling in the last week?
I think we have to, because I'm writing it down because yes. Because what I feel is that the narrative is completely hijacked by a couple of companies, perhaps leaking things to different media organizations, and you say to yourself, oh, I see what happened. I'm on Gemini 3. Look, I'm on Gemini 3. I don't even know the other guys anymore. And the one that I don't use anymore at all, I don't use anything. I don't use that Chat GPT because I've had it with Chat GPT.
You've had it with Chat GPT.
I don't think I'm alone. There's 800 million people, and the moment that who are on it, and most of them I'm sure love it, but the moment it only goes to 850 million, and we see 300 million people leap in Gemini, which I think is probably going to have,
right.
And people are going to say, wait a second, well, this is the company that's deeply linked to NVIDIA, and this is the company that's Oracle, and this is the Achilles heel, and I don't know how we deal with it, and that's like the next shoe. The next shoe is Gemini 3 picking up hundreds of millions. We're going to read that. And to ChatGPT just add erotica because they couldn't get to a billion. Look, you can write this. You can write these headlines. I write these headlines. That's what I do.
Yes, you do.
I wrote that headline on the way home from the Eagles game. I said, oh, here's a good. I'll just write this. And we have to watch it because we don't want to mislead people. It's entirely possible that the announcement today that they're making should be on people's minds. I know when it came over, my first reaction was like, that's it?
You mean 2 billion?
2 billion?
You're like
synopsis?
peanuts?
Synopsis, and is it exclusive? No, it's not. Will Cadence be involved? Yes, they will. Did it matter? Sassine, the CEO we met, was someone whom I've interviewed at the behest of GTC. I'd say behest because I interview who I want to interview. But I do come back and say, wait a second, before we just poo-poo this and say, why aren't they answering the TPU license to Meta that is rumored? I think they would say, well, no, because Jim, that's business to consumer. You've forgotten about business to business, and they would be right.
Well, they did say worth elated at Google's success. That was part of their messaging last week.
The one thing I would say is NVIDIA, well, Jensen's, as he always says, a lover, not a fighter. There is nothing about this man that is below. Everything is above. Right. No trash talk going backward.
Yeah. The other thing, Jim, we'll get to, this is more about the structure of the build-out. You weren't here for Friday, but we had a 10-hour outage of a data center with the CME unable to trade options and futures and Forex and bonds and equities. A lot written over the weekend about what a warning that is.
Yeah, there's also, a recognition that perhaps the backup system is not compatible with the current system. And that would be something that would cause just a wholesale redo of every backup. Maybe every backup's wrong. We don't know. Maybe the cooling system isn't right at the backup. One of the things that we know is that the actual is all brand new. So, and now I don't know what Cyrus won. Look, I don't want to speak out of school. That's why I'm trying to be a little I'm not trying to be too squishy, but the fact is that there's a lot of explaining to do. But is there a problem throughout the system? I mean, let's say you had Michael Entrader here from CoreWeave, okay? And one of the reasons why CoreWeave is absolutely important is because they're the reason why you don't see this all the time. I mean, Entrader's success has been because they know this world. I met Entrader through Jensen Wong. He said, look, those are the guys you use if you want to be sure nothing goes wrong. So they do matter.
Yeah. The other thing we'll get to sort of involves the impact of the increase in the price of memory, right?
Yes.
Impacted HPQ's earnings last week. Micron today investing another $9 billion in Japan.
Well, it's about time. I mean, one of the things that everybody felt that this was something that, it's just commodity. I mean, look, last year at this time, I was dealing with Sanjay Mehrotra, and I was saying, look, your high bandwidth memory is going to be huge. And he, because of who he is, he said, Jim, please don't go there. Please don't do that. I said, Jens, Sanjay, I got to do it because what I'm seeing is you need high bandwidth memory to go with what Jensen's doing, and it's going to be yours. And he just is so not hype. But I also now realize that perhaps people just didn't think it mattered, that people thought that DRAM, that storage, Western Digital, look at these stocks.
Is it the best S&P of the year?
Who wanted to invest in NAND? I mean, that's like investing in Kodak. I mean, honestly, like, oh my God, there's Seagate again? I was like going back and realizing, it's like, oh my God, this has been, I was thinking about Shugart, the guy who built these companies. I've got Western Digital. I had a 5% stake in Western Digital in 1999. I wouldn't be sitting here. I'd be king. No, but that was the last time that you thought about WDC. Yeah. And then now, so this is an underinvested area, which therefore means there's underinvestment in semiconductor capital equipment, which therefore means that you want to buy.
You've been all over these.
Right. You want to buy Novellus, but Lam Research. But when you suggested people should buy Lam Research, Novellus is the forerunner and did a lot of this stuff. Lam Research, people say, well, wait a second.
Hey, Jim. I am the real Jim. For I am Washboardjim, the founder and strategist of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. I'm here. I'm here. It's snowing outside. I always loved the first day of snow. Then after about 3 months of it, I get so sick of it. You know what I mean? I mean, that came down within 10 minutes. Ooh. What's Pal doing this week? Monday? What the heck? You know, he does a horrible job at it. He's just horrible. Initial reaction to manufacturing PMI at 9:45. Well, it's Christmas. I'm going to say, it's hard to say, down then up. Up and down. We got 3 that say up and down. How dare you? Who are those 3? You're fired. All 3 of you. Initial reaction to the ISM manufacturing PMI prices at 10 a.m. Down then up. Then I'll be the only one, I bet. And the same 3 did up and down. How dare you? Where you got to leave to? What the heck? Randy? What the hell? I voted. I'd like to see 67584 today. Today's Cyber Monday. Sales were up 9% compared to last year on Black Friday or something like that. And Black Friday used to be pretty hectic in the retail sector, but people now are accustomed more or less to buying online. I'm even doing it more. I mean, it is kind of, it's a small little weight. You don't really know what you're getting until you get it. But if you do your research, it's like I'm going to be looking up some Hanes socks that I bought that I really like. What is it? We got 17 minutes. I don't know how to spell Hanes. H-A-I-N. Is it Z-E or S-E? What's a fudge? H-A-I-N-S socks. There they are right here. I think it's More or less them right here. They're $19 for 6-pack. Jeez. Women's. Now these right here. I don't think that's the ones I want, but they'll work. There they are. 12-pack. $27? God. Walmart's got them for under around 17, 18. You get 12 of them. Probably just get them at Walmart. This is the radio I got. I like it. It's what I got next to my bed. Okay. We got our first day of snow. Thumpity thump thump thumpity thump thump, look at Frosty go. Thumpity thump thump thumpity thump thump, over the hills and snow. Over the hills and snow. Frosty the snowman was a jolly, jolly soul, with a corncob pipe and a corncob pipe and a button nose. Frosty the snowman was a fairy tale, you say. He was made of snow, but the children know how it came to life one day. Thumpity thump thump thumpity thump, look at Frosty go. Thumpity thump thump thumpity thump thump, over the hills and snow. Over the hills and snow. Whoa. That's one I gotta work on. Well, thank you, Jim. You need to work on that one. Who's impressed? Woo! Spy 680 calls. Oh. Really? Jim Cramer, I love your little bald head, but I gotta let you go. It's time for cleavage. That you don't have. Well, we've got a 1, 2, 3 coming up. If we don't hold that, 6, 7, 8, 15, I bet you we see 6, 7, 5, 8, 4. Maybe. That's what I have for Friday's watch list. And we could see a pivot point channel right in here. Somewhere in there. I was telling somebody this weekend that patience has really paid off for me here in the last month or two. Just being a little bit more patient. Because I feel like, you know, I got to get it. I got to always be in something. I can get away with that, but a lot of people can't. And then I get stuck. That's on the 5-minute. One minute we got a 1, 2, 3 and symmetrical flag. Yeah, 6, 7, 8, 15. Somewhere in here. Trade exchange funds, equity futures, UK to agreed drug pricing deal with United States. I gotta move my pen. That's a problem. Thing about putting my curve monitor back on here. So we got Friday's orb on the on the SPX at 68.3307. And we could pull back to the triple top. How many more minutes we got here? We got 3 minutes. I'm going to go get my coffee. I got some more stonk or whatever you want to call it. Baba, watch over 600. IWM 1, 2, 3. So we're going to look at the triple top on the SPX and see if we hold that this morning. The 63 EMA had opened, not the 200. Do you understand? I had some dingbat cutting me down this weekend about my moving averages, and I felt like slapping them. Algorithms run the market, he says. Yeah, like how in the hell do you know that? Show me an indicator where you can find support then, bitch. Oh, God.
A very wild and chaotic...
Not right it open. Here we go. Here we go. Wow. It opened down big time. Dang. Big drop on SPX. Today's the 1st. Let's get Christmas started to a yin yang. Okay, we got calls, the 680s and the 681s. 681s aren't as popular as the 680s. And if we can get the 680s down to 120, I'll get them. Now we're coming down for a double bottom on the SPX. Prepare ye in the name of the Lord. The 6835s, the 6830s, or the 6850s right at open. Right at $3. And we just hit resistance level, which was my support. Now becomes resistance. Okay. I think we're going to move to the 680s on the calls. Prepare ye in the name of the Lord. $680s at 119, 120. Strike. 680s at 1.20. Thumpity thump thump thumpity thump thump. Dashing through the snow, one horse open sleigh. Over the fields we go, laughing all the way. We're at 146. Going up to resistance. Make a business decision. Make a business decision. Yes. How's he do it? Oh. I love this girl here. I used to follow her when she worked on cruise ships. I'm not too hip on her makeup, but her eyes, in a way, a little bit too much. Someone needs to teach her a little bit about that. How dare you? Don't ever talk about a woman's makeup. Could find, especially if you want to go out with her. A plus intro. Look at that. They're now at $1.55. 156. Oh, yeah. I don't know how he does it, but he got his first trade off pretty good right there. Now he's looking at the SPX. He wanted to take it first. And now we're coming to a double top. So if we break the double top, uh-oh. I might have got my thing wrong because we pulled back first. There's the double top. Uh-oh. I don't know how he does it, but I might have to move these up. But they got 12,000 contracts on them. If we pull back, I'll probably move them up. And if we break out, it's hard to say. I mean, you got a little bit of support right here. See, I see things that other people don't see. Wall Street awaits economic data to start December as U.S. equity futures slip pre-bell. Wall Street awaits. We don't give a crap about the data. Because we don't know if it's correct or not. Oracle's pulled back. There's 380. We're at the 9 on the /ES. Now it'd be nice to see a little pullback here for an entry. PATIENCE. If we break the 9, uh-oh. Uh-oh. Look at the SPY. God darn, man. SPY's at 179. Okay, here we go. Get ready. Are we ready? Are we ready? Let me know if you're ready. $3.20. 310. Here we go. Get ready. Get ready. We're about there. I'm going for it. $2.75. 280. There it is. I don't know how he does it. It's remarkable. Jim, my grandma called me up last night and she told me that she's pregnant. She is. Let's hold this here. We're at 270, 265. We got an inverted dragonfly hammer. I have one contract here. I might buy two more. Oh boy. Double bottom. Come a chameleon. Come and go. Come and go. Come a chameleon. 2.25. I have one at 280 and two at 225. Doo, 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 doo. Average of 244, rounded up. We're at the 200 on the slash ES. What's the SPY at? SPY's pulled back to 120 again. Now we got a double bottom. Come on now, hold. The wick is the lowest support. I can't believe I got that exact. I'm going to go get my coffee and come back, and this thing better be up. I have an average of 244. We're at 220 right now. We kind of got us a small little megaphone going on here, baby. Come on. Open, it's a pretty open mouth megaphone. Wall Street awaits economic data. I reread that. /ES is at the VWAP and just broke. Oracle. Oh yeah, I got a couple I want to look at. There's 260. I don't know how he does it, but he did it. 275. I'm up $90. Got a Head and Shoulders. Let's see if we can get to the top of the megaphone, as long as we stay above the 9. I don't want to leave right now because I might just get up there and see. We got a double bottom with a lower low, but not by much, which forms a megaphone. I mean, it's not, like I said, not by much. There's $3. Now. We just hit the 21. So if you're in this trade, make a business decision. Boom, right now. Do you understand? Someone say yes. Because 320. Now this could go higher. But we're at the top of the megaphone, so what do I do when I'm at the top of the megaphone? I scale out 2 and hold 1. And I should go ahead and sell this other one right now. 350. I don't know how he does it, but the guy is a genius. 3.90. He's a genius. What'd you think about that, Deb, on YouTube? Do you understand what I called here? Someone say yes. The SPY calls went from 120 to 180. Jimmy called them out too. Now we're at the top of the megaphone. Can anybody count to 3? 1 2 bits, and 3. He's a genius. Thank you very much. Won them. We reversed on what? An inverted hammer and a sledgehammer. See the wicks at the top? That's a bearish sign. See where we had the wick at the top and we pulled back? Wicks at the bottom, and then we created that double bottom, boom. Now what are these? 3 white soldiers. What's that tell you? That we could have another breakout to 6828.93. So I'm going to buy the dip. And we come up to number 4. This is the sweet spot. If we don't break here, then we could be coming back down to the bottom of the megaphone. We got a new song, Aringa. We're at 190. So we broke out. Now, if this body of this candle stays above the resistance line, we jump up here to 68.27. Do you understand? This body has to stay above this trend line. We got the 9 crossing over the 21 with 3 white soldiers. Spy calls. Uh-oh. No, I didn't hear. I didn't even know your mic was on. $4.40. What'd Jimmy say? 68.27. We're going to hit the 63. So these 3 white soldiers is what? What's that tell you? Can anybody tell me what I said? It says we could break out, right? Is that what I said? No coughing allowed. Jim, what do I do? Do I sell my calls that you called out at 240, 280, and 225? I would scale out and leave one on the table, but I think we could pull back. And so I'm going to walk through this trade. I think it's very important that we discuss what just happened. There's a 63 EMA. You get real good when you start to predict the next move. And I think what I need to do is go get some coffee. Oh my God. The calls are at $2.49 on the SPY. A 1, a 2, a 1, 2, 3, 4. Hello, retail traders. I'm Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And I called out this beautiful trade this morning that I just felt obligated to share it with the community. So let's get at it. We're going to mute this thing because that damn ringing's going to ring my bell. So this is the call. Now when I'm trading the SPX, I use the 1 minute and I put next to it the /ES for a confirmation. So I'm sitting here and we had a little pullback right at open. We came out, we broke out, we broke above the previous resistance of 68.12.2. And I did this with the SPY also. I traded the SPY first thing. And then after I traded the SPY, I came back and I started watching the SPX. The SPY, we broke out, broke the VWAP, and came back and bounced off the VWAP to a double bottom off the 200 SMA. Jumped in the trade and sold some at a double top and sold some others a little bit later. Now we've run all the way up from when I got in at 120 to 248. And we just hit my other resistance. So we're going to be talking about the SPX on this trade that I called out. It's important to know to try to predict the future when you're trading these stocks. So as we came up, we started the top trend line. Then we came back down and we started the bottom trend line. Now I'm using the bodies of the candles on the 1 minute. It's important you know that. And I identified a megaphone pattern. So I became bullish in the trade. We had a tweezer bottom on this second dip. We had a tweezer bottom on the first dip. Then we run into 3 white soldiers. What's that tell you? We hit the 1, 2, 3. So that's a resistance level. But 3 white soldiers is an indicator that we might be bullish in the trade and that we could consolidate and then have a breakout past that 3 white soldiers. Now, 3 white soldiers, again, is an indicator that we could have a bullish run. So we pulled back, and then we went ahead and we broke out. And then I told the room next thing, I said, if we keep the body, this candle, and keep the body up the previous resistance of the triple top, that we would become bullish and break out to the 63, and then we end up hitting the 200 EMA. So again, I created a megaphone with a double bottom, lower low, not by much, but it is a megaphone. We came up to a triple top. 3 white soldiers telling me that we could have a breakout, but we have to consolidate in most cases. Sometimes you have a parabolic run that just keeps going, but we did pull back, and then we broke out. So now we broke out of the triple top. The next candle you're waiting for, if you want to jump in the trade, as long as we stay above that previous resistance, it becomes bullish, and you can run it up into your other moving averages, which is the 63 EMA, 50 SMA, and the 200 EMA for an exit idea. Now, if this thing decides to pull back, it's going to pull back to that previous resistance line right there on top of that megaphone. And if we break the 200, it can easily hit the 200 SMA. So, and I'm using the VWAP on the /ES, and we did bounce off the 200 on the VWAP, and we held support here on this here trend. So that is just an idea. The sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. Thank you very much. Zippity-doo-dah, zippity-day. I failed to mention that 9 crossing over the 21. Now he pulled back to the 21. Jimmy said we'd pull back to the previous resistance. Then stocks break out. They have a tendency of always pulling back to the previous support, previous resistance. He's a genius. I'm going to go get my stonk. We have an info commercial today. Don't hear that kind of information from other boards. Very true. You're welcome, Aringa. So we held the like Jimmy said, we'd pull back. Now we're holding up against the 21 EMA. And we'll come up to a triple top and probably hit the 200 here if we break the 63. So it's squeezing between the 21 and the 9. So something should happen real fast here. And I'm going to get my coffee. Then I'm going to do the info commercial. And then we're going to look at cleavage. George, you don't have cleavage.
Seeing a little bit of retracement, at least in the broad market, the S&P. So far, to start this day off, as maybe institutions are back in play and positioning. But nonetheless, I think some of the benchmark levels.
Oh, I bet your voice was on.
Is looking at the.
Oh man, I bet you I have to redo
November.
this
It's important because
video.
that's the day after NVIDIA's report, where we saw sort of a short-term bull trap, early push to the upside, and then a sell-off near the end of the day. That level around 67.70 on the S&P corresponds to levels going back to October 10th. So these are 2 points in time that I'm looking at as a benchmark of support or resistance.
I bet you I do.
That again corresponded to
Maybe not.
The most recent tariff scare we had
We'll
back
see.
on the 10th of October. So nonetheless, markets may retrace, is what I'm trying to say here, back to those levels, 67.70 on the S&P, which is the high of the NVIDIA day. And it also, coincidentally corresponds to the 10-day moving average.
Hello, retail traders. I'm Washboardjim with a sneaky snake trading strategy where I talk about chart patterns. Don't have to. Moving averages, and I did this with the SPY also, the bottom trend line. Now I'm using the bodies of the candles on the 1 minute. It's important you know that. And I identified a megaphone pattern. Very good. I had concerns. Hello, Sam. NVIDIA?
And you bring up a good point. One of the things you could look at is, markets will typically follow risk assets. Bitcoin having fallen significantly over 35 or so percent from the high of this year. One would say maybe that's a proxy for what the market is about to demonstrate. In other words, maybe a decline in the overall broader markets. But nonetheless, it could be a share shift, moving from Bitcoin to precious metal, commodities. Silver's hitting back at new highs. Gold is still catching a bid. So, I wouldn't say necessarily that Bitcoin's decline is indicative of the overall broader market's decline. It certainly could be, but it also could be essentially a share shift back into the traditional, commodity store of value assets and industrial component assets like silver. So, for what it's worth, again, I think it's interesting to see how this is playing out. But that's why I'm looking at some of those technical levels on the S&P as benchmarks to consider for, adding risk or taking risk off.
Yeah, we're seeing a nice move higher in commodities this morning. Crude up, gold, copper, silver, as we can see in these charts here, as we're seeing a bit of a risk off in equities and stocks today. Thank you so much for getting us across those key stories and those data prints this morning for us, George. I'll talk to you a little bit later on. Coming up, we will dive into the economy and the state of the consumer. Morning Trade Line will be right back after this.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Okay, I'll be right back.
What's up, Carl Nation?
Carl!
The number one broker with the best full-service wealth management skills in the biz.
AVGO down.
Something from Schwab. Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low
Tesla
fees.
double topping.
We're experiencing
Technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
So that morning trade line, CrowdStrike is on the receiving end of two price target hikes ahead of its earnings after the close tomorrow. JP Morgan raising its price target to $580 and KeyBank now at $570 on the stock. Both firms have outperformed ratings on CrowdStrike. Shares are up more than 40% in 2025. We are seeing shares heading in the other direction. They're down around 1.5% right now. Let's take a look at the winners and the losers on the session. No surprises there. Synopsys is flying high, up over 5%, of course, with this deal with NVIDIA. $2 billion stake there, an investment from the chip darling. So we are tracking those reports there and those headlines. Other than that, we've got Decker Outdoor up over 4% this morning, and the others are not doing too shabby, up in the vicinity of 3.5 to 4.5%. Let's take a look at the laggards on the session. Moderna's getting hit this morning. This looks to be off the back of a New York Times report surrounding its COVID-19 vaccines and the death of 10 children. So we are monitoring those headlines. We've got Dell on the back foot to the tune of 3%. Broadcom also lowered.
Sorry, honey. Today's infomercial is brought to you by Stock. S-T-O-K, Stoke. This is a cappuccino mix, not too sweet, and it's cream. This is a cold brewed coffee, which is made into a cappuccino. It is coffee house or coffee shop. Nobody cares because now you can pour your own at home. Cold brewed coffee, forward, never too sweet, and creamy, like it came from a barista, which you can basically, barista, which you can basically are now, congrats, whatever the hell that means. Darkest roast, bold and creamy. Stok, S-T-O-K. Cold brew coffee. I've become a master of the cold brew coffee, and I'm really liking it. It leaves a less acidic taste in your mouth. Simply just take it, pour it into your glass, and that's all you got to do. Nice cold coffee mix. Sip it in your favorite cup. Yum, 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 yum. Unbelievable. It brightens up your day and puts a smile on your face. This is the first day of December, and I wish everybody a Merry Christmas and a happy full beer. Honey, are you going to talk about NVIDIA today?
As we had seen in previous months.
Yeah, I mean, I think it is the broad quality of earnings. I mean, I would put the AI story to one side. I think it's fair to say AI's had a good 2025, but an awful lot of other global equities have also had a good 2025.
Who the hell are you?
Performance of the cyclically sensitive portions of the equity market have mostly done okay. And when they haven't done okay, it's been for particular corporate reasons or particular subsector readings. But
AMD again, NVIDIA.
2025 draws to a close. We can say in retrospect it was a good year economically
Meta.
and a good year for the equity market. You know, the unfortunate thing for investors is we already have to worry about 2026.
Right, and just before that, obviously we've got this rate decision come December the 10th. What are your expectations as far as that? Because the market seems to be baking in right now the chances of a 25 basis point cut.
I don't think this is an FOMC that really wants to have a fight with the market. You know, remember that the reason why the market prices in a high likelihood of the cut is because of the telegraphing that we've seen from members of the FOMC. You know, my guess is that they cut. I don't think that in itself has much of an impact on the market. I think what we're going to be looking at is what the expectations for 2026 are, what the updated dot plot looks like, how, you know, many cuts, you know, that people are forecasting over the next 12 months, bearing in mind that in early 2026 we'll have a new Fed chair who almost certainly is going to be guiding lower rather than guiding higher. So, you know, I don't expect a massive shock in the middle of December. I don't expect a massive reaction to the market if it's given what it's what it's looking for. You know, I'm of the view that the Fed is fairly low in terms of interest rates, and the portion of monetary policy I worry about a little bit more is liquidity. I do think they've been late to stop quantitative tightening. You know, that has, I guess today, we finally stopped
got a wedge?
shrinking the balance sheet. You know,
We got a wedge. Sorry, mister. But you must go. I'm going to clean up my chart. And now we're looking at the wedge. You can't say Nvidia, then I don't want to listen to you. I don't appreciate you bad-mouthing AI.
To the amount of money. I think the price of money is pretty cheap for most sort of general economic purposes. I think that nominal growth is at or above what the price of money is going to be. I think that's just fine. The amount of liquidity matters, because what happens when liquidity gets a little bit tight is that it ceases to be available in the portions of the market that sometimes need it, that sometimes need it the most. And, the Fed having massively expanded.
Okay, we're coming down to the third touch.
And really got way too far in 2021,
on the body.
2022 in that direction. Has probably gone a little bit too far in the other direction. And I don't think we're alone in looking at this and looking for signs of some kind of artificial tightness, whether it's in something like the SOFR markets or in other portions of rate markets. Having said that, big picture, I think the performance of precious metals in the last quarter really suggests that aggregate monetary policy, and I think we'd be talking here about global monetary policy as well as the US monetary policy, is probably too loose rather than too tight, because you don't see silver doing what it's done or gold doing what it's done without some kind of a monetary impetus behind that.
That's why some have been calling the records that we've seen in gold in recent months a bit of a canary in the coal mine. Michael, we've got to wrap it up there. Thank you so much for your time. Always appreciate your insights. Michael Shaul there, founder, portfolio manager of Ion Macro Fund. Coming up, we will get a closer look at the big picture with the team over at Charles Schwab. Morning Trade Live. We'll be right back.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
We're at support here.
First day, so sometimes
Next.
We got a yin yang. What was resistance now becomes support. So for this thing to stay bullish, this needs to move up. That or we come down and we hit that bottom of that megaphone for low support. Remember, it wasn't by much either, but it could be very tight, just above 6,800. These are at $2.30. $2.25. I'm going to make a business decision. The 68.50s at $2.30. I tried to get 25, but there it is. It's never too late for your kisses. La da 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 dee. I'm gonna have a cup of tea. Better understand me. Sarah, Sarah. They don't know how he does it, but he's going to try to do it. Boom, 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 boom. Boom, boom. Boom, 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 boom. Boom, boom, VWAP. VWAP on the /ES. Damn it. Come on. Not going as planned. After this, I'm going to make lunch. Make some chicken curry with Indian rice. I'm kind of lenient in buying some right here, but it'd be a good idea to at least get 2 of them at 190, but damn it, missed it. That would have been a smart move maybe, because I could have brought them down. We got to break the VWAP on /ES. And we got to break this resistance line. I'm going to turn on my heater. I got to go get some bulbs. $68.15.68. Got an average of 206. 207. Marley. What are you doing, Hot Lips? Kind of bearish right here. Marley's on Nvidia. Marley and Nvidia.
We're expecting a little bit of a squeeze on EPS. They're expecting to come in at 79 cents. That compares to the $1 that it posted in the year-ago quarter, and $1 in the last quarter, and $1.16 in the year-ago quarter. So a little tightening, but still would imply growth. As far as revenue expectations, looking for about $591.2 million. That's the estimate. That would mark growth of about 12% year over year, but it would also mark a slowdown, a deceleration from the 22+% that it recorded in the same quarter last year. Now, the last quarter revenue was up 23%. They beat expectations as well. So also a slowdown from that blockbuster quarter that you mentioned that we saw in Q2. Now, they do have a history of exceeding expectations, particularly on the revenue front. They have beat every single estimate in the last 2 years for revenue by at least 5%. So the expectations are high, while growth is decelerating some. And they exceeded, the current market climate demands a little bit more than success, though, at this point, Sam. And we've seen that quite a bit in this earnings season. Doing better than expectations has simply not been enough. So that is sort of a critical question here when it comes to MongoDB. Can they sustain that momentum? The big focus is in that Atlas Cloud database segment, because that's about 74% of their total revenue. So most eyes will be on that Atlas segment. There are some analyst concerns about potential pressures on Atlas growth that I saw flagged, some weaker consumption trends that were flagged. Bank of America still maintains a buy rating, but they did lower their price target all the way down to $300 from $470, citing some of those concerns. Right now, they're trading at about $327, so the price target's actually lower than where they're currently trading. But as far as the average, it's about $371. So overall, the analyst community is pretty bullish on this, but some big moves expected on these earnings. At least a 13% move is priced in the day post earnings for this one. So expect some volatility either way, Sam.
Oh, absolutely. And I mean, it's going to be a big week for cloud as well, with Salesforce also reporting out later this week too. So no doubt this will be a bit of a prelude for that. But it's interesting with this name. I mean, if you take a look at the analyst consensus here, I mean, there doesn't seem to be any that are in the underperform or sell camp. There is a big cohort in the buy or strong buy camp here. So certainly an interesting setup as we look ahead to those earnings. I'll chat to you a little bit later on, Marley. Thank you so much for getting us across that one. Let's trade it now with Scotty Bauer, CEO of Prosper Trading Academy. And how are you approaching your example trade for this name, Scott?
Hi there, Sam. When I look at this chart here, it's kind of ugly. You know, since last earnings, when it made that big pop up, it's been trending lower, trending lower. It can't get back above that 50-day moving average. And like Marley pointed out, stocks that have not reported well,
this is where I got to add,
you know, really reaffirmed guidance or raised guidance have been punished. So to me, this is a stock
I'm going to add 6 of them.
Potential downside. So one kind of inexpensive way to play that is by buying a diagonal put spread. What does that mean? That means I am going to sell this week's 270 strike put. It's very, very expensive with the implied volatility this week. And I'm buying next week's 280 strike put. I'm going to try and do that for about $2.50. It was pretty close to that when Mongo was trading a bit higher just around a half an hour or so ago. So this is a really inexpensive way to play that downside. My risk is limited to whatever I pay for that spread. If the stock stays here, it goes higher, okay, it's not going to be a good trade. This is a bearish trade.
Okay, a good look at MongoDB ahead of these earnings. No doubt we're going to be watching what a lot of these cloud companies are saying this week as we sort of round out this earnings season, which, as you say, it's been a bit of a surprise, hasn't it? I mean, stocks have gone up on bad news, stocks have gone down on good news. I mean, it's just sort of all over the place, but really it should be about that guidance that we'll be watching out for, Scott. What are your thoughts on the overall market as we get up and running for a fresh trading week and a fresh trading month to cap off what has been a pretty interesting year?
Yeah, you know, there's no shortage of news, right, that can affect the markets on a daily basis. Today it's the JGB, what's going on with Japan 10 and 30-year rates. Are they going to raise rates? And then all of a sudden, you know, we're going to be turning to the Fed for next week here. So I think it's a cautious market, but I think the market is really held in there given everything that's been thrown at it. So are we going to have that Santa Claus rally? Are we going to have, you know, the December to remember like people are looking for? You know, this year could be different, but I think the market is held in really well given everything thrown at it.
It certainly has, and we are just seeing the S&P 500 on the back foot this morning as we get up and running. But yes, a lot of moving parts in these markets. Tech under a little bit of pressure this morning, but thank you so much, Scott Bauer, for your thoughts this morning.
Thanks.
CEO of Prosper Trading Academy. We'll catch you next time. Coming up, we will take a closer look at the fallout from the UK
Added at
budget with
1:15.
Richard Flynn from Charles Schwab UK and more on what's moving global markets today. Morning Trade Live. We'll be right back.
Damn it, Jim. 190. Could take profit here and be
Morning
happy.
Movers, be the first to find out
We got
what's
9 of
shaping
these suckers.
early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy,
215.
a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Morning Trade Live. I'm Sam Barnes, coming to you live from the New York Stock Exchange this morning. Joining us now, very pleased to say, is Richard Flynn, Managing Director at Charles Schwab UK. Thanks so much for joining us today, Richard. Obviously we've had some time now to digest the contours of this budget, but just give us a sense of what your takeaways were from that and the initial market reaction.
Morning, Sam. Thanks for having me. It's been an interesting few days, certainly in terms of the reception to the budget. I believe it was Louis XIV's finance minister that said that the art of taxation was to remove as many feathers from the goose as possible with the minimal amount of hissing.
NVIDIA.
There's certainly been a lot of hissing in the last 4 or 5 days
up.
from the media and from the public.
I'm hissing
and
right
from,
now.
The opposition. As well as within the government. And so it's not been a resoundingly popular budget, but there are bags of feathers. And to look at the estimates, the 88 policy changes that Rachel Reeves introduced last week will net somewhere between 26 and 30 billion additional pounds of tax take. So a pretty significant increase to the tax burden of the UK taxpayer. And there are very few sectors or cohorts within that taxpayer group that kind of got away with it. Everybody has been impacted, and notably one of the things which has probably been received most negatively has been the decision to freeze the thresholds for income tax. Obviously, as earnings have increased over the years, those rates have stayed where they are, which means that over the next few years, if people continue to see increases in their wages, they will move up into those higher tax brackets, and that makes it very difficult for people to want to aspire to earn more money, knowing that the government will tax them once they get above those thresholds. Anyone earning or creeping up over the £100,000 income bracket faces a marginal rate of 62.5%. So it can create a significant barrier to prosperity to implement that kind of policy. It is fiscal drag, and it has been regarded by a lot of people as income tax increases by stealth. But the government announced as part of their manifesto pledges that they would not raise income taxes on working people. And they maintain that they have.
They always say that, but they do.
Certainly, the reception of the budget has been negative, despite their maintenance that they are maintaining that they have not taxed working people more than they were previously.
220.
It's interesting given all the drama that morning because obviously the officials released the budget a little bit prematurely, which then the government had to sort of come out and apologise for. It was a very choppy start to the trading day, at least as that delivery got underway with respect to that budget. I mean, we did see the FTSE sort of flip-flopping. We did actually come out the other side of that speech with stocks higher, some under pressure depending on what sector was initially reacting to some of the details in that budget. But then we did see actually the British pound after a bit of volatility there coming out higher, and also the gilt market too after initially looking a bit choppy there as well. I mean, but all in all, it looked relatively calm initially, sort of after we got that speech. What was your read on what we saw as far as the reaction in financial markets, as that delivery went on and we sort of came out the other end of it?
Well, there's a couple of issues relating to the release of information prior to the budget delivery. In recent years, governments of both colours in the UK have effectively leak their plans or kind of signal to the press what they may or may not intend to say at budget time, just to see how it may or may not be received. And in fact, the Speaker of the House, Lindsay Hoyle, warned the Prime Minister, Sir Keir Starmer, about this prior to the budget last week, and said that the role of Parliament should be the first place that hears of a budget, not through the BBC or Sky News or any other media organisation. Obviously, it's profoundly sensitive information. There can be a lot of activity that can take place with advance notice of what might happen to the pound or what might happen to the bond markets. As you said, it was relatively calm, following Rachel Reeves' presentation last Wednesday. And I think, again, that was because, to use a cricketing expression, the pitch had been rolled in advance.
Took my first entry here on the 1, 2, 3, and then I added on
great surprise if
at the yin yang, and then I added on the third time and tripled down, doubled down to every time.
We're not going to do that.
I had 1, 2, which gave me 3, and then I got 6 more down here at 115 to a double bottom. Take that body of that candle, and it hit that wick, and that's where I took the last trade.
The Prime Minister were
I run it up,
from cabinet,
hit the wedge, and got out of the trade.
It's a significant issue to discuss, and again,
so now I'm going to go make my lunch.
Government that's already under financial pressure, and so it's a tricky one for them to walk away from easily. So there's continuing to be some pretty significant conversations at government level, and certainly across Westminster around this budget. The repercussions.
225 right there.
Than previous budgets, I feel.
As you approach the 63, if you break it, we could run back up and hit the 200 again. If you're still in the trade, I'm going to make lunch. Turn up the heat.
Joining us there. Let's just take a look at what we're watching internationally. Airbus shares falling sharply after the company recalled 6,000.
She ain't said Nvidia yet.
To make a software change. It came after an issue
I really look forward to her saying Nvidia.
That things are returning to normal after getting the modifications done faster than anticipated and causing less weekend disruption than expected. The disruptions did impact American and Delta Airlines, and out in Asia too. Other European aerospace shares also getting hit on the news today. Chinese factory activity surprisingly contracting last month. The private gauge of manufacturing missing expectations, falling below the 50 mark, which separates expansion from contraction for the first time in 4 months. Official manufacturing PMI, meantime, also continued to shrink for an 8th month in November, while non-manufacturing activity, that's made up of services and construction, falling into contraction for the first time in nearly 3 years, in part because of the weakness in the property sector. And as we've been talking about this morning, Japanese stocks falling while the yen and JGB yield.
So who won the polls today? Did I win again? Magnificent. Asking a question. Paging Magnificent. The award wins to both down and as well as the upvoters. So congrats to Jesse, Washboardjim, Sheba, and Livid Goose. Thank you very much. What? How can you... what? How can both win? How can everyone win? Sounds to me like some crooked judging going on here again. You sold your spy for the big loss. You gotta stop that. I don't see how both can win. I'm confused. But you're judge, so I can't argue with the judge. Whatever the judge says is right. I learned that in boxing. You have to agree with the judge, although you might disagree. Honey, are you going to say in the video today, or am I going to get pissed off?
Good morning. Thank you so much for having me. So when I analyzed consumer data discussions
Whoa,
from
who's this?
social media available channels around those warehouse clubs, there were
Whoa.
almost like two different flavor stories that I can share with you. So Costco is seen as
She's a
your
happy
favorite
chick.
brand. It's still a very beloved retailer just because it feels like a themed park for adults. What people actually said is once you pay that premium to get in with
She's
your
got the
membership
Joker
from later
lips.
on, you just only thing you have to do is like be okay with the chaos in store, and then after that basically you're solid. Now with BJ's on the other hand, the flavor
It's kinda scary.
that I saw was actually that there were a bit more issues when it came to technology, when it came to their app, glitches and delivery service issues. So a bit more of that operational headache. But on the flip coin, on the value end, I did see that BJ's is still pretty much beloved for the discount. Consumers go to it specifically for those coupons and the deals that they constantly announce.
Okay, and so obviously we've got Costco set to report on the 11th of this month, am I right?
I believe so,
Yes, okay, wonderful. So as we look ahead to what is going to be a very important report card, what have you seen as far as some of the consumer appetite and demand from Black Friday, which obviously is the most recent shopping festival that's happened here? I mean, it seems from initial reporting that things look pretty strong. I mean, consumers are still out there spending. What have you heard? What have you seen?
Are you ready for it? So, based on the public discussions on social media, specifically for Costco, I did see that consumers are mostly excited about anything related to gold, diamonds, and refrigerators. Those are actually the three key categories of items that shoppers talked about.
Damn, there it goes.
They were very excited to basically go for those high value ticketed items, specifically on Black Friday, just because of the large discounts. But again, there were also conversations about the Kirkland brand, which, by the way, consumers for Costco throughout this whole 2025 see as a badge of trust. So when they hear anything Kirkland, they would go for it, even if it's discounted or not discounted. So Black Friday literally contained high-end discussions and also Kirkland brand.
It's such a fascinating anecdote. I mean, gold, diamonds, and refrigerators. I always hear these stories about how Costco is sold out of their gold bars. So, I mean, you know, it seems like people are waiting for these events to come around to actually go and shop at these places, to actually take advantage of these discounts. You know, Sveta, as somebody who looks at the consumer, you study a lot of online posts, social media, etc. Interesting piece out on the Journal this morning, front page, about Gen Z shoppers not spending like the retailers need them to. I'm just wondering, you know, as far as what you're seeing with regards to the conversation and the trends out there, what is Gen Z telling you right now about the retail spend and consumer trends?
Oh, Gen Z is just a completely different marketing animal. I say that because advertisers, when you place advertising, you have to basically look at your audience groups, as I mentioned before, psychographic analysis, demographic analysis, income analysis, and how much they can spend. What these big retailers, anyone from Costco to BJ's to Walmart and Target and others, are missing, that Gen Z is not your traditional shopper just because they don't spend as much time in your traditional junk mail, snail mail, basically what you get delivered in your mailbox. They are on TikTok, they're on social media platforms, and the absolute only shopping manner that they use is shopping through social media channels. So what advertisers should know, and these big box retailers should be doing, and many of them already are, is just spend as much time on TikTok, which we've talked before is a large e-commerce platform now, and it's transitioning.
Did I ever tell you I love you? Even with a Joker face?
Of the likes of literally Amazon, just because of the algorithms and the AI that gets placed.
Algorithms.
Grabbing for those Gen Zers.
That is so fascinating. You know, one of my first jobs was to actually deliver those retailer shopping discount pamphlets into people's mailboxes, which obviously is not generating so much with Gen Z, but thank you so much. But thanks so much for joining us here. That was a wonderful conversation, getting us across the retail sector.
And look at you now. You're a star.
Consulting founder and CEO of Real Global. Appreciate it. Let's trade it now with Tom White, our host of Fast Market. An example trade for us for Costco this morning, Tom.
Yeah, Sam. This stock, they report earnings next week, but they report monthly sales. October sales were up 6.6%. We'll get November sales in the next few days also. So you get a better picture of what's going on. I think if you look at the performance in the stock, it's fallen about 15% from those all-time highs that we saw in February. And we haven't seen that for about 3 or 4 years in this stock where it's trending lower. It's at a higher valuation than most of its peers, but at the same time, it's outperformed most of its peers, and also steady growth as far as sales. They just raised fees for their subscribers, also their membership fees. So that's been a boon for this company, but it has pulled back pretty significantly. So I looked at a strategy going into that earnings event where I can take a directional bias, but I can be a little bit more conservative, maybe a little bit more passive due to this slide that we've seen in the shares. So went out to that December 12th weekly option series. You're going to capture that earnings event. Implied volatility levels are elevated right now. We haven't seen these levels for a while in the stock. So I looked at selling a neutral to bullish short put vertical that expires in 11 days. So 3 out of 4 scenarios I can profit on this type of strategy. If the stock goes higher, stays where it is, or goes even a little bit lower, I can be wrong, but remains above a specific level. So selling the 880 strike put out of the money to the downside, and then buying the 860 strike put. So a short $20 wide neutral to bullish put vertical. You're going to collect roughly about a $4 credit on it. That's what you can make, $400 per spread with $1,600 in risk. But you've got a better probability of success, over a 65% probability that 880 strike will be out of the money at expiration. That 880 level has been an area of support over the last several months. So taking advantage of that higher implied volatility on a neutral to bullish short put vertical here, Sam.
Okay, good look at Costco this morning. Under a bit of pressure this morning, but as we say, we are looking ahead to the earnings that coming next week. Thank you so much for getting us across that example trade. Tom White, I'll speak to you a bit later on. And just checking in on the markets, we are seeing a bit of a down day for equities today. If you take a look at the major averages, we are seeing a bit of risk off in the headline. We're down around 0.3% on the S&P and the Nasdaq today. So a bit of caution in these markets as we kick off a fresh week of trade.
Well, that was a good trade.
Today on Morning Trade Live, I'm Sam Vardas. Download the Schwab Network app, available in the Apple App Store. Tune in 24/7 on schwabnetwork.com. Trading 360 with Marley is next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate schwab.com, thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook. your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network. I'm Sam Gladys, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
So we hit the 200 for an exit idea. I've been wanting to turn on the heat. It's 69 degrees in here. And I gotta go and warm up my curry. So we hit the 200 and I got out just right before we did. So yeah, not a bad day so far. I got a little stuck here. I wasn't too worried about it for some reason. First day of December. We had a big pullback this morning already. Consolidate, double bottom, triple bottom on the slash ES.
Here's what we have coming up for you
So
in today's show. In our 360 Spotlight, we'll be taking a closer
I don't
look
feel
at
too
the
worried for some
cryptocurrency
reason.
market as Bitcoin continues to fall, bringing crypto stocks down with it. We'll discuss the recent volatility and how you should
Well, we
best
are at
approach the crypto
resistance
market
now.
right
If we break the 200, we're going to go much higher.
taking a look
I
at
think
CrowdStrike
we need to
ahead of
consolidate.
its earnings after it had a price target
And
raise.
I'm
We'll
going to
have
go
the
make
earnings
my
later this
lunch.
week. We'll also have the news on that and an example trade from George Tillis. Then we'll talk about NVIDIA shares trading higher today
really like
after
that
announcing a partnership with
STOK stuff.
Synopsys. We'll discuss the recent downturn in NVIDIA stock and the state of the AI trade. That's coming up in our 360
Seems like I
round.
can drink
Before we get to all of that, though, let's take a
that
look at where the
coffee
markets stand this morning. A bit of a down day across the board
It's a lot
right
more
now.
cleaner.
The S&P trading down about 0.3%.
Caffeine
at
effect.
68.30.39 right now. The Nasdaq down also about 0.3 at 25,362. On the Dow, we're
It
trading
puts
about
away all that
0.5% lower,
acidity.
47,491, and the Russell 2000 trading 0.7 lower so far this morning.
I'm going to get up, turn on the heat. I've been wanting to turn on that
Taking a look
heat
at some
for
of our futures
a
products
couple
for the 10
hours
years,
now.
We are above the 4 mark. We're at 408
It's
right
10
now.
o'clock.
1.5% right now. The dollar's still lingering right around that $99 mark, 99.14. As for gold, we're up 0.25% at 42.65.70, getting closer to those all-time highs. And crude oil trading up about 1.33% right now, 59.36 a barrel. And there is Bitcoin that I was talking about, that crash.
Come on,
or
baby,
sell-off,
say it.
whatever we want to call it. We'll be discussing later in the show in our spotlight round, but down more than 6% today, trading at
Oh, where's Marley?
85,020. I do want to get to one of the top stories today that we're talking about, one of the major headlines that we've seen. Bring in our first guest, Alex Coffey, co-host of Next Gen Investing, joining us here, also our senior equities contributor, to talk
Oh,
about
nice
Amazon
dress.
and Google and this development that
I like
they
that
announced for
dress.
this multi-cloud networking service they're now offering.
Yeah, this is a really, really unique story because I think we think of these companies as like separate mega cap companies trying to do everything, but they're working together on something.
I like that dress.
Collaborating on this joint project that they announced on Sunday. So it's going to be a jointly developed multi-cloud networking service that they say will be focused on meeting the growing demand for reliable connectivity. The multi-cloud networking solution uses both AWS Interconnect, multi-cloud, and then Google Cloud's cross-cloud interconnect. So in a statement from the VP of Network Services of AWS, it talks about this collaboration between AWS and Google Cloud representing a fundamental shift in multi-cloud connectivity. And so I think it makes sense, right? One, it shows the growing demand as they highlight, but also this desire for reliability. We have seen hiccups, whether it was CrowdStrike, whether it was Cloudflare. We've started to see these, systems that when there's a hiccup, it takes down major services. The more
Living Goose, did you play
options
baseball?
there is, protects these companies a little bit more. But to me, it shows that they're not necessarily fighting for deals. They're working together. It might show that there's a lot of demand out there, and it'll tie into what some of the analyst comments.
So did I.
And I think you bring up
I
a
even
really
had my own
good point, 'cause I
softball
think of these
team.
names sort of separately, as separate cloud providers. They offer the same
stopped
service,
playing when
they're
I
very
turned
separate.
50.
But to see an integration like this shows there is a lot more
I had to.
possibility than I think
My body
most
couldn't
people
take it
are
anymore.
anticipating in this world in terms of
The last
auction
game
reliability
was a
and also
triple hitter,
profitability
and
for these massive mega tech companies.
I
Also,
said, "That's it,
Salesforce
man.
being listed as one of their early users.
I had
so a
cramps
major
for 3
client
days
right out of
after
the
that.
gate. But you mentioned
I
the
said, "I'm
analyst
done."
reaction. You know, we are seeing Amazon trading higher. We just showed the chart there. You know, how is
That
the
was a
analyst
great
community
pitcher.
responding to this?
Yeah, well, and the last thing I'll
Slow
say too,
pitch.
reliability and complexity. This is not an easy project, and so resilience being a key word
shortstop.
too. But Oppenheimer weighed in on Amazon, and
Right
so
and
I'll
left
say that
field.
both these analysts, it's not necessarily in reaction to this
First
deal,
base.
but it ties in because they're both very optimistic about just general cloud performance for these companies. So Oppenheimer raising from 290 to 305,
I was better than
outperform
average.
rating, and talks about significant upside through 2027 for AWS. Guggenheim, on the other hand, raising for Alphabet from 330 to 375, acknowledging the price move. Not
Yeah,
shying
those
away from
were
that,
the fun
still
days.
seeing a ton of Google Cloud opportunity.
Remember
They
one
think it's gonna
time I
show
sat there
growth
pitching and
as well as higher margins. So a lot of exciting
the
stuff going on with these two
umpire
massive
comes
names.
up
Yeah, very
to the
exciting.
mound
And
and
we've
says,
seen
"Jim,
some really positive moves in both of these names as
your
well.
girlfriend."
So continued positive moves for these names. Alex, thanks for breaking that down for us. Alex Coffey,
what was
senior
that?
equities contributor here on the network. I do want to bring in our next guest.
No,
So
the
talk
police
more
came
broadly
out
as we are kicking
to the
off a new
pitcher's
trading
mound.
month here starting
Jim,
December.
your girlfriend at
Joining
home.
us this morning, Ted Thatcher, president of Bright Lake Wealth Management. Ted, thank you for being with us on this Monday. Kicking off our final month in the calendar year.
She's
trading.
freaking out.
You know, I'd love to just talk about this past weekend.
what?
We've had our biggest,
So I drove, had to
busiest
quit the
shopping time
game
at
and
Black
go
Friday.
home,
We're
and
now
she
in the
had
midst of
frickin'
Cyber
house all
Monday. You know, as far as expectations
tore
and the
up.
numbers that have come across, you know, what are some of
Pictures
the trends
down
that
on the
you've
wall, and she's rolled up in a
Great to be
corner.
with you, Marley. Yes,
Was having an
this
anxiety
holiday season's
attack.
really
She was
interesting.
pissed
It's
off
almost
at
like
me because I went and played
income
baseball.
level is more of a determiner
I
of
said,
how
"What?"
holiday spending is going than just the amount percentage
That
discount
didn't
we're seeing,
last.
whether it's in
We were
person
living together.
or
I had a
online.
frame shop.
There's this bifurcation that we're seeing with the consumer right
said,
now. When you
"God."
look at the data, we saw consumer confidence
So I wish I knew
drop.
about this
We
about
saw,
you before
the
we
unemployment
moved
rate
in.
continuing claims kind of tick up last week. And so there is some instability
She
there
got
with
mad,
the consumer.
boy.
And so when you look actually at the retail sales numbers, they came in a little soft as well, up a little bit.
I said,
but
"I'm gonna
after
play ball."
last readings, huge
Doesn't mean I
number.
don't
think
love
we
you. I'm
expected
gonna go
more.
out
And
there
so
and
when
play
you
ball.
dig
I mean-
underneath the hood and actually look at the details, we see those actually earning more than $150,000 are expected
Man, I'll never
to
forget
spend
that.
and spend more this holiday season. And of course, the lower income tier being hit hardest, really trying to tighten the belt when it comes to their holiday spending.
To have this conversation about this bifurcated economy, this K-shaped economy, but you mentioned, you know, where the primary spending is in this category of people making
I
more
still
than
remember that now. I didn't. I
$150,000 a
haven't.
year.
I forgot about that
As
for
they
about.
plan to spend more, you know, what areas are we seeing them gravitate toward?
It's been a while.
And how
10
does that
years,
shape
15
where we're going to
years.
see retail strength?
It's a great question. I mean, of course, we see online
That was
and
back in
e-commerce push higher and higher. You know, it's not a retail
74.
in-person world anymore. You know, we've talked about
I mean,
Black
94,
Friday for years. Of course, we think
1994.
about the lines outside of Target and Best Buy over the years. And the
I was
truth is,
younger than that, I
post
guess, but I
Thanksgiving
just stopped
holiday
playing when I
shopping
turned
really
50.
is online now.
I was in my
Year-over-year,
prime.
online spending is now up 9%. Again, spending on the whole is up this holiday season about
Our
4%.
pictures,
Some of that,
our
of course,
softball
coming
team
from
was
a little bit
picture
of
frames
inflation and
plus.
some, of course, coming from more demand. And so, again, when we put our eyes on that category that is spending more, when we think about opportunities, of course, we want that durable cash flow. We want that consistency. And so premium spending is really what I'm focused on in terms of opportunities. Of course, Costco comes to mind. Most, families that have
Yeah,
a
I
Costco
can't believe
membership
she
are
tore up
dual
the
income
house like she
households,
did.
typically hitting that higher range of income. Also, of course, when you think about those premium brands, LVMH also comes
She's
to
rolled
mind.
up in a ball.
And
I
so
said,
as
"What
we
the
look
hell?"
across this sort of more premium brand, and we're also starting to hear from some of these premium brands that they are not going to do any sales in this holiday season. They're not going to lower their prices. They're going to demand that premium price tag from these shoppers. As far as that approach, you know, what are your expectations
I ain't
for
out there
sales
screwing
in
on you. I'm
Q4
out playing
for those companies
baseball.
that are saying, because
The
we're seeing
guys.
this bifurcated economy, because we're seeing these higher income earners spending more money, we
We
don't
got
feel
3
a need
black
to
crows
participate
here.
in the sales. But we're also being told at the same time that everyone, including that more affluent customer, is searching for a deal, and they're treasure hunting more than ever.
Absolutely. I mean,
This last one, I don't know what it is about the women I meet. This last one
like
accused me of
standpoint. What we're looking for
going to
ultimately
church and
is
picking
durable
up on
cash
all the
flow.
chicks.
Whenever we look at
So people are
returns
crazy.
and upside and investments, we always think about that side and not always the risk side. And so when you see companies, like the premium brands, LVMHs of the world, not going to just slice for discounts.
One of her friends said Jim was sitting next to a girl at church.
A little bit. They're trying to maintain that status.
I said,
and so
what?
ultimately,
Yeah,
I think that that's a good thing from an
85-year-old
investor
grandma.
standpoint. With all the volatility we've seen this year, all this talk about the AI trade, very well warranted, going into the holiday season, maybe investors don't want all that volatility. And so durable cash flow that's going to be there is really what my eye is on, maybe kind of underwriting some of that risk on the volatility
who's
side.
this chick telling you this crap?
That we've been focused on for so much of this year.
So Ted, if you're looking
She's
at cash
shedding
flow, and
false
we're focusing
witness.
now just specifically on the rest of the holiday spend season, so really just a couple weeks here, what would you say is the single most important metric that you're going to be watching that's going to
50 SMA
indicate to
bounce
us
off this
either
here
how
fourth
healthy
crow?
or how fragile the holiday shopping season really is going to be?
Again, a great question. I think, of course, questions from a data standpoint all point to what the Fed's going to do in terms of potential relief for that lower income, average American family household. But with the holiday spending season, what my eyes really
Just
are
like
focused
that.
on is the retail sales numbers and ultimately consumer behavior.
Hit the
consumer
200
confidence.
SMA. That's why I got out of the
Obviously, keeping a
trade.
Close eye on that.
As we
Really,
started
again,
to
where their
approach it.
behavior actually points to. So e-commerce comes to mind
Look at
here
it.
as
It
well.
didn't want to break it.
The Amazon we were just talking about has, of course, the cloud argument to be made, but also they are serving the broad spectrum of the consumer economy. And so those types of companies are really what I have my eye focused on and how the consumer is ultimately behaving.
And you mentioned retail sales is an important metric, and when we strip out gas station spending out of the most recent data, they were basically flat. I mean, we're not seeing a lot of growth here. As far as when you look at that, do you see that as just a temporary pause, or do you see this as an early sign of some potential issues we're going to see with the consumer?
I think it's a great question. I mean, obviously, we had a huge number. The prior print, almost double what was expected. I think this most recent print was actually just coming back to earth a little bit. You're absolutely right. Really, the growth, if you will, that we saw there was really just around gasoline and energy. I don't think it's, the end-all, be-all for what we're going to see throughout the end of the year. Ultimately, I think, it's very likely that spend will continue. When it comes to the consumer in the United States, I think we don't always give them the credit that they deserve. The United States consumer has been a very, very durable, reliable party for decades, even in times that have been a little bit more dicey.
Thank you so much, Ted. We appreciate you being with us to talk about this busy holiday shopping season. We had our Black Friday, some of those numbers.
Oh, I'm not Mr. Saying the video.
But of course, Cyber Monday happening today, so we'll be waiting on those. But we appreciate you being with us to talk retail trends and the consumer. That's Ted Thatcher, President, Bright Lake Wealth Management. And we've got plenty more to come for you on Trading 360 as well. Next, we've got the big three stocks, 3 charts, and 3 trades. Rick Ducat will take us through the technicals, and Scott Bauer will take us through the trades for Costco, Seagate Technology, and ExxonMobil. That's next on Trading 360 on Schwab Network.
Yeah, that girl kind of grows on you a little bit after a while. Marley. She's positive, that's for sure. Dow Jones down 250 points, 265. Do 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 do. Do 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 do. Do do do. Oh, junior college. Damn, you are a good ball player.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides. Live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, opening bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best.
Carl's Way is the best way.
At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments.
Leave Carl alone.
Shall we? No can do.
I'll get out there.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I see something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab is a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab. Schwab, a modern approach to wealth management.
We're back to the orb.
360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat, of course, taking us through the charts as always. And here to take us through the trades is Scott Bauer from Prosper Trading Academy. Great to have you both with us. Scott, I'd love to start with just a big picture thought on the market action we're seeing as we kick off December.
Big picture, at least the flavor of the day is what's happening in Japan, the JGB, 10-year, 30-year, what's happening with rates there. So that's putting our markets in a little bit of a cautionary stance ahead of the Fed next week. We still have some pretty major earnings this week, especially in the cloud space. But we seem to have many different things coming at this market, Marley, on any specific day. And right now, it's the treasury markets, and not just ours. It's across the pond and across the world. So we've got to see what happens there. I think the market has held up reasonably well in the face of everything being thrown at it. So I'm cautiously optimistic here.
All right, cautiously optimistic. So with that said, let's move into your first trade here. My last guest also highlighted this as a potential good play in the retail space in this bifurcated economy we're dealing with. We're talking about Costco here. Walk us through your thesis on Costco.
I love best in class, regardless of the sector, whether it's retail, financials, whatever it is. Best in class. There's no question Walmart, Costco, those are best in class. And after the trading action that we saw last week and holding those lows sub 900, I really like that. And if you just look at the chart doesn't look great. It really doesn't. But I am looking for a reversal to the upside here. So I am going to look at something here that does have a little added risk to it. I just want to point that out, but I'm going to identify what that risk is. I'm going to sell 2 of the December expiration 990 calls, way up above here, and I'm going to buy one January 930 call. So it's almost like a poor man's covered call type of situation. I can do that and pay $16, $17, somewhere in that range. This is definitely a bullish trade. My risk to the downside is that the stock goes down and I lose that $17. To the upside, the risk comes in because I'm short one extra call that expires in December 19th. But this position is protected all the way up to Costco reaching 1,035 by December 19th. So I really like the potential upside in this play.
All right, so with the potential upside, and Rick knowing that we should know we have earnings in that time frame that Scott was just mentioning, earnings coming out on December 11th, that's when they're expected. As we look at the chart here, what's it indicating to us as we are, about a little less than 2 weeks out from their earnings?
Right, so when we look at this setup here, we do have a chart that maybe doesn't look the greatest. We have been trending downward from those high areas near 1078, which is where we had our initial high, then the failure to retake it. Then we have been traveling downward here. However, we did hold on to our previous supportive areas here. We had our worst close here previously and our intraday lows here. This area between about 872 to 890 or so, that's where we held on. We did not make any new significant lows. To give some context to what Scott was saying as well, 930, that's about right here. That's our recent relative highs. 990 would be right around this area right here. So that would be where the other area of interest for that particular trade would be that series of highs from the summer months. So when we look at some of our other studies here, we have our moving averages. First of all, our yellow 21-day exponential moving average comes in right here. That's about where price is stopping so far right now. It lines up with our downward sloping trend line. So this area we can also see is where we had a repeated series of low points. So here, as well as here, that's around where we bottomed out in terms of our closing prices. So quite a bit of factors coming together right around that 910 area that would signify a potential breakout or rejection area depending on your perspective here. If we do look also at that 930 level, our 63-day EMA, our orange line here, lines up very closely. Our purple 252-day, it comes in at 933. So once again, a potential confluence to watch out for in that area. RSI is still on the bearish side, but very close to the 50 midline as well as its own red trend line. So look for a breakout in that indicator as well, corresponding with any price breakout. Finally, when we look at our volume profile study, point of control, heaviest trading area, comes in here near 945. We also have our linear regression line in teal, our fair value line at about 937. So once again, very heavy confluence of technical indicators in that general area to be on the lookout for if we do hold on to these lows near 890.
And that fair value number you highlighted at 937, pretty close to that 930 call that's a part of the trade that's got highlighted for us. But right now for Costco in advance of their earnings, trading at about 911.24. Our next one we're talking about here is Seagate Technology. Now they've had quite a run recently in the last 5 days, up close to 13%. You know, what's your move here, Scott?
Huge run, and that's great. I love the run, but there's a pretty big backstop resistance-wise up around that 300-ish level. Implied volatility option premium is still very, very expensive. So I really like still some of the upside in Seagate, but I'm going to sell an out-of-the-money call spread that expires in a few weeks on December 19th. I'm selling the 290.
Jimmy called the orb.
300 call spread. Can do that for a credit of $2, maybe even a little bit more. So, you know, in the next few weeks, that puts the break even there at 297-ish, maybe just a tad higher than that. And I think with the option premium, that implied volatility being where it is, that's a really nice opportunity just to say, you know, maybe Seagate's not going back down, but that resistance that's up there, that's what I'm playing it off of.
All right, Rick, so as we take a look at the chart for Seagate, certainly a very different looking chart than our last one. You can see this, you know, progressive move to the upside, particularly in the recent weeks here. You know, what are the technicals showing us?
Right, so we've given back some of those gains, but still the rally has been very steep and very strong. We topped out here, 297.88, and from there we have trended downward in the short term here. But really, I mean, this isn't much of a trend line. I'm just trying to characterize the price activity here that we're seeing a lower high so far. But you also have to couple it with this area here where we saw an increasing series of highs, mostly that fit along this trend line here. So by that measure, you would say the uptrend is still in play in the broader sense. We do have this area as well. 279 is where we had a small gap. That was the low point that we had before our small gap down. We've topped out a few times just below that point. So 279 stands out as one area to watch to the upside. To the downside, relative lows around 230 or so here, but that's also where we saw some highs come in terms of our closing prices and intraday highs there. So that was another area that potentially stood out to the downside. So now when we look at our moving averages, our 21-day EMA is the closest So that's our yellow line here, right about 260. So that could be a supportive area to the downside in the short term. We also have our 63-day EMA, our orange line, lining up with that green area that we highlighted earlier near 232. RSI looked like it was perhaps going to break up above that trend line there in red, but hasn't really happened so far yet. Same deal again, look for corresponding breakouts with both of them for confirmatory evidence about the strength of the price movement. Now we can see that our volume profile shows that the area near our yellow 21-day EMA near about 260 or so, that's the nearest heavy trading concentration area, so that's the supportive point. Volume picks up once again here in this range, 212 to about 232. That's where we had our EMA. Once again, our fair value line too, our linear regression line. Those are the downside points to watch out for.
And we are seeing shares under a little bit of pressure today, down about 2% at 271.09 right now, but on the year, up more than 210% so far year to date. Now, a very different looking chart for this last one. We're talking about Exxon here. Not any major moves so far this year, only trading up about 8%, but a much more volatile looking chart here, ExxonMobil.
Yeah, especially for a stock like this. And is it a little bit top heavy now on this rally that we've seen, and how much did the OPEC decision really influence this? So when I look at the entire space, but specifically Exxon, I'm looking for, and Marla, you and I have talked about this quite a bit, that this in the oil space, it's really been a sell the rally. So I'm kind of in that camp with this one right now with Exxon. So I'm going out a couple months. I'm going out to January expiration, and I'm just buying a simple put spread, a 115, 110 put spread. Do that really, really inexpensively, somewhere around $1, maybe a little bit more. And I'm just looking for Exxon to kind of come back and fall back to the pack a little bit, retreat back to that 50-day moving average here. Again, I think we're still in this environment overall where for oil stocks, oil-related energy stocks like this to really break out, there's got to be a change in what we're seeing here from the fundamental side of things, and I just don't see that.
All right, Rick, so as we take a look at the technicals here and looking for any potential signs of a breakout, are you seeing any?
Well, I mean, to start out with 115 to 110, that's right about here. I have the 115.50 level highlighted because if you look all the way back here, that was the high point that we saw after a rather severe gap downward. That was the beginning of an even worse decline here. But once again, going forward in the year, that was around where we hit our highs. We did have one brief close above that level, but quickly slapped back down. So now that would be the level that I had my eye on potentially to the downside, so that trade would be looking for a push below that level here. 112.50 is also another notable area. That's where we bottomed out a couple of times previously during the last time we touched near that upward sloping trend line here. So now we are kind of between not only the supportive area potentially or breakdown point, depending on how you look at it, but also near 118 to about 120 or so. That's the low point that we had before our gap down, as well as our previous highs. So that gives us our red and pink lines here. And indeed, that's about where we topped out again in terms of our closing prices. Intraday highs made it up to 120.81, but no lasting breakout there. When we look at RSI, breaking out to the upside, breaking above the 50 midline here, so that's more of a positive sign for the bulls. We also are pushing above our yellow 21-day exponential moving average so far. So things are still a bit of a question mark, though, because we have yet to overcome that resistance level. Finally, we can see volume nodes here and about here as well, showing 115 and 118.
Oh, gosh.
Those would be some heavy trading areas to consider going forward for potential consolidation or slowdown.
And right now trading right in between there, 116.85. So right in between that 115 to 118 mark. Want to thank you both for being with us today for Big Three. Rick Ducat, as always, for breaking down the technicals for us, and Scott Bauer from Prosper Trading Academy for those trades today. Coming up next, we're going to spotlight crypto. Bitcoin continues to slide. We're right around the $85,000 level right now, and it's bringing down the crypto stocks with it. We'll discuss that. Stay with us.
Man. Hey!
Sometimes,
Might have to go shovel some snow.
Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m.
Got
Eastern
triple top.
on Schwab Network.
Triple top. That's a 200 EMA. Boom.
But cut in December. We're going to hear from Jerome Powell tonight, though. He's speaking at 8 o'clock in California this evening. As far as what the crypto markets might need to hear or might be favorable, any type of commentary from him.
We don't want to hear about
to
him.
start to see a rally to the upside.
I think it's overall guidance that you can gather, whatever the market can infer. You know, we're looking for a nice gradual easing path. I think that the higher the confidence is, the less that removes this tail risk that's currently priced in. Crypto tends to move considerably quickly and decisively, and so I think the market is just trying to completely de-risk the December meeting, and then ultimately try to figure out how much risk is in Q1 to be able to determine, is this going to be a kind of whippy path, or is this going to be a nice kind of gradual liquidity increase that they've seen before and they can play again.
And Matthew, we've seen this drawdown hit the altcoins, a bit harder. We saw Bitcoin and Ethereum hold up a bit better. We're seeing Solana and others down 6 to 10%, some bigger moves there. What is that sort of rotation into quality signaling to you, if anything?
So I definitely agree that it's been a rotation to quality. One of the big things that happened in our industry specifically was a massive deleveraging event on October 10th. It was the largest single day deleveraging that we've seen to date. And as a result, we saw a lot of people paring down their risk in the portfolio, specifically in the altcoin space, and bringing it all back to the high quality assets, especially the assets like Bitcoin and ETH that often act as the margin assets in this industry. We saw this very similar size event happen in Q4 2022, and it does take the better part of a quarter to basically see everything shake out. The OTC dealers have to pull back some of their loan capacity. Ultimately, people reshuffle the portfolio, and having all this coincide in Q4, where there might be a bit of tax loss harvesting or just kind of resting on the laurels of what was otherwise a pretty good year for a lot of the institutional players, contributes a bit to that sell pressure.
And so with that deleveraging event, how did that set the stage for what we're seeing now? Particularly, I saw a figure this morning about $700 million in liquidations just in the last 24 hours.
Yeah. So that day, October 10th, I believe the figure was around 19 billion of liquidations happened within a 24-hour period, which was massive. And what ends up happening there is that your portfolio ends up materially mismatched. A lot of people are running market neutral strategies. They had to go and rebalance because they lost some of their position that was liquidated on one side. And then ultimately they have to sweep everything back in and say, how am I going to go and rebalance everything? And so what we saw there was this rotation of quality, as you said. The altcoins, the lower liquidity assets were hit materially worse. That's very typical of a liquidation event and the ensuing weeks to months in crypto. It takes a bit of time for the base to form there. You usually see it form first in the high quality assets like Bitcoin and ETH, and then once people are comfortable that we've gotten past it, it can extend back to those longer tail high beta names.
All right, so Matthew, bottom line for investors, are we looking at a temporary liquidity shock here, or is this the beginning of a deeper,
There's 3 gallons of ice melt in the closet.
I very much think this is the beginning to actually more like the middle of the liquidity shock. The last time we saw something this large, it took 2 to 3 months. We're already 2 months out from the event. Luckily, the timing aligned in 2022 with when this event happened as well, and so we actually have a very good analog for us to go and look at. And I do think that this resolves itself pretty shortly. The market's already starting to show signs of it. We're seeing leverage already been taken out of the system. We've seen some basis collapse.
In my utility
which is
room.
really helpful to showing that people have taken off the remaining positions that they need to go rebalance from. And so I very much do think this was a short-term shock event that the market is mostly recovered from, but it does take a little bit of time to get everything in place, and that Q4 element I mentioned does contribute.
Matthew, thank you for being with us for the insight on this crypto sell-off we're seeing. So far today we're seeing Ethereum, Solana, XRP all down more than 9%. Bitcoin currently down more than 7%. That's Matthew Sheffield, head of investments over at SharpLink. Coming up next, we've got the disruptor. We're going to take a look at CrowdStrike after the company's price target was raised at multiple firms. That and more when we come back.
I'm gonna have to go do a couple errands. I gotta buy some bulbs.
Getting back into the markets with Schwab
Schwab Network. Tune in 24 hours a day, 7 days a week.
Look at the weather report.
SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or
Six
just
what?
getting started, Charles Schwab offers a webcast
6 inches of
right
snow?
for you.
No way.
Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price
Today-
patterns, moving averages,
Today's
oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its
Should
finest.
stop around 12.
Either live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Caton here at our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets. Welcome in Nicole Petalese, host of Opening Bell and the Watch List here on Schwab Network. Good morning to you, Nicole. I hope you had a wonderful holiday.
Might
with
be
your
behind
family
my
and holiday
cleaning cart.
weekend as well. You know, we're a bit of red across the board today. We're seeing a bit of a tech sell-off. Bitcoin under quite a bit of pressure this morning. To talk to my last guest about some of the crypto trade. You know, what's catching your eye so far this morning?
Yes, thank you. I had a lovely weekend, and to you as well, Marley. I think what's catching our eye here is the sell-off that has been underway, but we can't deny that we saw a great week last week, where the S&P and the Dow each gained more than 3%, the Nasdaq was up nearly 5%, and with those moves, it managed to turn the Dow and S&P positive for the 7th month in a row. Even with that great move last week, the Nasdaq couldn't squeeze out the gain for the month of November, so it was its first loss since March.
I bought a few extra large bags that we were going to get.
Day 1 of December, but
We haven't got them yet,
more optimistic than
so I got
pessimistic.
18.
I'll start with that you had Google, Nvidia, and Amazon, all with price target raises. You had Tom Lee, who's very well respected on the street, just talking about the end of quantitative tightening for the Fed, which actually essentially ends into quantitative easing, and that then follows a market rally. Also, we have the Santa Claus rally idea. Our tokens seemed more positive
But I think
than
we're
negative. And across the
well
board,
enough
Bank of
until
America,
the new year
HSBC,
comes.
JP Morgan Stanley, and Deutsche Bank all have targets next year that are 7,100 to 8,000. So it seems that more folks are expecting more gains, and some of which crypto you mentioned, for example, Tom Lee talked about 100 new highs by January. January, you seem pretty positive on that. So I would
You
say
can see if he
that
has any ice
real
melt.
estate, healthcare, those are the laggards for the day. That there's
Get
still
a couple
lot of
big bags
positive
of it for the rest of the
in
year.
market. I mean, we had an incredible run last week, so not surprised to see a little bit of a market coming off the table.
Yeah, my previous guest from Sharpling completely agreed with Tom Lee's sentiment. This is what he feels a temporary liquidity shock in terms of the crypto markets and expects to see everything normalize here. But I want to talk about Airbus. We've seen Airbus under some major pressure. They had some news that they had to resolve a major software glitch. Can you walk us through this story? And also, has it been fixed?
Yes, and the answer is yes. It's over it was 6,000 planes, and only 100 are left to sort of fix this and modify the possibility of smoke risk linked to the engines. That came from the NTSB to Airbus, and so they had to hastily start to recall these flights. They had significant grounding of planes. However, they tried to do it very quickly. In fact, Treasury's Transportation Secretary Sean Duffy said they've made great progress and we won't see delays and such. And so it seems to be a modification, a fix that was needed. The company apologized for any issues or delays that you may have experienced. Thanked everybody to appreciate what their motto is, which is safety over everything else. It just comes at a time when we just got over the Air India crash for Boeing. Another Air India plane, a Boeing plane, had to be, grounded in Hong Kong. So there's always this sort of question about Airbus and Boeing and safety risks. You just don't want to hear it, but this one seems to be really, it seemed very, active that they wanted to get ahead of this. As far as how these stocks are doing, I mean, Boeing has been a winner. Year to date, it's up 6.6%. And so, it's off its high of 242, but it has been a winner. And then when I look at Airbus year to date, that's at 43%, a much better chart. Went from $145 up to $255, and it's trading $229 here today. So that's good news. And you know, it just came a weekend where it's Thanksgiving travel, and you just don't even want to have one issue for a delay. But don't forget, with all that weather, there were cancellations, nearly 3,000 cancellations, and over 21,000 planes delayed because of weather, nor'easters, and such. So it sort of just went into the mix of the chaos of this kind of weekend in the first place. Marla.
Certainly was chaotic, Nicole. Jenny Horn still trying to get home from visiting her parents for the holiday. I think she did make it on a plane this morning, but has been trying for the last 36 hours to get back to us here in Chicago. But we appreciate it, Nicole. That's Nicole Petalides. Now it's time for the Disruptors. George Tillis, our senior markets correspondent, is here with today's company. We're talking about CrowdStrike ahead of their earnings. So as we have take a look at CrowdStrike earnings tomorrow after the close, they're getting some analyst action here from CrowdStrike.
Yeah, it's quite interesting going into the earnings tomorrow. Yeah, CrowdStrike is certainly one of the leaders. It's a consistent leader in endpoint protection for cybersecurity, threat intelligence, cyber attack responses, both in the private and public sector. And this group overall has actually performed quite well, relatively speaking.
I tricked you.
One would say, because one could say that cybersecurity is not a discretionary component of corporate or even public sector spending. So for what it's worth, this group has done very well. There's been quite a bit of consolidation in this space as well, which adds, of course, to pricing power and less competition. One of the things about CrowdStrike is if you look at their ongoing performance and earnings per share, in fact, if you look at the earnings per share estimates for the quarter, they're expected to be quite modest, only up about 1.23% at 94 cents compared to 93 cents last year for the same quarter. Last quarter,
It should stop snowing here soon.
So we're not expecting sequential growth, meaningful sequential growth in earnings, but also year over year. The sales are still expected to be up higher by 20% compared to last year. And this is important because one of the things that's been going on with CrowdStrike is being more flexible on their threat intelligence platform, their Falcon platform. They've expended quite a bit of money in the past year to make it more flexible for all consumers of their products. They did demonstrate last quarter 40% growth in average recurring revenue, but also from a
Should not be too much of accumulation. Should stop here soon.
So their margins have been growing. EPS has been challenged because of spending. But valuation also, if you look at it from a balance sheet standpoint, $5 billion in cash gives them flexibility. So the quarter coming up is expected to be quite low. So any benchmark beat may end up being a positive catalyst. I think that's maybe why we're seeing some of the analysts here, Marla, like KeyBank, they increased their target to 570 from 510. And also JP Morgan raised their target to 580 from 500. Both of the firms maintain an outperform rating as we move into earnings.
And it's a very interesting setup coming into earnings. In the last month, they're trading down about 7%. The last 6 months, up about 7%. So as you structure this example trade with this earnings report in your trade, how would you approach this, George?
Yeah, so this one I'm going to go bullish on this one. So be mindful, we do have the earnings coming out. What I'm going to do is December monthly, so about 20 days to expiration to give us some time flexibility here. There's a possibility we do see a gap lower and maybe a stall out or a stabilization in price right around the 100-day moving average. So I'm going to use that as a proxy of support. And essentially what I'm going to do is I'm going to sell that December put spread. So we define our risk and return here. I'm going to sell the 475, 465. So I'm selling the 475 put, buying the 465 below that. And altogether, I'm harvesting in this trade about $3 a share in premium or $300 a contract. So the whole premise behind the trade is holding, at the very least, the 475 price between now and expiration. Again, that's still below the 100-day moving average. That's your max profit of $3, break even 472. And you have to consider the risk, which is $7 a share. That only occur by expiration at 465 or lower on the position. So if you're more neutral, if you're kind of bearish or sensitive to challenging environments going into earnings, maybe don't structure this trade. But it does, again, like I said, give some flexibility just in case we do see a gap lower, and maybe in sympathy with the markets, selling off the next couple days or so.
Yeah, right now, CrowdStrike trading at 504, down 1% earnings tomorrow. George, I want to say thank you for being with us to walk us through some of the analysts.
Say thank you to me, baby.
Earnings, as well as that example trade. That's George Tillis. Coming up next, we've got our 360 round. We're going to take a look at NVIDIA, the recent volatility around the AI tech giant, some of the major headlines driving those moves. That's next on Trading 360.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track
What was resistance?
up to the minute news and insights.
So this here is called you have the 200 EMA as resistance level. And on that 200 EMA, you have almost like a rising wedge or an ascending triangle. And then on that third touch, that's the sweet spot, as we'd say in baseball, on the bat. So on that third time, you break it, we hit the 200, and then we pull back and respect that 200 EMA. Always when you have a breakout, I've said this over and 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 over again, that they'll pull back to the previous resistance and then break out just like it did here again. This time we had two confirmations. The 200, you had the triple top, you had the 200 EMA and the 21 EMA with a hammer. So that's very bullish right there. If you were watching the trade and you missed this one and it pulled back on you again, that's called a hammer, and that's very bullish. The head of that hammer is above the 9. See, it's respecting that 9. As long as you're above the 9, that's where, put a mental stop and say, okay, if we don't hold here, we can come down and hit the 21 again, or I get out now while I'm ahead. But if we hold the 9, it can still come up and move on up. Now, look at the clock. It's 11:50 Eastern time, so it's getting that time, Now I got to go head out and get some bulbs. I really don't want to get out in this shit. Missouri drivers can't drive in the rain, and they can't drive in the snow. And I can't think when it's cold. Marley's got some young boys squeezing around.
Hey, Marley. So NVIDIA's doing great. Like you said, earnings were a blowout. And if we look to hyperscalers' earnings calls, you'll see that the big four, Meta, Google, Amazon, Microsoft, they all said they're going to increase their 2026 CapEx spending. They're accelerating. And those, we're talking $100 billion for some of them in 2026.
So we called this off the orb.
So as a business, NVIDIA is doing well.
This would keep you in the trade too. We called it off the orb. It bounced up and hit the 200. We had inverse head and shoulders right here. So once it hit the 200, it consolidated. So a higher low, higher low, higher low, higher low, higher low. Do you understand? Higher low, higher low, higher low, higher low. This could come down and hit this, and I still would be staying in the trade until it broke this support line, and then I might sell it. So we're going to know right here any second. I'm using the bodies. Wicks are confirmation. The bodies are a destination. I just made that up. I just made that up. Well, the Wicks are confirmation. The bodies are a destination. Well, we hold support right here. Lady cuts my hair, looks at me and says, has anyone ever told you you look like Elvis? Looks are confirmations. The body of the candle is a destination. Let's hold support right out here. Hello. I had lunch, ate some chicken curry. I'm not in no hurry. Hit the 21 EMA. Well, it hold its stock today. We did great support. A wick is a confirmation. The body is a destination. I love higher high. Don't die. Thank you very much. Another hit single by the Washboard. Who's the best guitar player out there today? It's the Singing Day Trader. It's now 12 Eastern Time. Will we hold this support level here on the first crow? If we don't hold the crow, 68.31.19. We got to hold it. If not, it's going to go down to these other moving averages. So would I jump in here? This is a bull flag. Nvidia. Come on, Sam, say it for me.
Pro traders.
My point is that they're not the same rate of change on EPS.
Follow the
George.
headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a...
Well, I must say, I've been around here for about 21 years. And I think Marley wins the cleavage contest. She has some big boobs. And they're almost perfect.
Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks.
Probably sag a little bit, but they're still good looking.
And more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Sam Varnas, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Well, we held support. They were at 250 and I didn't take them. The 68.50s. Oh, I was right. 285 now. 290.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Coming up on noon Eastern here at the New York Stock Exchange, and investors are regrouping at the start of the final trading month of the year. Let's get right into it with a check on your scorecard. Take a look at where the major indexes are as we hit the lunch hour. The S&P 500 is still under a little bit of pressure, off by just shy of 0.25% right now in terms of the sectors. Utilities is the biggest drag. That's followed by real estate and healthcare. We do have some gains in energy and materials, a little bit of movement in consumer discretionary. We'll see how this plays out throughout the session because we are off the lows. The Dow right now off by 0.4%.
No, back down to 250 again.
Just shy of 0.2%. Small caps.
Another 250 down here.
Link in the bunch. Russell 2000 off by 0.7%. Here's the roadmap for today's show. We'll look at example option strategies for Apple. Plus, the team from Lightfolio will be along with sentiment data on
235K.
stocks. And MongoDB is also on our radar ahead of its earnings.
Kind of nervous to jump in them,
Now
but
we've got the roadmap for today's trading action. It is time to bring in my co-host and trading veterans. You've got Tom White in our Chicago studio, and Kevin Ings joining us live.
Mister's down
from
20
the
bucks.
The band is back together again. All right, guys, caution seems to be the name of the game today as we kick off a new trading month, or maybe it's people just still kind of coming off of their holiday. Everybody's flights are, still making their way. Tom, what's your take?
got Darvis box.
Well, it's it doesn't look as bad right now as it did earlier in the session when we were down, 0.7% for the S&P 500.
maybe a little bit of exhaustion after a 5-session rally that we saw last week. The S&P 500 rallied 3.7%. NASDAQ jumped back 4.9%, but still finished November down 1.6%. So we got through maybe a lot of that early month volatility in the markets. If you look historically at December, if we're above our 200-day simple moving average, typically we see gains of, on average, of about 1.2%, according to historical data that we've seen in the market. So it's one of the stronger months out of the year. So maybe some of that momentum is going to carry over into December. Typically, we'll see some selling of maybe losing positions, and then they pile back into trades that might be winning at this point. But if you look at the reasoning behind the rally that we've seen that last week of November was the fact that, hey, we're going to get a rate cut next week, right? That's about 85 to 90% chance that we're going to get that rate cut. Earnings are still better than expected. And then you throw in on top of that early data as far as the consumer, that maybe we were going to see some weakness this holiday shopping season, isn't coming to fruition at this point. So a lot of signs pointing to the upside here, but we are off of those session lows, and we'll see if we can turn positive here as this momentum may continue.
Pointing, yeah, we're certainly seeing a little bit of a shift here. Maybe people are finally recovering from not just the 5-session winning streak and some exhaustion from that, exhaustion from too much turkey. Kevin, what's your take when you think about the kickoff of this new month?
So coming in on a Monday morning, the biggest thing that I noticed that was affecting the market
always clean as Jim.
Markets, right? You had Japan down about 1.9%. You had the DAX in Germany down about 1.5%. It closed down just a little over 1%, but it was hints, hawkish talk out of the Bank of Japan about potential rate hike coming in the future. It was Airbus and their problems. Remember that's traded on the DAX. So I think there were pressures there that simply affected our futures overnight. I didn't see any news other than maybe Bitcoin extending some of its losses, but frankly, that shouldn't affect overall stocks. It does, but it shouldn't. And I think the foreign markets weighed, and that's why I think you saw the markets open down. Now they're kind of fighting their way back as we get to midday. So if you think that the U.S. economy is solid going forward, certainly the Christmas shopping so far has been pretty positive, but also, here's another thing. December 1st triggers the end of quantitative tightening. I think we shouldn't ignore this topic because I think the fact that now, when securities are maturing, the Fed isn't just letting them run off the balance sheet, they're reinvesting in treasuries. That'll put downward pressure on yields and probably be good for stocks going forward. So I think there's some bullish undertones to this market. I thought the NVIDIA news was bullish, but the foreign markets were all lower, and lower by a lot, frankly. So I think that weighed on our markets to start the day, Diane, so we're digging ourselves out. Because let's face it, once the U.S. markets open, everything changes and the focus is on the U.S. markets.
All right, let's get into it on NVIDIA then. Got chips on the table there. The heavyweight announcing, the AI heavyweight, that it's investing, not going to it. It's investing $2 billion in Synopsys. So you see Synopsys rallying on this news. That's the chip design software maker. I know you guys know, for those who don't know. Tom, what's your take when you think about this stake?
Well, it's not surprising. I think the acceleration to get away from CPUs into GPUs and this investment into Synopsys is not surprising at this point. $2 billion. I think the average selling or price of
you look at the 20-day, we're
$14 a share, so you're seeing the stock pop there. But the reaction
definitely
to NVIDIA
at a
has been,
resistance level.
A complete reversal. Initially, the stock was down when markets were down, but now up over 1.5%. In today's market, still down about 15% from those lows. But if you look at the engineering and compute that NVIDIA is trying to do, so their chips are already accelerated, right? They can do a lot more than the traditional CPU.
You pull up the 20-day 1 hour SPX, resistance today, or Friday. And today's Monday. So we come up and hit it for the 4th time, or we just consolidate for a couple of days and then Going to have a sharp pullback, sharper than the one today. To 67.71.17 this week. $80 dip. Is that 80? 30, 60, 65. And we came close to it. We had a 60. We had almost hit 68. So actually, $20 shy of the 200. $68, no, $100. No. 20, 30. Let's just call it 30. Yeah, I gotta get some bulbs. I have to get some snow ice melt this week. NVIDIA, SNPS. Oh gosh, SNPS. Snoopsy, Starbucks nearly $39 billion fine. Starbucks nearly $39 million fine. NVIDIA's $2 billion stake in Synopsy. Strategic partner with NVIDIA to link an engineering software closely a chip maker. Damn. That's an expensive stock. NVIDIA, $2 billion stake in Synopsy. Anybody know how to pronounce that? 'Cause I sure in the heck don't. Starbucks nearly $39 million fine. Wonder what the hell is that about? Being in the now. Mr. shares are down 11%. The company said it has set up $1.4 billion US reserve to support dividend payments. Starbucks will pay more than $35 million in restitution to over 15,000 workers. You gotta be frickin' kidding me. And they did a jumping jacks over this son of a gun. Well, that's Starbucks. Uh-oh. 3 black crows with the tweezer bottom. I missed it by seconds. Oh, gosh. Oh. Are we going to come back to the orb? Volume slowed down quite a bit. Well. Yeah, I need to go get these bulbs and do this job.
Apple has a lot of good news, and it showed the trading community that it's still an iPhone company, right? And the iPhone sales are what really drive the prices of this stock higher. And the iPhone 17 has done a little better than people expected. Now, we deal with the problem of valuation. It's 34 times forward PE. And it's got a PEG ratio that we talk about a lot on this show. You wanted around 1, it's 3, Diane. So they've had a lot of good news. It basically made all of this big sell-off that it had earlier in the year, and it's now just reaching new all-time highs again. So Apple's got a lot of great news, and you know they're always buying back their own stock, so that's always out there as well. The question is, can it hold this valuation going into the end of the year and the beginning of next year? Because this stock, last 3 months, 38% off its lows, Diane.
Okay, so it had a lot of love over the past few months and, you know, difference than how it operated earlier in the year, and that's what's put it in the middle of the pack for the Mag 7. Tom, what's your take when you look across Apple as it ticks positive now?
Yeah, getting extended a little bit, but if you look at the data, maybe it backs it up. Initially, iPhone 17 sales domestically here in North America beat expectations. And then, a couple weeks ago, there was data out of China where they're taking 25% of market share there, up 37% from year-ago levels as far as sales for the iPhone 17 models. So that's a benefit for them. Counterpoint Research came out with a note and said for the first time since 2011, Apple is going to probably or most likely surpass Samsung as far as deliveries of OEM phones for the first time since 2011. So that's pretty, big news for this company, and that's why it's on the back of probably the best year that it's had as far as revenue and sales growth numbers here to kind of back up this move that we've seen. It's gotten a little bit ahead of itself as far as valuations goes, Kevin's mentioned, but at the same time, maybe they're growing into that valuation just due to the fact that they're selling more of their iPhones. I think one of the key things that you can probably also relate to this is, when they talk about CapEx spend, yeah, Apple's lagging in AI, but maybe they don't need to be at the forefront of AI. They create more partnerships, maybe with Gemini, just like they did with their search engine on the iPhone. Maybe they buy Perplexity. They've got enough cash on their balance sheet to do something along those lines to improve Siri, which isn't supposed to be updated until mid next year at this point. So maybe that lack of CapEx spend is actually helping Apple here a little bit, Diane.
Okay, that's a good point. All right, let's get into these example trades. It's interesting. I feel like I kind of know the direction both of you all are going to go. Kev, let's start out with you. What's the approach you're taking?
Yeah, Diane, when I look at Apple, I look at a stock that, between now and the end of the year, doesn't have a real, there's a very small chance, unless the market sells off, that Apple will probably sell off. But it will follow the rest of the market. So what I did in Apple is something very range bound.
What'd you do?
Slightly to the bearish side, about 12 short deltas. I just went out to the December 5th, this week, Diane, and I sold the $275 straddle in Apple. Selling the call, selling the put. Then against that, I bought the 280 call. I bought the 270 put. So I created an iron butterfly.
Oh!
Where you're short the straddle, long the wings, and
that's
all
a band I saw.
Is a range-bound
Iron
strategy.
butterfly.
If it drifts towards $275, that would be ideal. Wherever you think the stock may end up this week, that's the strike you sell. So I sold the 275 strike, collected about $3.80 on this iron butterfly. So what does that mean?
It means
the
you're
most
stupid.
You can risk is $120 in either direction. If it stays in this range at or near $75, you can make somewhere close to $380. You won't make it all because you are short straddle. You're going to have to cover some of it, Diane, but this is the definition of a range-bound strategy. Selling the 275 straddle, buying the wings, you're just looking for it to stay in this range right here, Diane. Tom?
So going just a neutral strategy, but actually slightly bearish because the stock has moved up to 279 bucks on this. But let's break it down. December 5th weekly options. So just 4 days to expiration. Kevin's selling the 275 strike call input. There's that short straddle. Then he's buying a strangle against it to make it risk defined. He's buying the 275 put, or the 270 put on this one, and buying the 280 strike call. So you're buying a strangle and selling a straddle in the middle there at the 275 strike. That's where you want the stock to end up. You can see here from the risk profile, you want it to be at or near 275 over the next 4 days because this is positive time decay and contract in value where you can buy it back cheaper because you're going to have some assignment risk because you're short the call and put on the 275 strike on that one. Break evens on this one where you want it to remain between 271.20 on the downside if you collect 380 credit and 278.80, which is we're already just slightly above on that level to the upside as your break even. Now, collecting 380 credit, you're going to have $120 in risk, but that's all the way below 270 on the downside or above 280 on the upside. So really short-term positioning. slightly bearish on this strategy, taking advantage of positive time decay with the expectations that, hey, maybe the market might pull back a little bit. Maybe Apple will pull back a little bit from these all-time highs. But that's what you're looking for, a little bit of consolidation at or near that 275 level. But you got a nice wide range here of basically about $8 to remain between where you can be potentially profitable on that. So I looked at something a little bit different on this one, Kev, where I looked at the last 2 Decembers, where Apple got initial positive data, retail sales got positive data going into the month of December, even though the stocks were pretty elevated at that point. If that same thing happens again, this strategy takes advantage of a move to the upside, which we've seen the last 2 Decembers. That doesn't mean it's going to happen again, but this takes advantage of it if you think it's going to continue to move higher to the upside. So going out to the December 19th monthly options here, we're going to buy an unbalanced call butterfly. We're going to buy one of the 277.5 strike calls. We're going to sell 2 of the 287.5 strike calls, so $10 wide bullish call vertical in there, and then we're going to buy 1 of the 290 strike calls. So an unbalanced call butterfly here, where you're going to spend roughly about $340 debit on it. It's probably a little bit higher on that, but what this allows you to do is take advantage of some upside while reducing some of the risk on this bullish position here. It's trading currently about $3.90, so it's about 50 cents higher due to the fact that the stock has moved higher on this one. So you can adjust strikes if you want on this. But Kevin, when you look at a trade like this, you're offsetting some of the costs on it, but the debit you pay is going to be your risk on this bullish unbalanced call butterfly.
Yeah, long a $10 call vertical, short a $2.50 call vertical. It's trading, it looks like it's trading about $3.90 now, but that $3.90 can go at or near $10 on the upside if it were to move towards $287.5. That would be a new all-time high, by the way, and the minimum, if it were to go way past,
oh man, look at Oracle bounce.
$300, you still lock in about
called that Oracle out.
$60 profit on this time. So this is clearly a bullish. It's about 22, between 22 and 23 long deltas. You're looking for a move to the upside, and you're using the short 287.5, 290 call vertical to just decrease that net debit as much as you can on that spread. So a good way to look at a using the butterfly, but in a bullish tone where you lock in profits.
See, look, I mean,
yep, you got 2.5 weeks on this position. Anything above,
I think people make it a little bit more difficult than it actually is.
What debit you pay on this
like today when I called out Oracle this morning first thing. Did you see what I see? Yes. If you can count to 3, you can trade it with me.
But nearly a double in profitability,
One of them,
even above
2 bits and a freebie.
Bullish trade, looking for
Boom.
the same December sentiment
up to a double. Look at here.
For the last 2 years.
Look at here. Look at here. Look at here.
Gave, especially with those historical patterns, great perspective there.
Resistance. Resistance.
We've got cash tags coming up. Andy
Resistance.
from Lightfolio joining us with a look
even for a morning scalp.
Focus on toes. Stay right here on Schwab Network.
To double top.
Back after this break.
Or yesterday's high, Friday's high, or an all-time high right up there, all within 24 hours.
Hi.
Hello.
I'm Jane, and I'm his mom.
Oh, I'm your
You
mommy.
could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
You had a chance, Betty, till your mother showed up.
When the market moves, we're on it. Getting the reaction, the strategy, and
Nothing here.
in real time.
Say it.
Stream Schwab Network at schwabnetwork.com.
If I dated Sam, I'd say,
Trading at Schwab is powered by Ameritrade.
all I want you to say when you're making love to me, honey, is say Nvidia. Nvidia. That's all you got to do. And I'll marry you. Nvidia.
Trade brilliantly with Schwab.
Whether you're an experienced investor
Oh,
or
God.
just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader?
Yeah, I am.
Our active trading webcasts are designed to help you develop a deeper understanding.
Been active every day for
technical
21
analysis,
years.
Options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
You might get to talk to Washboardjim.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall alongside Kevin Haynes at the SIBO. As you know, we've got you covered from exchange to exchange and beyond. Time now for our cash tag segment. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of Lightfolio. We're taking a look at payment stocks with a focus on Toast. So you've got a look across Toast and other payment names like Shopify, for instance. What stands out? What's the general overarching takeaway from your charts?
Yeah, the big takeaway is that Toast is a little bit of an outlier in the space. It's the only restaurant-focused point-of-sale platform that we're seeing show real momentum right now, and strong usage growth, expanding footprint, all the things you really want to see out of a point-of-sale platform in the restaurant space. And when we look at web visits for Toast, it's really been excellent predictor historically of the adoption by restaurants. You know, restaurants, especially some of the smaller ones, will do a lot of due diligence before they select a new provider, and Toast is really surging here, beating Clover and Square in a big way. And so we think that Toast is separating itself from the pack in terms of restaurant point-of-sale systems in a very big way. We think that they're winning the market. Now, the stock is expensive. It's priced in a lot of growth. It's gotten beaten down a little bit recently as growth has fallen out of favor, but they've got a long way to go to prove that the valuation they have makes sense, but they're starting to prove it according to Lightfolio data. And what we're seeing is not only are they, separating themselves from the pack, but the web visits are accelerating in nature, which tells us that they're really starting to move in a way that the other competitors just aren't. And I think that the adoption by small businesses, small restaurants across the country is really starting to pick up. A lot of it's their AI features that they're starting to offer. Their product is better than anybody else's, and it looks like Main Street's catching on, and hopefully Wall Street will soon as well.
That's not true.
You know, Andy, when I think of a company like Toast and the things they do and how they revolutionize the restaurant business, I think of small businesses that you may be talented chef and talented in cooking and making out a menu, but you're not good at all the organizational things that it takes to be successful in a restaurant. And this looks like, remember, we used to rave about how Square had really helped small businesses. This just sounds like a better and more comprehensive mousetrap that Toast is building here. Is that what it is? And can they do this to other small businesses? Can they expand? So, because what I read, the biggest problems they have is they've got to hit their goals, right? Free cash flow goals and growth goals. If they can do that, then this company is almost debt-free. They've got good metrics, but can they keep it up? Are they good enough to keep it up? Because it sounds like they're really building a better mousetrap here, Andy.
Yeah, they definitely are. And when you look at their AI rollout, I think that word is starting to spread that they're delivering some real operational wins. Like you talked about, a lot of restaurateurs are not phenomenal at catching margin leaks or improving menu profitability. They want to focus on what they're good at, and that is making food for their customers that their customers love. And so when Toast comes along and allows them to, get better at the business side of their business and drive high ROI local marketing campaigns, work better with DoorDash, etc., that's what separates them from the Square payment systems or some of the others, and it's because of their focus on restaurants that I think they're starting to really establish themselves as an outlier in this space. So I don't see their growth potential really being that much horizontal, but rather a deepening of that vertical integration in the restaurant space, where there still is plenty of room for growth for this company, and they seem to be getting traction at just the right time as Wall Street starts to question whether or not the growth projections are sustainable.
Question that I have to your point about the growth projections, and because they're a payments operator in the restaurant space, when there's consumer weakness, you can see why Toast may have suffer some weakness. And then in your chart, Shopify obviously outperforms it. Is that for Shopify? Is it because it's just more diversified compared to Toast?
Yeah, it's because it's more diversified because of Toast, and because Shopify is attracting every 15 to 29-year-old that wants to start a drop shipping business is going to Shopify in droves, and really running up the scorecard for Shopify's overall customer growth. Whereas Toast doesn't have that advantage. You have to be a restaurant, you have to be established. But what they are executing on is making a product that makes those restaurants more viable, more profitable businesses, and that's exactly what these restaurateurs need. And when we look, not just objectively, like Folio data is popping, but when we look subjectively at the way that their customers are talking about this software, is that it is changing their business for the better, and they are deepening their integrations with it, which we think will lead to very low churn rates in the future, along with high growth. So those are the two levers I think Wall Street should be looking at, and I think they're in for a pleasant surprise in the future.
Okay.
Yes. So, Andy, when I look at this kind of a company, and it's only trading in the mid-30s, but as you mentioned, it hasn't had a good run. It was almost $50, and now it's here. And I guess what I'm asking, it was part of my first question as well, Andy. Is the restaurant business, that you're right, a new restaurant opens every week, right? We're all trying new restaurants, and we see new restaurants. Is that enough to sustain this company and get it like where its metrics? They want free cash flow to $650 million by 2026. They want 20% revenue growth. They want to keep that going. That's what they need to hold investors' interest. Can they do that, Andy, with just restaurants?
Yeah, I think that they can, and I think that they will. I think they are doing it. The best indicator that like Folio can ever see that a company is executing on its top line goals, on its goals for Wall Street, is how it's executing with its customers. And it's very clear that Toast is not cutting corners. It's very clear that they are delivering on their promises to their customers. And that's going to give them pricing power into the future, which is the ultimate driver of that free cash flow. Low churn, growing number of restaurants that you have pricing power with is how you get to the metrics that Toast is promising Wall Street. And we think that they should be able to come out to Wall Street and say, look, things are going really well. Just listen to our customers. That's all you have to do in order to understand that things are going very well for this company, which has a history of executing at a really high level financially and from a low debt perspective. So we really like what we see, and we think that the companies, Wall Street should be comforted by the success that this company is having with its core customer base and in expanding its core customer base.
All right. right, thank you, Andy. That is Andy Swan,
Damn.
co-founder of Legfolio with
Andy.
cross payment stocks and Toast, especially as how it stands up there.
We have ascending triangle.
Toast. Let's bring Tom White
Go back
in
to
here
the
alongside
200
Kevin.
SMA.
Tom, I want to get your thoughts before you guys jump into that example trade.
Yeah, you take a look at annual recurring revenue. When they reported earnings earlier
We
in
have
November,
a
that
resistance
was up over
line,
30%.
and
You
we have
look
higher
at,
lows.
The number of clients that they have.
What does that make?
156,000.
A 1,
I think that's
a
interesting.
2, a 1, 2, 3. You're right.
gross
It's
payment
called an
volume
ascending
increase,
triangle.
last quarter, year over year, to 51.5 billion. I think one of the biggest things is, yeah, they're
How
focused
did you
on
figure
restaurants
that
right now,
out?
but once they get that figured out completely and maybe stop
Yeah,
growing as much,
James,
they can just
I
parlay
was
that
next
into
door
other
listening
retail
in through the
customers,
walls,
and that'll grow their
I
business
heard you calling
even
out
more. So maybe
the
do it right the
SPX,
first time,
an
and
ascending
then
triangle.
expand your business that way that maybe
Is there any
others
way you can
in this
explain what
space
that means
did,
to me?
previously. I think that's
I'm
gonna
new
be
to
one of the
trading,
benefits.
and
But Kevin, you mentioned the fact that the stocks pulled back about 30%
I saw you on
from
YouTube
52
singing,
highs
and
that we saw.
I thought it was
in
Elvis for a
August,
second, but
for this stock, it
was
pulled back pretty
Washboardjim
significantly. It fell out
writing
after
another hit
earnings.
record.
How do you want to look at this one from an example trade?
I think you have the best voice next to Elvis's.
Of trading a stock that it's
Could you tell me what the ascending triangle means?
Worst case scenario, your
Yes,
risk is not.
I can do that.
It's not a $500 stock.
Thank you
it's not
very much.
$250 or a big number like that. It's $34.85 where it's trading. So that gives
See,
you
we
choices
used to call it
on the
rockabilly,
strategy that you want to do. So
and
when
I
I
added a
looked
little
at,
bit,
I looked at how
little bit of
busy
blues
it is
to it.
around that
Come up with my own kind of
$32.50
music.
range. It seems to get there and kind of stop. It's come
Were you
through
able
a
to
couple
sit
times,
there and
but
watch
not
me
very long. So Tom,
when I
what
lived in
looked
Hawaii?
at is just something in the cash secured
Did the
put.
comeback tour?
I went to the
Yeah,
the December
that was
12th,
me. That was
just a
Presley.
week and a half, about 11 days from where we are now, and I sold the 32 put for about 40
Me and Don
cents.
Hull were buddies, and
That, if you were to buy this stock, if it were to break $32, your entry
so
would be about
an ascending triangle is a bullish pattern that consolidates with higher lows and a horizontal resistance.
Like a lot of money, 40 cents.
Once it squeezes to the end, and if you can count to 3, you can trade with me.
For a year, that's
So we have a
pretty
1'em,
solid return or
2
pretty
bits,
solid investment. Now,
and a freebie
there is
resistance.
risk down to zero.
Now this is called the
When you
sweet
sell a
spot.
put like this, but like I
Livid
said, we're not
goose, you know what a
talking
sweet spot is on a
$500
baseball
stock
bat?
here. So at worst, if you sell this for 40 cents,
I'm
your risk
picking
is
you out of the crowd.
$3,160 if it were to go to zero.
Livid goose.
So selling that out of the money put.
Are you
the,
playing with yourself, or would you like to answer this question?
Probability of finishing out of the money, about
A sweet spot.
82%, Tom. Could you up that and go a little closer? Sure you can.
You're correct.
But if you want to look at that level where it seems to firm up, it's about $32, Tom. So I went with the cash secured put.
The sweet spot
taking advantage
is a part of the bat
reasonable
where
or low
if you hit the
stock
ball at
Yeah,
that
let's take a look
certain
at this.
spot,
December 12th. It's only a week and
you'll
a half
get
until
the meat of the ball. You'll
on
get the
this one.
best
This is
hit,
one of those strategies you can
the
do
solid
repeatedly
hit,
if you have
and
a
the ball
level,
should
as
go
Kevin
faster.
mentioned, where you might be
Should
comfortable owning
be at a good
shares if the
aim
stock
wherever you
does
aim it,
fall below
but
the strike that you sell.
you can hit it
in
longer,
this cash secured put. These
and you
12,
probably won't
selling
break the bat.
32 strike put, collecting 40
Now,
cent
you could
credit.
hit it
Yeah,
at
you're
the
always gonna
tip
probably collect about 20,
and
25
create a
cents
foul
on that
ball,
right now. So your potential
or you could hit it
reward
at the
on
base
this
of the
is
bat
less,
where you
but
might break the
also,
bat.
your
And either way, you
probabilities
could
are
break
better
the bat
because
and have
stocks
foul
move
balls. But
from
if you
session
hit it,
lows on this one, you can go to the 32
and
and a
it's
half
usually
strike
about
put,
5/8,
and then
3/4
maybe
of the
collect
way
about
up the
40 cent
bat
credit on it.
is the
Depends
sweet
on where
spot.
you're comfortable owning the shares at the stock falls.
So this
If
is the
stock
sweet
falls
spot
below
of an
32,
ascending triangle.
Even on this one, if you collect 40 cents,
I want
it's
them,
gonna be about
2 bits,
31.60 to the
and a
downside. That's where
freebie,
you
and I
would
call the
purchase the stock
breakout.
if you were
So
still
you can
short,
squeeze, you
and
know
the
when the
stock was
squeeze is
below
going to
and you got
happen.
assigned,
You have higher
that
lows,
short put that
and
you
that's a
sell on
very
this one.
bullish
It's
pattern.
neutral to bullish. You're not
If you
collecting a
notice,
lot of option premiums,
a
as
one
you
'em,
mentioned, but at the same
2
time,
bits,
it's only a
freebie.
$34 stock at this point. But
Well, the
this
bodies
is
of the
strategy
candle
where I
hold
just
the
wanna
trend
keep the
line.
credit I collect,
A 1'em,
or
a 2
I'm
bits,
willing to buy the
and a
shares if the
freebie,
stock
and a
continues to
boom.
fall below
So that's
maybe
the
that
sweet
support
spot.
level of around $32 a share. there. So two ways to look at
That's
this
when
and kind
the
of make
higher
it.
lows start
The
to
risk on it
squeeze
is
to
the
the
stock is gonna
horizontal
go to zero.
resistance
Also
line,
on that one, Diane,
and
so
you get a
neutral
boom.
bullish here in toast.
Now, you can always say to yourself, do I want to go ahead and scale out of the boom? Because I know it's going to pull back and hit the previous resistance of a triple top. Or I just hold on and see if we go higher and higher and higher. That's up to you. Now, that's the new high of the day.
Connected to the markets with Schwab Network. Tune in 24 hours a day,
So
7
pay
days
attention.
a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The platforms and tools webcasts are
Spy did the same
designed to
thing.
broaden your knowledge of platform features and resources
This is a rising
available
wedge.
from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all,
It's an ascending
you can ask
triangle.
questions
Want 'em?
by chatting directly with an
2 bits
education coach.
and a freebie.
It's interactive learning at its
Ascending
finest.
triangle.
Tune in live or
Want
watch
'em?
on demand.
2 bits
Head over
and a
to
freebie.
schwab.com/coaching and start learning today.
Higher lows.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall live on the floor.
Thank
of the
you, Jim.
big board. Before we get to the breakdown, let me give you a
My,
check of your scorecard as we get
sister,
closer to the
she's
bottom
about your age.
of the lunch hour.
She wants to
We
know
are
if
off of the lows of the
she
session,
can come
but
over tonight
positive,
and
just above the
make
flat
you
line
dinner.
for the NASDAQ 100. The S&P 500 still lower, but off by just a
I have
little
to
bit
check
more
my
than
schedule.
0.5%. Dow lower by just shy of a
I've
half of a
got 5 or
percent.
6 of them lined
Small
up
caps lower by a little bit more than a half of a percent. But
in a
once again,
2-week period.
off
And
of
I don't
the
know if I can
lows. MongoDB
handle
is
one
set
more.
to report its quarterly results after the close of trading today. Analysts are projecting earnings of 79 cents per share on an adjusted basis. That would be down from last quarter. Revenue is expected to top $591 million, potentially mirroring the most recent
But we'll see what
quarter.
we
Time
can
now
do.
for the breakdown.
Might
Joining
fit
us
her
for
in.
that, it's George
if
Sillis,
she doesn't mind a
Senior
Wednesday night.
Markets correspondent. All right, George, as you look across MongoDB, what's the fundamental take ahead of its results?
George.
You look first off at the EPS estimates. They're actually expected to be down about 31%, as you mentioned, at 79 cents compared to $1.16 last year. Also down sequentially because last quarter the company actually surprised with a pretty nice profit of $1 per share. But nonetheless, if you look at sales, they are expected to be higher year over year by 11% at $591 million. I think that the culprit here is possibly expenditures to, of course, improve their open source database software. But one of the things about MongoDB, and I think this has been a challenge at the very least, looking at a chart over the last 5 years, I mean, the stock is higher by about 18%. They're actually morphing more into becoming sort of a mainstay, if you will, database company. In other words, from a database as a service-based company into one in terms of a platform-based enterprise company like Oracle. And I think as they're moving into that platform enterprise space more in line with Oracle, they're losing some competitive elements to competition like Datadog and
Well,
companies like
I'm going to go do
Snowflake.
my
Nonetheless, I think
errand.
what's important here for MongoDB is to basically demonstrate.
Just in case we get real bad snow and I won't be able to get the job done. But I don't think we are, but I don't want to take the chance. And it's important that I get this light in. So I'm going to run over to... Which one should I go to? Lowe's or Home Depot? Which one has the better prices? That's the question. Anybody have a preference? Anybody in the room? Randy? I'm buying light bulbs. Fluorescent light bulbs. So Randy says Lowe's. Lowe's is closer, and I'll do Lowe's. I guess I'll be back. Lowe's has a good selection. That's where I buy most of my stuff anyway. Let me see if they got the 32-inch light bulb at Lowe's. Lowe's 32-inch fluorescent Lowe's tube lights near me. They call them tube lights. Lowest price is guaranteed. Lowe's base type medium bipin. Okay, well, I think they have them. I'm going to get 4 of them. Watt, 32 watt. Wonder if I ought to, oh, I guess it might say select 32 watt EQ LEDs. That's what I'll get, the LEDs. God, them things are expensive. Dimmable. I don't need those. Okay. I'm gonna head out of here. I don't want to go, but I got to do it. Man's got to do what he's got to do. Lowe's is more of a homeowner. That's where I'm going. Home Depot is usually cheaper. Well, I say I'll be gone for about an hour. We'll time myself. I got to put the bulbs in too. And the temperature outside is 25 degrees. Bobby Shore says Home Depot is usually cheaper. Okay, we're going to listen to George and Mr. Spitty. Mr. Hickey.
Those volatility levels you mentioned,
and Tim.
Buying lower and selling higher. But Kevin, when you look at this, yeah, it's a long Vega trade, and we'll get some vol crush in the near-term options, but we're also going to get a vol crush in our long options also in that December 19, 330 call. So that basically means you're still going to need that move to the upside at or near. You want it for apex.
Might have hit resistance
at or near the 365 call that you sold, but at the same time, anything above maybe 335, 337 can be profitability just because of the potential adjustments, right?
Yes,
right.
Implied volatility is going to come out of both sides of this trade, but you hope, you expect the implied volatility in that front expiration to come way down closer to that December 19th. So this is a play that remember, you've used that right column on the things on the platform, you've lined up your strikes to the expected move, and you think you've given yourself enough dispersion between those two where that creates some edge in this trade, guys.
Now, there you go, Diane. If you're more bearish on this, put diagonal works, the same type of thing if you think the stock's going to fall post earnings. So it's about the strategy, not the direction.
All right, there we go. The strategy matters. Those earnings due after the bell today. That's going to do it for us today on Fast Market. I'm Diane King Hall alongside Kevin Hinks and Tom White. Download the Schwab Network app. It's available in the App Store and tune in 24/7 on schwabnetwork.com. Stick around. We've got Next Gen Investing coming up.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Happy Monday, welcome to Next Gen Investing. I'm Alex Coffey, joined today by Sam Vadas live in New York. Sam, I heard Kevin Hinks at the top of our programming today talk about the international nature to the pre-market sell-off and how things could dramatically change once the U.S. opened. And I gotta give a hat tip to him because things have dramatically changed as we've gotten into the heart of U.S. trading. We're hardly even lower now. What do you make of the morning's price action so far?
Yeah, perhaps no surprise given some of the developments we heard out of Asia overnight. I mean, firstly, what we're seeing is talks now of potentially expectations being priced into the market of the BOJ, that's the Bank of Japan, going to hike rates potentially this month. Now, that has been seen by the markets and interpreted as a change in tune. And why that is important for US markets is because the yen plays a big part in all of this, because this is seen as the carry trade, of course, so any strengthening of that, we do need to watch for any sort of unwind, and also off the back of the JGB yields, which are the government bond yields over in Japan, which have been spiking. We're looking at a 17-year high on the 2-year, which is the rate sensitive. And then, of course, we've been watching out on the long end as well. So that is something that has impacted the markets as far as our 10-year yield here ticking up over that 4% mark as well. So that is a significant development. Not to mention you had some downbeat data out of China overnight. We got some PMIs which didn't look too good either, both below the boom or bust line as far as official manufacturing and also the private gauge of factory activity as well. So there are a couple of things to keep an eye on as to what is driving sentiment in the market today. Seeing a little bit of a mixed picture across the technology stocks, depending on which companies you're actually looking at. No doubt there still seems to be some investor concerns here about these valuations and obviously the circularity of financing as well, not to mention, of course, what we're seeing in Bitcoin too, some of the headlines around that to do with China, but we are seeing that sell-off resuming once again. So we were down around 86,000 earlier today. So plenty of moving parts here for these markets. Obviously, we've got a little bit of a PMI numbers out this morning, stateside as well to chew on, a bit of a mixed picture there. But this comes, of course, as we look ahead to more earnings and, of course, as we approach that decision from the FOMC, which the markets continue to currently price in at over 80% as far as that cut is concerned, Alex.
Yeah, and of course we know overnight the U.S. futures markets are a source of liquidity for international markets and oftentimes a hedging tool. So if there's concerns overseas, but those concerns are a little bit more domestic, they still may go to things like the S&Ps or even the NASDAQ, hedge some of that. But as the U.S. wakes up and the trade takes over here, sometimes those dynamics and those fears don't really resonate, and you can see a recovery. But I'd even take it a step further, Sam, and say sometimes the simplest explanation is in. We see in NVIDIA that was trading around 173 pre-market, that's closer to 180 now. We see Amazon and Apple higher on the session, and the Magnificent Seven, that's indexed basically unchanged. That was down well over 1% just a few hours ago. So sometimes just a recovery in a couple of the really key stocks can change things. We got tons to go through, though, on the day. Speaking of Amazon, we'll talk Amazon and Alphabet and that partnership that was announced during FOMO with Marley. We'll trade a couple pre-earnings looks at MDB and Marvell. And then, of course, Sam, we got a slew of analyst adjustments on a wide variety of different stocks here today. So let's kick things off there, starting with Salesforce, a name that we're going to hear from later on this week for earnings. Got a little bit of an adjustment here from an analyst that I would say is largely still bullish. But whenever you hear price target cut, it really kind of puts a bit of a sour taste in your mouth.
Yeah, look, slightly we've seen as far as the price target cut here, but still expecting the stock to outperform here. So this was from Oppenheimer, lowering the firm's price target now on Salesforce to $300 from $315 and keeping an outperform rating on the shares. This is, of course, coming ahead of its Q3 results, which will be getting out later this week. This is a big focus on software this week. We do need to keep in mind, which has obviously struggled this year. So we're going to be seeing what these companies have to say. The firm, Oppenheimer, is comfortable, it says, with its estimates, and that is because of the fact that it's really being driven by pricing benefits they see for this company, as well as a strong agent force and data cloud momentum. So they continue to see positivity there. It's Q4 customer and IT spending surveys indicating normal end-of-year seasonality, they say, as well, and also with low expectations and bar to overcome this quarter. So that was exactly behind why they've lowered the price target here.
they say in their view this is a business that is in a transition to Agentforce, and Q3 earnings, this update may not catalyze new opinions here. So they do say that they should be a winner in the AI transition longer term here. So basically, as I said, they're expecting Q3 earnings to be fine, not extremely exciting, according to this analyst, because they are in the middle of basically this shift toward more AI products. And as we know, Agentforce has really been a big focus for investors, very much as far as the valuation here. They do think longer term they'll continue to benefit significantly from the AI boom. Now, as far as what we're expecting from this company post-Bell, I believe tomorrow, the estimates are for EPS of $2.85. That would represent 18% increased growth there, and revenues of $10.26 billion, which would represent about 9% growth as well. The options market for December 5th expiration shows an expected move of plus or minus 8% roughly. As I mentioned, Salesforce did also get a price target cut actually from Citi last week. They're looking at 253 from 276. A neutral rating has been maintained from that firm, but we did actually see this company coming under some pressure this year. I mean, shares did hit a 52-week low at the end of November. The broader software space, Alex, and you and I sort of touched on this last week with a couple of other names, has been struggling this year. It's been a challenging environment and time for some of these companies with, basically the rise of artificial intelligence and, disrupting the business and the sector as a whole. So we want to hear what on that the company has to say as far as reassuring investors out in the market. But, competitors like Workday and Adobe, we spoke about Workday last week as well, Alex, have underperformed as well. Just, as an example, Workday did very much fall after its earnings, even though it cleared the bar on those metrics. So the problem that the market had with that company and that earnings report was basically it had not raised its guidance significantly. So, this could be another scenario where we see, even this company clearing the bar, maybe investors not so happy with how they see things in the future. We'll have to wait and see what that accompanying commentary says.
Yeah, no doubt about it. Wednesday after the close alongside Snowflake, so we'll be looking forward to a couple of the names that are very much in the conversation around AI. But I think your point that you made regarding kind of what this does to a Salesforce going forward from an investor perspective is a critical one. You look at analysts, just a couple years ago, 90% of them were in the buy camp. That's down to 80% now. Steadily, you've seen the price targets kind of come down. And it's not to me that you have those who aren't as confident. It's just that you have less of them. I think the story became a little bit more volatile with AI. Salesforce was a dominant player, still is, but you can lay out a narrative where they're upended within their own dominance because of things like AI. So something to watch for sure. And of course, every time we get to hear from the team at Salesforce on these earnings calls, we get a little bit more clarity into what some of their plans are within AI and the like. But let's talk Zscaler. This is another really important name when it comes to cybersecurity. We're going to hear from CrowdStrike tomorrow afternoon. I know the companies aren't exactly the same, but both operating kind of wide scale within cybersecurity, which we know is like the consumer staple of technology. What did you make of the analyst adjustment that we saw here from Bernstein?
Well, it was interesting, particularly because we heard from this company just last week, and it was very much a notable move off the back of its own report card as well. I mean, it was a revenue and earnings beat, but we did see shares falling about 9% after hours. So it did take a beating, and I'll get to that in a minute. But as far as what the analysts are saying come this week, Bernstein downgrading to market perform now from outperform. They've got an unchanged price target now of 264, so keeping that. They do say that they continue to perform well, but the company's fiscal Q1 report, which I reference, added narrative issues, they're calling it. So they've got a bit of a problem here, it seems, with the overall story that they're painting and telling regarding 2026 annual recurring revenue guidance. So that's driving some of the concerns here about increased competition. That's what the analyst is getting at here. And they say that the narrative is now, quote, challenged, according to them. So we've also seen the price target lowered over at Citi. So they're looking at at 350 from 365. They're keeping a buy rating on the shares here. They've updated the company's model post the Q1 report that I mentioned as well. But they say that basically the target drop now is to reflect the organic growth, which is stable, they say, but not accelerating. So basically what Bernstein is getting at here is that they think the stock story is weaker. The growth outlook now for 2026 raises perhaps some concerns here, some issues, and they do say the valuation is now fair. And in Citi, the growth is steady, but basically not improving here, but they're still bullish, but slightly less so than before. So that's sort of the summary of what the analysts are saying. But you know, the fly that seemed to be the ointment here with respect to the earnings that we got last week was basically it just seemed like investors, the street wanted a better performance here. It just wasn't enough because, as I said, they did clear the bar, but they got a beating in the after hours and following the report card. The CEO, interestingly, last week off the back of the report card, talking up a very strong quarter, talking about the clean beat, talking about the cash flow, that's good. I mean, also the fact that customers are happy here. So he was sort of scratching his head with respect to the reaction here. In fact, some analysts that we even spoke to thought maybe the reaction was a little bit surprising in the market. But to your point, Alex, and as you say, we're going to look across the cybersecurity space more broadly this week with some other names, and we've already heard from some. I mean, there is an increasing demand now for cybersecurity. I mean, these companies have been very much a beneficiary of the whole IT spend. I mean, this is not negotiable. You know, it's not optional right now. But I think also, you know, the consolidation in this space has also been a big part of the story too.
Again, I wouldn't be surprised too if you see a little bit more adjustments lower, perhaps to the price target. I mean, this is a stock that has really given up 6 months of gains in the last month. So, pretty forgetful November for investors, I would say, or one that they hope to forget. We'll see if they can flip the page here. But price target has been steady across the board on a consensus basis at about 327.5. With this big steep decline, oftentimes you do see kind of a pile on after the fact that the stock can't stabilize, but time will tell on that. Let's talk ASML because things get a little bit more positive in the last two names that we're looking at here. This is a pretty nice move here today for this stock, about 2.5%.
Yeah, this is obviously coming off the back of a price target boost here. This is from the folks over at JP Morgan. So they've raised the price target now to $12.75 from $11.75, keeping an overweight rating on the shares here. They also said that they've added the shares to its analyst focus list. They do say that the group is the most attractive segment in the sector heading into 2026, and ASML is their top pick. So they believe that memory will likely be the main source of the upside here and expect strong orders for long lead time supplies like ASML in Q4. Now that's an interesting part of the story, Alex, because as we talk about time and time again, you know, a lot of the analysts have turned a lot more sort of bullish on memory lately, and that is obviously because we've seen this whole artificial intelligence boom, and there's been a really big demand now for some of the memory, the storage. We've seen those in the business of that getting a lot more sort of price target boosts. Analysts turning a lot more sort of bullish on some of these names as well because of the fact that we're seeing this tight supply, higher prices here. Stock is at a new high today. We're trading up at 2.5% at 10.86. But basically, we also heard from BFA last month maintaining a buy rating on the stock. They were also talking about having met with the company and the CEO, that they're talking about some of their takeaways being that demand is currently outstripping supply in DRAM. So there you have it again. It's really around the memory at the moment, and they say that more orders are to come. They also mentioned on China, obviously this has some exposure there, a few challenges too with this market. They do expect a drop in sales in 2026 despite the foundry and memory fabs running at full capacity, but they do see potential for a recovery there in 2027. So I think that's important to highlight. But you know, this is obviously the business of making the equipment behind chip making, and you know, it really is seen as one of the only companies that's doing this, at least particularly with the most advanced lithography machines. But you know, in that sense, it really is seen as a sort of picks and shovels type play. But you know, it just looks like they're getting some really strong tailwinds here from sort of the secular shift, at least, that we're seeing the strength as far as AI, memory, and increased chip demand, which we're hearing from all the other companies. So this continues to be a beneficiary of that.
Yeah, already a relatively bullish position, but increase the price target, overweight rating, top pick is used, and then even that kind of sub list, the analyst focus list. So really optimistic from JP Morgan on ASML, and the stock rewarded for it today. And then finally, a stock that's quite different than the others, but still a software name. That's Toast, one that, you know, for those who go to especially small business restaurants, definitely probably have interacted with this company, but sort of a payment processing, holistic, hospitality-focused payment and financial services firm. Nice words from the team at BNP.
Flattering remarks from the folks over at BNP. They've actually upgraded Toast to outperform now from neutral. They've got a $40 price target here. We're trading at 34 and change right now. What they're saying basically is that while competition in point-at-sale software for restaurants is accelerating, Toast's leadership is intact here. So they believe that they are in a good position when it comes to the competition in this space. They say that the US restaurant analysis by number of locations shows Toast still has plenty of room to grow here in the US outside of enterprise, which is interesting because, you know, a big story and focus for investors are their expansion plans. They also say the stock valuation is attractive and the company's 2026 guidance should reassure investors. So this is obviously, as you touched on, Alex, in the business of restaurant software. I mean, this is about accepting payments. It's a big player in this industry. I mean, to BNP Paribas' point here in the note, and they have about 15% or so market share. Just as far as the latest earnings, just to talk about the financials here, revenue of 25% growth, net profit came in 88% higher, so they beat Wall Street's analysts' expectations handily here. It has a history of executing quite well financially. They have announced that they're on a path to double the number of customer locations. They haven't given a timeline here, but they are expecting growth to come from new areas outside its core market of SMEs, which you touched on, which is restaurants. So that's something obviously to keep an eye on. The stock has pulled back, interestingly, from the middle of this year. There has been some concern weighing on the stock, obviously not today off the back of these words, but their expansion plans, basically the view is it can't last forever, and there's also the competition coming from the likes of Pfizer, etc. But look, I've been seeing other notes out on this. I saw a note out from Mizuho as well. They still think that they stand to benefit among the US merchant acquirers as well. And long term, they have a pretty strong position as a pure play restaurant player here, particularly by volume, they're saying. So they're pretty bullish on this name as well.
Yeah, there's two real ways that you can try to compete with the major players. It's a very similar approach that a company like Chewy is using to compete with Amazon. You provide a slightly more premium service or experience, or one that's more tailored to the specific purpose. Sometimes you can, outperform in a specific segment a more traditional, higher scale player. That's sort of what we see from Toast within restaurants. But Sam, really good stuff as always. I appreciate you going through those moves. Toast up about 2%. Before we take a break, though, which we will get the chart and trade on the other side, looking at Marvell as well as MongoDB ahead of earnings. I wanted to just do a quick market update as we're almost gone full circle, looking at futures markets now. Basically unchanged. Volatility is getting closer to unchanged, back sub 17 for the VIX. NASDAQ 100 down 11, ES down 9, so really impressive intraday rally. We'll see if they can get above that green line here in the next few hours, with just under 3 hours till the closing bell. We're going to get our first short break. When we get back, chart and trade time. Rick Ducat's going to stop by. MDB, Marvell, pre-earnings, chart and trade. We'll be right back.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I see something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. Alex Coffey now joined by lead market technician for the Schwab Network, Rick Dugat, for our chart and trade segment, which we're going to look at a couple names that had earnings releases. In the next 24 hours, we'll get MongoDB. We'll also, of course, get Marvell. Let's start with MDB. This is a name. I don't think it's takes a real technical genius to say earnings matter for this name, as it makes big moves around them.
Yeah, pretty clear to see where our last few earnings events were. This one is the one that we're going to focus on today. That was the most recent one. Oftentimes when you have a large earnings movement, that's the start of a new trend, kind of a new price regime here. So as we can see now, we have first our initial low point after the gap up, 275.66. But then after the big push to the upside moderated somewhat, we had a pretty consistent floor near 306 or so right there. So we can see that that area then transitioned into these highs near 385.44. Downward sloping trend line has been in place since then. However, we did not test that 306 level once again. And it looks like we're starting to break out to the upside from that trend line here. Now, obviously, earnings can significantly rewrite this story here, but a bit more of a bullish intro to this earnings move potentially here. We can see as well, for now, price is kind of sandwiched in between our yellow 21-day and orange 63-day exponential moving averages between about 338 and 321 respectively. So those could be some very short-term areas to keep an eye on. To the upside as well, we have our relative highs and our best close at 353 and about 374 or so. So now we can also see that RSI has broken through its own trend line and is approaching that 50 midline once again here. But as we said, earnings could really change things potentially here. So finally, when we look at our volume profile study, we can see that our biggest node near current price activity comes in right around 320. So lining up very closely with our orange 63-day exponential moving average. Beyond that, not too terribly much in the way of strong volume nodes. Things start to drop off once again here, though, near that 252-day EMA.
Yeah, good stuff. As we look at an example trade in MDB, taking into account what Rick talked about, it's a pretty nice picture over the longer term, but some of that shorter term price action definitely clouds the picture just a bit. So looking at a neutral to bullish strategy, and Rick, I thought it did a good job of highlighting that 306 level since that last earnings really have been a critical price floor, perhaps continues to act as support. We went right up against that with a 305, 300 put vertical. And we went to this Friday's expiration, so short term, centered around this earnings event as a potential volatility catalyst, and looking for perhaps stability or upside post this earnings release in MDB shares. Say you did that $5 wide spread and you were able to get a $1.50 credit, that would set up a risk reward where you could make $150 on $350 in risk, and your break even, you simply take that $1.50 away from 305 and you're left with 303.50. Elongated Z risk profile that we've come to know with this neutral bullish strategy. Stay above 305, we'd be in the max profit zone. Of course, things get a little bit interesting between 305 and 300, but that's within 1% of a $300 stock. So maybe not the highest probability area for it to end up, but break even theoretically at 303.5, and then max loss capped out below 300 at 350. Let's bring back in Rick here. We got another earnings mover on our minds here, potential mover, I should say, in the case of Marvell. Very different looking picture here. What do you make of it?
Yeah, in this case, a very, very small earnings gap is what I wanted to focus on, relatively speaking here. But this area right here is kind of where we saw things start to really decline. That was a short area where we had a brief high point. Then we had our gap down here. So this one was much less severe than some of our last ones we've seen in our previous chart, but still nonetheless transitioned into that low point there, 47.09. From there, we started to travel upward, once again kind of grinding our way back up. But that real small gap that we pointed out before our earnings event where we found that high, that's about where we topped out 2 more times. So that 98 level or so stands out as a potential resistance area. However, though, we did break through our downward sloping trend line. We're still within the broader outline here of our upward channel type shape, just connecting these 2 low points here, then duplicating the trend line, putting it across the highs. Matches up decently well here, one idea for potential resistance going forward. So when we do look at some of our other studies here, give me one moment here, we can see that our RSI is also crossing above that trend line once more, and our 50 midline here. We also have surpassed all 3 of our moving averages that we follow here. So they're starting to diverge apart from each other. The trend is improving. Earnings could also be a significant catalyst as well, one way or the other. So when we do look at volume profile, volume starts to thin out where we get a little bit above current price activity. 90 is where we see that node. The next volume node that's pretty clear is right here, near about 112 or so. That could be another area to watch if we do get an upside move.
Yeah, not a tremendously perfect fit, but does stand out for the reason why this gap could potentially continue to be relevant. Is you see this gap was relevant here, it was relevant there, and it's really not that different than where that point of control is. So once an area becomes that battleground, it can remain that battleground for quite some time. Rick Ducat, great setup as always. As we take a look at Marvell into earnings, perhaps this is a name that you think, if it does make a pop, it can get back to those levels that it struggled at. And maybe it struggles to break through them, but maybe it can get back up there and test it again. And so what I looked at here in this case is the 98 call calendar spread. So it's a different shaped risk profile here. This one looks a little bit more like a mountaintop. And the debit spent in this case is going to be the risk of that trade. So say you look at this 98 call calendar, sell this Friday, buy next, that's December 5th, December 12th, and you spend 70 cents on that, you have a $70 theoretical max loss. Now, what's different about this strategy is you have risk in both directions. If it makes a massive move to the upside, you can see risk starts to kick in. If it doesn't make the move at all, risk kicks in when it doesn't quite get to that level. But it's also one that the more precisely you select those strikes for where the stock actually goes, the better it can perform. So very customizable. This is a bullish look, looking for a move towards 98. We're going to take a short break. When we get back, it's going to be time for FOMOs. We're going to look at one of the stories of the session, a partnership announced between AWS and Alphabet's Google Cloud. We'll look at a trade example on Amazon as well right after this.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to Next Gen Investing. Time for FOMO. I was talking, I'm joined by Marley Caden, host for the Schwab Network, of course, Trade 360 as well as Market on Close. And Marley, we talked about this story on Trading 360 to open your program. Partnership between 2 of the most important names in all of business, I guess you could say, which is Amazon and Alphabet, but of course, more specifically, AWS and Google Cloud.
It's a really interesting partnership. So they announced yesterday that they've jointly developed this, what they're calling a multi-cloud networking service. And they say it's to meet the growing demand for reliable connectivity. This, of course, as we're continuing to report these outages, some minor, some major from AWS was one of them. CrowdStrike, we've seen some of these issues coming across. So they're saying now that this multi-cloud networking solution that they've created uses both AWS Interconnect, which is multi-cloud, and Google Cloud's cross-cloud interconnect. So it is a dual partnership. It introduces a new open specification for network operability, which enables the customers to then establish what they call private high-speed connectivity to protect some of that so these outage issues don't happen. We don't have security concerns here as well. And it also offers high-speed connectivity between Google Cloud and AWS. So it really is an integration. They're also saying there's high levels of automation and speed, and importantly noting that it represents what they're calling a fundamental shift in multi-cloud connectivity. And I think that that's really the headline in this story. It's not 2 tech giants, came together to have a collaboration. I think it's that we're seeing that these are not going forward necessarily going to always be thought of independently in 2 separate sentences, and they can in fact be used together to the dual benefit of both of these tech giants who are obviously considered competitors.
I think too, and look, I might be way off base because I'm not an analyst in this space. I don't really even particularly totally understand it, to be completely transparent. But when we think about all the security measures and efforts that businesses make, whether it's having backup data centers, backup power sources in the forms of generators, multi-campus facilities across the nation to get a little bit of protection from, let's say, natural disasters or weather disruptions, whatever it may be. It only makes sense to me as we move more and more things to this internet-based cloud, and that is seen as the future and is already here, that you have some sort of fail-safe involved, especially if you have the opportunity to, involving different providers.
Certainly, and I think part of what they were saying, Robert Enns, who's the general manager of cloud networking at Google, has made some comments on what they're doing here. And he said the goal is to help customers actually be able to move their data and applications between clouds. So it's exactly what you're talking about. It's a simplified operational efficiency between 2 major players, I think because it was identified that a lot of the customers are using both services. So why not just agree to be together, make a more efficient practice than having to do these full-scale migrations or choose one versus the other. Everybody can have a piece of the pie as opposed to there being 2 separate pies is sort of how it looks like from the outside in. And Salesforce, they're already noting, is an early user of this new service.
Yeah, it's like a way to plug in because these companies are already doing this because they see the need to have backups, and so make that seamless, that connection. I think it makes a ton of sense. And also in a kind of separate way, if you're these companies, it's a way to actually expand the potential market because it makes it easier for a company who maybe has to make a tough choice to still do both of these because they can seamlessly connect them. And this technology is becoming more commoditized. It's probably becoming cheaper to actually access. So giving reasons to have 2 instead of just 1, I think makes a ton of sense. But Again, what makes these companies so fascinating is this is all that they do. I mean, we talk about Alphabet as this potentially new major AI player. Amazon, of course, is that with some of its Alexa stuff that it does. But also Amazon's still like the world's store. So
I mean, it's Cyber Monday.
Yeah, exactly.
We have to talk about Amazon. Yes. And just for Black Friday, they don't release specific numbers and they haven't come out just quite yet. But the expectations from the analyst community just for Amazon's e-commerce from just Black Friday was between $2 and $3 billion. And it was expected to break records. And that being said, was supposed to be what most of the experts and analysts we talked to in the retail space said what they thought would be just a so-so year, kind of a slightly softer, slightly okay year. It wasn't expected to be the best retail performance, despite the fact that we are seeing sales growing, we are seeing record-breaking numbers because of what's happening with the consumer. They weren't expecting it to be a massive blowout, but I did see something that came up saying that Amazon's AI chatbot Rufus saw a surge of adoption on Black Friday, that it was its most used day ever, and that it resulted in purchases of more than 100% increase overall in the use of Rufus, which is Amazon's AI chatbot.
I've been discounting how much this adoption was going to happen. I think I've done it on air a few times. Hey, I'm wrong sometimes. I might be wrong on how AI and these chatbots are augmenting the shopper's experience, how quickly people are willing to use these services. So I'm excited to see where that goes. We'll be talking with the Sensormatic Solutions president in my next segment. We're talking Black Friday trends. I know one of the early ones was maybe foot traffic was lower. Some of that could have been weather related, but it sounds like Amazon doing just fine. We'll see if that ultimately is the case. Quick example trade as we say goodbye to Marley. I appreciate her insights as always. Make sure to check out Market on Close later on. Amazon call vertical debit spread going out to January 2nd. So this is sort of thought as maybe you want to play the holiday season in this example trade for Amazon. You believe more upside in store for the company. I looked at it in one strike that's in the money, one strike that's out of the money, the 230, 240 call, trying to create a one-to-one risk reward with a break even pretty close to the current share price. I think we achieved that with the stock trading around 235.20. This 230, 240 call vertical done for a $5 debit would have a break even of 235, and it risks 500 with a chance to make 500. So essentially, if you think Amazon would be above 240 by the end of the year, chance to make $500. If you are willing to take that risk below 230 of an equal amount of 500. We're going to take a short break. When we get back, there was a big deal announced, partnership within the AI space. We'll get the latest on that from Diane King Hall. And then, of course, some of those Black Friday trends. We'll be right back.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out there.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
to Next Gen Investing. I'm joined by Diane King Hall, the host of Morning Movers here on the Schwab Network. And Diane, kind of joking but also true, is seeing a Forbes article ranking the top AI deals of 2025. We got number 17 here, which is a $2 billion investment announced between NVIDIA investing into Synopsys. You got the latest.
Yeah, and I got to give a kudos to you, Alex, for bringing this to the forefront this morning, because you first saw this break across the wire. So NVIDIA is deepening a long-running partnership it has with Synopsys. This is essentially, it was viewed initially out the gate as a win for Synopsys. It took some time for the market to see how they saw it for NVIDIA, but now you have shares of NVIDIA higher off the back of this news. As you mentioned, it's a $2 billion investment in NVIDIA, buying up a stake in Synopsys to the tune of 4.8 million shares. It makes NVIDIA one of Synopsys' top shareholders, so they are deepening that partnership there. What's interesting to me is that they point out that this is not an exclusive deal, so it means that NVIDIA is dating Synopsys, if you will, but deepening that dating relationship, not marrying it. And I guess it gives some flexibility for both of them. Why does this matter for industries? What I've learned is that, just these design cycles are getting more complex, so it makes sense for them to tie up together, reducing essentially some potential bottlenecks in terms of the engineering, the chip making design, and all of that. So that's part of this partnership. For NVIDIA, as you know, Alex, this just deepens the level of partnerships it has within the AI space. We've been in this AI arms race, and you were just talking about Alphabet Google earlier, and Alphabet Google had been a winner recently, where you've seen NVIDIA take a little bit of a step back, especially in that conversation of TPUs versus GPUs. For Alphabet Google, it's TPUs. And in relation to that, Broadcom is a part of that relationship over there. We constantly talk about this circle of who's on first and what's on second. Broadcom shares are also taking a step back, while you see shares of Synopsys and NVIDIA move higher today. So this is, reinforcing that view that the street seems to be trying to pick winners within this space. Again, shares of Synopsys higher, maintaining that momentum throughout the session. They certainly needed this win, given that they've been underperforming the S&P 500 so far this year.
Look, I know that it's only almost like 4 pennies or something for NVIDIA to go up like $100 million, but essentially 5% or so higher than where they would be locked in on their purchase price of just below $415. It's like a $100 million investment win so far. We'll see where it goes. Diane King Hall, appreciate it as always. Make sure to check out Morning Movers every day to start your market day. So we say goodbye to Diane. We welcome in Tony D'Onofrio, president of Centermatic Solutions, to discuss Black Friday and what we know so far. Let's start big picture. What did you make of what we've seen so far, and how it might shape up relative to maybe prior years?
Thank you, Alex. Pleasure to be with you again on this network. Keep doing the great job that you're doing. So I was actually in New York and saw a ton of traffic on 5th and all the different stores, but we track about 40 billion shopping activities through the year through Centermatic and Shopper Track Analytics. What we saw on Black Friday, actually, the shopper traffic in the stores was down about 2%, and that was actually in line with what it is year to date, which is also down about 2%. Traffic was actually up 57% from the previous week. The peak hours were 2 to 4 p.m. with 3 p.m. the blowout hour when the stores were super packed. And I was in New York, just the Lego line alone was 2 hours long. It was unbelievable just to get into the store.
Tony, big picture question, building on what you said, down a little bit, but to be expected based off what you had seen this year. Is it as simple as pointing to some of the weather in some regions of the country? Did you see disappointment in parts of the country that maybe you didn't see elsewhere? You talked about strength in New York, but maybe it was a place like Chicago that got dumped on by snow, maybe a little disappointing?
I think that may be part of it, but I think the bigger issues, there is a generational split that's taking place in terms of shopping this holiday season. So the Wall Street Journal just reported this morning that, for example, Gen Zs are planning to spend 34% less. It's sharply much lower than every other generation. Only Gen X is the one that's going to increase versus last year, baby boomers about the same. So I think part of that is generational in terms of how they're spending. But Black Friday is such a critical time. There's data that we've seen in our analysis that basically that 77% of retailers whose traffic outperformed their category in the previous last year's holiday season had a really great 6 months that follow. So it is such an important season going into next year. So it's critical. The good news, as I said in New York, there was a ton of traffic, people walking around. How much they were buying, our data again shows slightly down.
All right, Tony, so let's talk about how technology has changed. You mentioned the generational differences. Some of that might be the K-shaped economy we talk about, but some of that might just be, hey, maybe Gen Z, millennials, especially the younger ones, are just more comfortable buying stuff online and going to places like Amazon or whatever. And also, I would say, it doesn't feel like the doorbusters of 15, 20 years ago are really happening. Like, you don't need to run through the gates to get these deals. So how do you think some of those dynamics have shaped things in terms of what we're seeing that's different now than maybe several years ago?
No, I do agree that the doorbusters and the bigger deals are not there as much, partly because the shopping season is starting earlier and earlier in the year. It's no longer you waiting until Black Friday. We're shopping into October already for the holiday season. So the shopping season is coming earlier. You see that, frankly, with the amount of decorations that are taking place inside stores. So I do think the rest of this holiday season will be fine. NRF still projects the growth to be 3.7 to just over 4% in terms of the year, which is roughly what it was last year. The good news this year, for the first time, NRF projects we'll cross $1 trillion of spending during the holiday season, and that's amazing to me in terms of how the holiday season keeps growing in importance for retailers.
And, you know, we'll get to kind of what we think the rest of the holiday season might shape up as. I'm sure there's always a rush right towards the end, too, for those who are last-minute thinkers like myself. But, Tony, I want to ask you as well in terms of kind of behavior shifts. For those who are primarily shopping online now, like you aren't, if you're at the store at the, you know, the checkout area with the candy and the beverages and the last-minute items, they try to do that online, but it doesn't seem to be quite as successful. Do you find that people spend less when shopping online per checkout than maybe they do in stores?
You know, the pandemic kind of told us that basically the stores were going to die and everybody was going to move online, and then it was it for a store. The opposite is happening. The pandemic, what it accelerated is the importance of the actual physical store in terms of being able to touch and engage with an associate and engage with the actual goods. In fact, the data that I've seen, 87% of all retail transactions, including those online, include a store. The store is becoming the fulfillment center, frankly, for many retailers because it's closest to the consumer. So online, yes, is important, but the store is even more important, partly for that technical feel that we as shoppers and consumers like to feel, but also as the distribution networks for online goods.
Yeah, that omni-channel we were talking so much about a few years ago is really critical. But all right, the most important question, I think, then, as you kind of project out what we know so far, you mentioned this maybe 2% lower, kind of in line with the rest of the year. Is that the projection for how the rest of the holiday season may shape up?
I think there's 3 critical days that are coming up. The next 3 busiest days for the year, according to the Systematic, are going to be December 20, which is Super Saturday, followed by December 13, and then December 21. Those 3 days will tell us what the rest of the season. I think technology, and you asked me earlier, just to clarify, will play a big role in this. Retailers are much more prepared right now because they deployed RFID, they got better tracking of inventory. They have now sensors that tell them how to engage with shoppers much more to actually get to the buy. So I do think the blend of technology and also the key days are coming up. Still project, and I'm tending to follow the NRF, that it's going to be a good holiday season for 2025.
We'll look forward to getting that data when we get it. Tony D'Onofrio, always a pleasure. Thanks for taking time out of your busy day to join us here on Next Gen. We're going to take a short break. When we get back under 30 time, we're going to look at Chime Financial on the backs of its upgrade that it got. We'll be right back.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Stay connected to the markets with the Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network,
available anytime, anywhere, on any device for free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Welcome back to Extra Investing Time for Under 30. We're joined now by senior markets correspondent for the Schwab Network, George Hillis, to discuss Chime Financial on the backs of an upgrade. George, I think we talked about this one a couple times now. Maybe a SoFi kind of light company. I know SoFi is probably a little bit further along in the trajectory, but what do you make of this story and what do you make of this company?
Well, it's actually good to bring that in to our conversation, Alex, on explaining sort of the relationship that Chime has relative to SoFi and what it doesn't have, and maybe why it's actually performing quite well as a business or a stock at the very least right now. But Chime, for those who don't know, it's basically a fintech company, and they provide digital consumer banking and payment solutions, products and services. They've launched their new Chime card, which Goldman actually demonstrates as a possible positive catalyst, increasing the take rates on payment processing for the business. With their upgrade today, they moved their price target to $27 from $26, rating it now buy from neutral. And they do demonstrate some of the things which I agree with. They are talking about lack of profitability still in the business, and it's a growing business. It's still not profitable. That's important in the context of what's happening here. They're also talking about potential slower than expected payment volume growth. That could be a function of industry group competition and overall economic conditions right now. And so for what it's worth, they're talking about some of the negative catalysts, but also some of the positive things going forward, including diversification of sales breakdown, revenue breakdown going forward. And that's where I think there's this element of comparing Chime to SoFi. Now SoFi has certainly expanded its revenue base. Started off as a student loan company. It's now moving into payment processing, digital banking, brokerage services, insurance services, crypto trading. So it's expanding its revenue base. That maybe speaks to why it's quite volatile as a business still, even though the profitability profile of that business is improving. I think maybe when it comes to Chime, Alex, here, the positive catalyst, I think, going forward for Chime is a couple of things. One, looking at the stock since the IPO in June, it's demonstrated a decline. If you look at last 2 quarters ago, they posted over $7 of losses. Last quarter, 15 cents per share loss. So the first quarter post-IPO was really a financing quarter where they issued a lot of additional shares. That's to be expected. And now it looks like maybe that share count is stabilized. Looking at the price action, too, what's interesting enough for Chime, just looking at a 3-month chart, for instance, you can see that there's sort of a cup and handle formation. So it's a technical pattern. It's typically bullish if it breaks out of the handle formation part of the cup and handle total technical structure. That was around 2150. So overall, it's had a nice move in the last couple of weeks. All days have been positive for Chime, and I think it's a situation where financing needs are now not necessarily there. Profitability is expected to still be negative, but improving. That's important. And if you look at the cash position on the balance sheet right now for Chime, last year they lost quite a bit of money, $980 million. but nonetheless, they have about 1.2 billion of cash on 8 billion in equity. So in this case, based on the push in profitability expectations for Chime, the capital structure seems in line. I'm just going to go with the technicals. So looking at that 2150 as a potential area of support after it broke out of that level, going back to the first week of November, but also that level corresponds to the first week of October as well.
George, real quick, 30 seconds or less. Is this more of a long game approach to similar to SoFi? Well, maybe throw a hood in there where they're going for the younger dollar now?
Yes, I think so. And the last thing I didn't add, and I'll add this to it, Alex, is just think about the nature of the market right now. Crypto's getting slammed. So, corresponding payment processing companies, I'm going to throw SoFi in that mix. It's not completely a crypto company. Companies like Block, anything tied to the crypto space right now in the payment and fintech areas, I suggest are probably going to be weak. And that might be why we're seeing some rotation into Chime, because, again, they're right now not a very diversified revenue-based business. This is what the catalyst Goldman sees, and maybe they're not being punished because they're tied into crypto right now.
Good stuff. George Tillis, always great analysis and appreciate it. Hope you have a great rest of your Monday. That's going to do it for Next Gen Investing here today. NASDAQ futures just turned green. The index right around the corner as well. The watch list up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com. afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the floor of the New York Stock Exchange. So glad you are with us. We've seen mostly down arrows today, but the tech-heavy NASDAQ giving it a go and sitting right at the unchanged line. We'll talk about what's going on with the frugal consumer and how it really could impact the entire holiday shopping season. We already have some stats from Friday's Black Friday, and today is Cyber Monday. How to trade uncertainty is impacting U.S. manufacturing after today's ISM report. We'll explain. And our panel standing by and talking about Google as it searches and tries to get to that $4 trillion market cap. And we did see also a price target hike today. Now the price target's at $375. We'll talk about that. Let's take a look at the market. So last week we saw the Dow gain 3.2%, the S&P gained 3.7%, the Nasdaq gained 4.9%. Here we go. We start a new month where the S&P and the Dow had a winning month. The Nasdaq wasn't able to squeeze it out. New month, but mostly down arrows. The Nasdaq is giving it a go, but right now the S&P is at 68.41, down 8 points. The Nasdaq 100 is down 7 points, almost unchanged. Dow is down 192 points at 47,524, and the Russell down 0.5%. Oil and gold are both higher. Gold's up about $17 today, and oil's sitting at $59.39. The VIX at 1666. This after it ended Friday at 4-week lows. It wasn't long ago that we saw it at 27, and people were very nervous. Now we've taken a breather, right? Gold has been a story. It's at the highest level in 6 weeks. Copper's at records. The U.S. dollar's been showing strength, sticking at this 99 range, and the Bitcoin story continues to be down arrows. It's down 6%, holding on to 85,580. Kevin Hanks, host of Fast Market here at Schwab Network, is with me, ready to talk about some of the action. So your thoughts this afternoon?
Good morning, Nicole. You know, you and I spoke about this morning. The pre-market futures were lower in many ways because Japan was lower and Germany was lower. The DAX was down a little over 1% on news about Airbus, and Japan was worried about interest rate hikes coming. So those markets were very heavy, which led to our futures overnight being very heavy. But since the open, when the focus comes to the U.S. markets, the market has pretty much fought its way back to virtually unchanged here. The NASDAQ was green a moment ago. It's within a short distance now of unchanged of the market. So turning into much more of an unchanged day here than a down day. And so when you're looking at the different levels, I think a big thing that we're going to focus on for the last month of the year is the 10-year yield. Why? Because December 1st triggered that the Fed is no longer running off the balance sheet. It's no longer shrinking the balance sheet. It's now frozen at this level where as maturities come off, they'll start buying treasuries again. That's going to affect, interest rates going forward. We'll see what that does. But at least as we sit around 2 o'clock Eastern time, this dip has been bought, Nicole.
Yeah. Look, Amazon is up 0.75%. I saw OPCO with a 305 outperform rating today, right? And it's around, 234, so a 305 target. And NVIDIA is in the green, and we have some news, and Morgan Stanley with a price target.
Yeah. Jensen Huang came out today and talked about a deal, a $2 billion investment in Synopsys and a partnership. They bought 4.8 million shares of Synopsys common stock, around $414. They also developed a strategic partnership going forward. A multi-year collaboration aims to integrate NVIDIA's CUDA accelerated computing and AI technology into Synopsys. So a deal with Synopsys. Jensen Huang came out early this morning on national TV, gave a glowing report, not only on this partnership, but the overall state of NVIDIA. And he mentioned that any future deal with China would be an extra, would be a nice surprise if they were able to do deals with China. So that turned NVIDIA from down on the day to higher on the day, Nicole. Pretty good story. And Jensen Huang delivers news to the markets that showed the market there is no slowdown in the AI movement.
All right. Well, Kevin Hanks, great to see you. The $2 billion partnership, both Synopsys and NVIDIA with up arrows. And Morgan Stanley puts a 250 target on NVIDIA today. So that's another story we'll continue to watch. It's at 179. You know the analysts are just still hot on NVIDIA. Thank you. Good to see you, Kevin Hanks there. Okay, Jeremiah Willer is joining me, Chief Investment Officer at 213 Strategic Partners. Thank you for being with us. Some of your thoughts, because everybody who's coming on is still seems to be, even though sometimes they think tech is frothy, no one wants to say, I'm not doing tech ever again. I mean, everybody's still on board to a certain extent. How are you on board, if at all?
Yeah, that's a dangerous game. I think people have probably been burned by that the last couple of years, suggesting that the tech has no more room to win. The valuations are high. That just hasn't been the case. I think you just have to be careful with it. Like we've been telling clients over the last couple of years, there's been a lot of speculation that maybe there's this AI bubble, this tech bubble, comparisons to the 2000 tech bubble. I think this is different this time, and folks should understand that a lot of the spending that's going into AI is really coming from these revenue generating companies. Now, I think you have to be careful, keep an eye on how much leverage is eventually maybe out in the market being spent on AI if these companies get over levered. But for now, I think the spending is sustainable. You've seen earnings growth in the third quarter of these companies has been fantastic. As long as they're continuing to organically grow, they have the money to spend.
Well, it's interesting that you talk about this because we have the cyclical spending, right? It's not like, you know, when venture capital or private equity puts money in and then they expect the return on investment right away. I mean, there's a lot of cyclical funding going on that people don't necessarily understand because it's unprecedented. But what they do understand is how leveraged everybody was. And leverage was high, and so people were dumping out of crypto. We saw that. The other thing here is that you may get a pop in stocks because they're saying how the Fed quantitative tightening ends now, and it's essentially quantitative easing, and that could give a boost. You had margin debt that sort of was rearing its head, so maybe it's now time for some better days ahead, or no?
I think we can have some slightly better days ahead, but to your point, the last coming out of earnings season, so earnings season was great. The expectations were 7% year-over-year growth. We were closer to 14, 15, so that was fantastic. That pushes markets higher. That eases you in terms of multiple pressure. So the multiple came down a little bit. We were sitting around 21 for a period of time when we had the dip a couple weeks ago. We're back up to 22. The trading, the volatility in the market seemed to be driven more by Fed expectations, and that wildly moved from they're not going to cut rates. Maybe it's a 30% chance to now it's like 90% chance that they're cutting rates. And the market's moved on that. So I think the market's priced in, we had great earnings, and the Fed's going to cut rates by 25 basis points. You mentioned, though, you got to be careful about how they're managing the balance sheet. So that's a question mark. But it seems like all the good stuff is baked in, and now we're probably going to get updates on labor market, which might be concerning. Consumer confidence continues to come down. So I'd be cautious over the next few months as some of that information comes out before we get into the next quarter's earnings.
And don't you think it's sort of interesting how gold is at highs? It's at the highest in 6 weeks, while Bitcoin is down over 20% in a month, and Strategy, MSTR, I mean, it used to be MicroStrategy, is down to a new low of 155. At this point now, has lost 35% in 1 month, 52% in 3 months. You know, sort of what's going on? Why the breakdown? Is it a crypto winter? Or, you know, are you hearing people still interested in crypto? Because I did hear even Tom Lee say new highs. He said 100,000 and new highs by January.
Yeah, the crypto and gold story in particular this year has been interesting because up until 2 months ago, they were basically running higher with markets. And now you've seen over the last couple of months, Bitcoin in particular has diverged and gone lower. What's the high on Bitcoin? I don't know. I'm not a particular fan of the cryptocurrency itself. I like the technology. I like the pipelines. I like companies investing in the hardware and the software. But to put a target on the currency itself is very challenging. I'd say for investors, it's something to allocate to and consider in a portfolio because it does have the potential for high returns. But you have to remember that this volatility and this momentum can work both ways. And you just have to you go in with eyes wide open, appropriately allocate the portfolio in terms of sizing, and understand that you may have to weather a minus 50%, a minus 75%, relatively short period of time, which you don't typically have or have to experience in a traditional investment portfolio.
Understood. Let's talk about your investment ideas. What are you thinking about for, what could work in a portfolio or what not to do? I mean, what works? What would you be your go-to?
Right now, it is really challenging in the equity markets we just talked about. It seems like all the positives are priced in. Even the U.S. to international trade, that's complicated by the currency situations. And we've talked a little bit again about the Treasury and the JBP rates. So right now, we're just diversified. If you're looking for a niche strategy that we've been allocating a little bit more to, we've liked infrastructure. We talked about that last time I was on. We've been leaning less into infrastructure equity, more into the infrastructure credit side, just to shore up the risk profile there. I think one thing that investors really need to consider going into next year is we've had some really great years in the equity markets the last few years, and in taxable accounts, tax consequences of any changes can be significant. So we've been using direct indexing tax management strategies for our clients to help manage that, because we don't want to give up the gains that we just earned by paying taxes, but we also need to maintain diversification away or not overly concentrated in these high-flying tech names that we've seen in the markets.
So when it comes to the consumer, thank you for that. Store traffic was down. I saw, it depends if you look at one or the other, right? One was 2.1%, the other one was 3.6%. But Black Friday online sales were up 9 or 10%. But it's not like they were buying more products. It turned out that it was just a little more expensive. So that brings in $12 billion or whatever. Now we have Cyber Monday. So Black Friday sales, global sales are up 6%. Black Friday drove $80 billion overall. But, the question really is, do we see a good holiday? Do we feel like the consumer is strong? I love to see that they're spending, but I guess they have to be frugal.
It's a good start, and to your point, there's just some inflation baked into that. And it's also the trend of the online shopping, right? That's going to continue to grow. I'm cautious that maybe that spending is pulled forward even more. Shoppers being frugal, looking for deals, and making those purchases now, not trying to wait for a better deal over the next 2 or 3 weeks. So we're really going to be keeping a close eye on the next couple of weeks as it relates to consumer spending. Can they maintain that year-over-year growth, or does that tail off? And again, when your consumer confidence numbers are trending lower, your unemployment rates are trending higher, I'm skeptical that we're able to maintain a solid year-over-year growth in consumer spending through the holidays.
Dana Telsey was out today. She was still talking about the 3 to 5% growth for the holidays, and so was Jen Rogers-Niffen, who's a retail expert. So I think the overall feeling is that the numbers will rise year over year, but the order volume is down 1%. The units per transaction is down 1%, but the average selling prices are up 7%. So we'll make it, but maybe in a different way. It's sort of, a new world. Jeremiah Reith-Miller, great to see you. 213 Strategic Partners, thank you. Coming up, Options Corner. Tom White is standing by. He'll highlight unusual options activity from the day and how investors are looking to trade on recent news of Walt Disney, General Motors, and also Dollar General. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to the watch list. It's time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. Tom White, host of Fast Market here on Schwab Network, is with me, and a lot of folks enjoy some turkey and some football and the parade and a movie, right? Zootopia 2 did incredibly well for Disney. Let's hear a little bit about what you've learned with Disney and the trade that you found.
Yeah, pretty good metrics out of Disney over the 5-day Thanksgiving weekend. Domestically, they made about $156 million on Zootopia 2. And then internationally, you throw that in, that was another $400 million since it opened. About $556 million taken in so far in just about a week for this this movie, just both domestically and internationally. And this comes, probably much needed at this point, because when they released earnings last month, they showed a deterioration in linear TV, which isn't surprising at all, and then also theatrical releases. So they've been under pressure. Stock fell over 7.5% after they posted earnings. They topped analysts' expectations for earnings, missed on revenue, weighed down by those TV networks and the film slates that they had, but this will be a big boon for them. Disney Plus, on that earnings event, added 3.8 million subscribers during the period, bringing their total to just over 131 million subscribers there. So they've got some good things working out for this this company, but it always seems like there's one or two sectors within Disney's umbrella that's not doing well. ESPN Plus, the rollout of the new app, doing well at this point, so that's one of the drivers. And the parks actually did pretty decent too. But what we saw here as far as unusual option activity goes, after that pullback that we've seen in the stock, it's off about 4% so far this year. This was out in the December 5th month or weekly options that expire in just 4 days. Trader bought over 2,000 of the 105 strike calls, paid an average debit of about $1.90, so the break even of about 106.90. We're basically just below that that price, that break even. Over the next 4 days, call volume about double normal daily average volume. So yeah, some good metrics for Zootopia 2, but I think they need to continue that momentum on their theatrical releases because that's been a drag on their earnings the last couple of quarters, Nicole.
Yeah, I mean, it's unbelievable. And you talked about abroad. At first, it was the 4th highest grossing animated film in China. Now, just a short time after, it says Zootopia 2 became the highest grossing animated film ever in China and pulled in, as you noted, $556 million globally. Let's get to General Motors. The story there, please.
Yeah, stock hit 25-year highs in today's session. Nicole, up about 38% so far here in 2025. So it's had a good run. And this is despite, they've seen an increase in their PE multiple, but their revenue has been declining. This is a head scratcher for me, Nicole, to see this stock up so much this year. They've got a lot of headwinds. They recently took a charge, a pretty significant charge, $1.6 billion. Owing to the decline in EV demand. They thought they could make it up, extend those tax credits after they expired earlier this fall, but then GM immediately came out and said, hey, we're not going to do that. One of the bright spots for this company over the past couple of quarters has been their sales in the high-end pickup trucks and then also the SUVs. Those are really high margins. But we're starting to see a lot of data, Nicole, that's kind of reflective that, hey, the consumer's tapped out here. You know, they're extending car loans to 7 years. Car prices are at record levels, and maybe the consumer is going to start pulling back on those numbers just from some preliminary data. Although, like I said, GM's moved up pretty significantly this year to those 25-year highs that we've seen. But we did see some bullish activity in here. This was out in the December 19th monthly options that expired 18 days. Trader bought over 5,000 of the 75 strike calls, paid an average debit of about $1.18 on those. So the break even of 76.18 over the next 18 days. That's about 3.5% above the current share price in GM. That's where the trader needs a stock to kind of finish above. But like I said, he's given himself 3.5 weeks on this bullish trade. Somebody thinks the party can continue here in GM after this pretty decent run so far this year.
All right. And look, it's incredible. $41 up to 75. It's almost, okay, 73.93. What an incredible run. Nice to see that for our own domestic, you know, when we talk about the big three here. Dollar General, what are we thinking there? As we've already been getting in how shoppers are feeling, and we're going to have a great conversation in a moment with the Carney team to talk about how people are shopping. But what did you find on Dollar General?
Yeah, you know, so much of the preliminary data that we've got, whether it's Adobe Analytics, you know, Sensor Tower, MasterCard, Spending Pulse, they're doing pretty well, right? Adobe Analytics, 9.1% gains year over year on Black Friday. That's pretty good. So kind of pushing back against that narrative that we were going to see a slowdown. Now, traffic slowed down a little bit, maybe tariff impacts causing some of that price rise, but it's a good start to the holiday shopping season here. Dollar General up about 45% this year, but I think one of the key things is when you look at a one-year chart of Dollar General, it looks pretty good, but the stock is off 58% from all-time highs that we saw just over 3 years ago. So it's still been in a downtrend.
Looky.
Earnings on Thursday. Option market pricing in about a plus or minus
What'd you do to the
7.5%
market?
move either way. About $8.50 on this one. They just announced that they're having 24 days of savings sales events for the entire month.
What's going
They'll
on?
release a couple new products a day that are going to have big sales on it. And this is going to be a key one because we've seen that bifurcation in the retail space, Nicole, between the affluent consumer and the less affluent consumer. They've been pulling back the low to mid consumer. While the high-end consumer is maybe just trading down. Maybe Dollar General takes advantage of that. We'll get a read from Dollar
How do you
Tree,
survive without me?
the day before Dollar General releases their earnings. But we did see a trader probably taking you know, a shot here on earnings. This was out in the December 5th weekly options that expire in 4 days. You're going to capture that earnings event. Trader bought 2,200 of the December 5 weekly 110 strike calls. Paid an average debit of about $4.80. There's some higher implied volatility here. So the break even where this trader starts to profit is above 114.80 over the next 4 days. That's about 4% above the current share price in Dollar General. Call volume, about 2.5 times normal daily average volume that we've seen over the last 5 days of trading. That's only with about 5,500 calls traded overall across all their option series.
Shut up. Uh-oh, at the VWAP. /ES is at the VWAP. Prepare ye in the name of the Lord. Oh, these things are cheap. The SPX calls, the 6830s. Let's get it on. 6830s at $3.30. Let's see if we can get a better buy here. $3.30. Strike is 68.30s. Jim, I'm scared. We're at the VWAP, so we want to hold here. I don't even know what went on here. We're at the VWAP. We gotta hold the VWAP. VWAP, yeah. We're at the VWAP. We gotta hold the VWAP. We're at the VWAP, yay. We're at the VWAP, yay. We're at... We're at the VWAP, yay. We're at the VWAP, yay. We're at the VWAP, yay. Come on now. Don't let me down. We're at the VWAP, yay. 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 We're at 380. Does anybody understand what I'm doing here? We're at the VWAP, yay. We got to break the 9. You could sell them now if you wanted to. We're at the VWAP, yay. Let's go.
Washboardjim, he kneels to pray for children lost along the way. In Springfield town they have no cheer. This Christmas time no joy is here. He asks for help from above, a gift, a toy, a sign of love. For Springfield's children, one and all, hear Washboardjim's desperate call. The organ swells a solemn song as Jim's request does resound. He dreams of smiles on every face, a Christmas filled with saving grace. No child should want, no child should weep. Let kindness grow while others sleep. A simple wish, a humble plea for Christmas joy eternally. For Christmas joy
He's watching very closely. Okay, we're about to the orb. This will be a double bottom right here. And we've got a confirmation of a 1, 2, 3. So I'm going to add 2 more. $230. Come on now. We can't play around here. I like how she's dressed today. I trade stocks with her. Come on, baby. Let's get a rebound. Oh, Christmas Day. It really needs to hold here at the orb. Let's go now. We're at 280. You see that 1, 2, 3 at the bottom there? And we stopped right at it and we got the orb. And we had the yin yang right here. Washboardjim. Three o'clock, baby. I'm the market maker around here from Washboardjim. You see it, Randy? You see the support? You see what I'm talking about? Now we're at the 21. You can make a business decision here and sell them at 320. I'm up 180 bucks. Or you can run it up to the 63. And that'd be it. Oh yeah. To this resistance right here. We're at 360. Oh, you bought it at the bottom? You could scale out, but I think we're going to come up to 68.29. Washboardjim. I don't fuck around, man. You know who I am? You could sell them now and be up 300 bucks. We're at $3.30 again. Yes. Let's get us above the 21.
Interview here.
Well, we got the snake breakout pullback. We got to see if they want to carry on with this or drop it. Right now, it's not looking too good. Google's pulled back pretty much. Bob is at the 200. We're going to see if we're going to hold. We got to hold this here support line. There's no ifs, ands, or buts.
So we're going to make contact with these young...
Due to the graphic nature of
this show, come on, hold. It's taking its sweet time. We'll get 3 more. $1.60. Come on, give it to me. So far we got a higher low. Dee, 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 dee. I get 3 more of them. It's at the higher low, so it's still bullish. Actually, it's an ascending triangle. Pretty much. But it's real fat. But as long as you have a higher low, it's an ascending triangle. One, two, three. Keep the higher low. Come on. Well, heck. We've kind of lost support. It could go down to the wick. But I'm going to stay in it here. 135. Let's go. Anybody in this trade with me? You still in it, Randy? You think we go lower? Looks like the puts are winning here. Look at 135. We got to maintain this double bottom. And I got 9. We got 1 at 330, 2 at 230, and 6 at 135. $178 average. Let's go. We blew off the megaphone. I mean the ascending triangle. Now it's not. Kind of below the orb a little bit. There's 135 again. Nicole, you're a babe. Come on. Ooh, Netflix is having a good day. Well, that's 165. And Regetta Coin had a wonderful Friday. Zim's up. Come on. Marley, I love you. Dirty. Hully. I don't know. I'm not going to sit around here all frickin' day. Oh. Looks like it ain't going to do its thing. We got a fallen wedge now. So I've still got hope. Still got a little bit of hope. We're going to find out any second. Come on, baby. Back to 140. We broke out the wedge. Hey, Marley. I love you.
This morning, Marley, and it was really down because the foreign markets were a bit lower, causing our futures. So NVIDIA went with the rest of the market, opened up down, and then this announcement of this $2 billion equity investment in Synopsys and a strategic partnership. And so suddenly Jensen Huang goes on that national television, and all of a sudden the stock turns around to
about
be
even again.
Here's some of the details. $2 billion of investment.
And we hit the
NVIDIA
50.
4.8 million shares of Synopsys at $414.79 a share. They also have a...
Shut up. I want Sam to get on here and say NVIDIA.
Synopsys electronic design, automation, software, and engineering solutions. So this is, and if you saw the interview, Jensen Huang came on with the CEO of Synopsys, and it was a pretty glowing, positive, aggressive, kind of aspirational interview he gave. And like I said, his positivity on the topic really turned the stock around from down on the day to up on the day. You get an upgrade after that, and yeah, this stock really was part of the genesis of the market turning around this morning, Marley.
Yeah, it's so interesting you point that out, too. We make all these comments about when Jensen Huang speaks, the market listens. You know, initially, we did see them pull down. It's another circular deal, and a lot of these circular AI deals are a lot of why we've seen this tech sell-off and AI bubble concern sort of ramping up of late. But once he spoke, the market turned positive. Synopsys is also up 4.5% on this news. So, you know, a good day here. You know, as far as we're looking at this next headline, two major tech names here, not one big, one little. We've got Amazon and we've got Google, and we've got a surprise partnership with a jointly developed multi-cloud network. Now, this is a very interesting one to me because you don't expect to see these two, what I think a lot of people consider competitors, teaming up to create a product solution.
You're exactly right, Marley. That is spot on. When you think of AWS and Google Cloud, you think of them competing for pieces of the pie. Here now we have a partnership between the two. I don't know if that's to compete against Azure and how that was growing, but it's certainly too strong.
See, I had a picture frame shop, and there was 2 or 3 different frame shops in a pretty close area, and this was a small town. And I would go out of my way to maybe buy something from them, maybe a mat board or some molding, to always try to make them not really competitive. I was competitive in price. There was no doubt. They did like me for that. But I didn't see making 600% on an item where I could just make 300 and cut them in half. But I always told him, I said, if you ever need anything, if you need me to help you to assemble some stuff, or if you need some mat board, or if you needed some kind of molding that you couldn't get, you could always come down and shop in my scraps or see what I got, because I carried a little bit in stock, but molding was very expensive. But I had a big supply of mat board. I had a real big stock of mat board. And I always made sure I had 4 or 5 in stock of each color. Just in case they needed one, they could come to me. And I'd sell it for about 50 cents, $1 more than what I paid for it. Because back then, I mean, unless it was acid free, and I'd try to get 5. And I did that. You know, I ended up selling like 4 or 5 mat boards a day just to help them out. But I never, always worked together. I never was, you know, because I needed frames sometime too. You know, the guy comes in, wants a fast frame job, so I kept a little supply of what they had in stock, put it on my little spin wheel. And I'd buy it from them chopped if I thought they did a good chop job. And they could make a little bit more money from me. But I could still have it already chopped and just put it together and make 100%, double my money. We're back to even. I kind of wish I was still doing that, but it's a lot more responsibility. Here we go. There we go. Back to laughing again. We're hit the 63. Let's go higher. Now that we got to break this here. I mean, we're at resistance again. It's oh shit, it's 211. I don't know. I gotta be smart about this. This could be a nice trade if it runs up and hits this. If we break this resistance, we're at resistance. Randy, what should I do? $220. We got to break. Can we break it? If we break it, we're in business. If not, I need to sell it. Marley, I love you. Last week I realized that you weren't married. Well, at least you didn't have a ring on. And I used to cannot stand you. So I'm beginning to develop a love-hate relationship. Will you make the stock go up, baby? Can we break out of 6823.86? 36? Did I put 86 in here? That's 36. I made a mistake. Rob said boom. I don't know if I like that. When I look at Nicole's breast, I have a problem of thinking. The ability to think. Well, shoot. Just sitting here. The last 6 minutes felt like it's been forever. The video.
We've been mentioning with those JGB yields, of course, over in Japan, heading higher, and we've got the 2-year, which is rate sensitive, at a 17-year high. So that is putting some pressure perhaps on markets, as we've seen the Nikkei 225 heading south, and so we are perhaps seeing a little bit of follow through as the BOJ is going to be hiking rates expectedly, while the Fed is going to be lowering rates as far as what's being priced into the market. So we've got the US dollar on the back foot today. We've got crude oil pushing higher as we are tracking geopolitical tensions. We're at $59 a barrel right now. Bitcoin's been a big story for us today. Suffice to say, off the session's lows.
What are the geopolitical tension?
6%. And then, as I mentioned, the 10-year yield moving higher off the back of what we're seeing as far as global fixed income is concerned.
It's like we haven't had it for the last 4 or 5 years.
Look at the sectors for the day. We've had technology, which has been lower, so it is off the lows now. It's just on the line to the upside as we stand. So we've seen a little bit of a mixed picture for technology. Obviously, we've had this NVIDIA and Synopsys deal that is helping things out. But we've got a couple of stocks that look a little bit shaky today. We've had Broadcom under pressure pressure, for instance. Communication services 0.4% lower, financials under pressure as well, but we've got consumer discretionary and staples which typically outperform in a lower market, shining today just slightly. Utilities under significant pressure, actually one of the underperformers across the sectors today, down 2%, real estate down 1%. Solar industrials, but we've got materials just fractionally higher, energy tracking those crude prices higher as well. We are up 1%. It comes, of course, as we are tracking a lot of earnings. We are continuing to see those trickling in. We've had some PMIs out this morning, taking a look at certainly the state of manufacturing here in the US for the month of November. So plenty of moving parts that we are dealing with right now. So we're seeing a little bit of a mixed performance beneath the surface as we stand. So as I mentioned, a little bit of caution in these markets as we get up and running for a fresh trading week and a fresh trading month. A seasonally stronger one, so we are on the back foot today, but I'm going to send things back over to Marley in Chicago for now for an interview.
Thanks so much, Sam. Joining us now for that interview, Nigam Arora, the founder of the Aurora Report. Nigam, thank you for being with us this afternoon. Always great to have you on this show. What's going on in Japan today? I know back when you were on with us back in October, you were talking about rising yields in Japan, that investors need to keep a close eye on this. Now we're seeing BOJ yields hitting levels we haven't seen in more than a decade today. You know, how real is the risk that the yen carry trade begins to unwind here?
Well, Marley, thank you for having me. The risk is real. Great question. The reason the risk is real is that, you know, we don't have exact estimates. We're all guessing. But rough numbers, there's about $1 trillion in a carry trade. $1 trillion is a lot of money. So that's one. And the second is the funds that use the carry trade also use very large leverage on top of it. Right? So what we're seeing in Bitcoin right now is a result of excessive leverage. So in the AI trade, which last 2-3 years, funds have been borrowing in Japan and investing in AI stocks here, and before that, borrowing in Japan and investing in US treasuries. In addition to the movements between yen and dollar and rising yields in Japan, there's also a lot of leverage. So a little bit of moving
You're going to start cracking up in a second.
Because of the leverage. So the risk is very real. So I would say this, on a macro level, I'm not talking about geopolitics, I'm not talking about inflation, those things, but you know, just over macro level related to currencies and carry trade and borrowing, we now have probably the highest risk since 2008. So that's pretty high risk.
So if it's pretty high risk, how exposed is the U.S. AI trade if we see
I'll take my shoes off for a bit, but I need to go get gas.
Yen-funded positions?
I think it's very, very exposed. We could easily see 10-20% correction somewhere here if the carry trade unwinds.
And if we start to see these global rates diverge, we see Japan go up while the expectation is for the Fed to move towards easing, what do you think the most likely market reaction would be?
Well, so it's kind of interesting. You know, back in 24 September,
I must be missing something. The Japanese bond yields?
25 basis points or 50 basis points. And everybody was rushing into long bonds, the US long bonds, treasuries, and so on, saying because the rates would fall. And 10-year was in mid-3s, 3.6, somewhere around there. And my call was, if Fed were to cut by 50 basis points, the long yield will rise. And, you know, people kind of laughed and say, how could that be, right? Well, Fed cut by 50 basis points, and, you know, the 10-year rate went up to like 4.3%, so it was quite a bit. Can similar thing happen again? Possibly. But you know, now we've got a lot of other things going on which we didn't have before. You know, we've got this big move for stable coins, and then, you know, stable coins have to be bought back by treasuries, so they're buying treasuries, usually shorter term, but there's some impact on the long term. So it's uncertain what happens, but I think investors should be open to the possibility that as Fed cut rates, long-term yields may rise. And part of it will depend on, you know, what the statement is that accompanies it, right? It could be a very hawkish cut, right? Fed may say, we're cutting, but, you know, we shouldn't be cutting, you know. So that's that. And the other development that's on the horizon is anytime President Trump is going to announce new Fed chair. And question is, market is a favorite right now, but maybe it's that person, maybe somebody else. And since President Trump is appointing that person is going to come out and say, hey, I'm going to cut rates. So how does the market react, right? On one hand, what we call the Momo crowd, the momentum crowd is going to go crazy, the rates are going lower, let's buy. On the other hand, we're saying, hey, is Fed losing its independence? Are they now going to fight inflation? And then we see the yield differential between Japan and US, and the carry trade blowing up. So there will be a lot of cross currents here. So all I can say is be open to possibilities, either way.
And Nick, you come on the show a lot. You make these predictions, and then a lot of the time we have you on the show next time, and some of those predictions have come true. So as I was reading through your morning capsule, your probability of a December cut is about 70%. Right now, the market's pricing in higher than an 85% cut. Now, I know some of what you just mentioned is probably tied into what's missing in between your two numbers, but I'd love to know more specifically why yours is under. What's the market missing that you feel less confident about this cut?
Well, so when we look at the inflation data, inflation is still running around 3%, right? We see some weakness in employment, but not a lot. So now Fed has a dual mandate, okay, employment versus inflation. And, I've been a student of Fed for a long time, doing this for a long time, have made a lot of accurate calls about the Fed. The data really doesn't justify cutting rates, but Fed is likely to cut rates, and then there's a, segment in Fed, some people want to do what President Trump wants them to do. Other people want to take a stand, right? So there's some kind of thinking going on that when the new Fed chair comes, the new Fed chair is going to push for rate cuts going even lower and lower. And some members of the FOMC want to take a stand now so that when the rates are cut in the future, they don't end up getting too low and the inflation getting out of hand. So there are a lot of dynamics going on. So that's why I think the probability is about 70%, where the market is, if you look at a CME, Fed Watch, it's around 85-90%.
Yeah, right now 85.4. Now staying with the cut, we've got the cut coming. Potentially it's looming here for December. Next week we'll know. We've got QT ending today as we've hit December 1st. I want to pivot to your metals play here, though, which is sort of potentially tied into QT ending. Is this a structural moment for precious metals, particularly for silver? Because you have some pretty strong thoughts about silver.
Yes. So silver, we think if there is a Fed rate and, statement is not hawkish from Fed and so on, silver could hit $70. Silver is prone to short squeezes, and we can go back to 1970s when Hunt brothers tried to corner the silver. Then we had a few years ago, meme crowd going crazy. Silver is a smaller market, and there are lots of shorts in silver. And we saw that on Friday in the futures before the regular stock market opened. We saw a lot of short covering, and that carried through, and that's still carrying through today. And these short squeezes can be vicious. So I think silver has a possibility of being squeezed much higher here.
Yeah, certainly possible. We saw gold touch a 6-week high today, and looking at silver now, they're up almost 3% at 58.77 though. So 70 is a way to go there, but I don't doubt you. I don't doubt you, Nickam. Every time you come on, you say, last time I was on, I said this. And a lot of the time you back it up with, and then it happens. So thank you for being with us, for your insight, as always. That's Nickam Arora, the founder of the Aurora Report. And I do want to send it back to Sam in New York.
Great conversation, Molly. Thanks for that. Coming up next, a look at the state of the global supply chain and what's next for 2026.
She's not going to say NVIDIA.
Growing need for power reaches every sector of the global economy. That and more when Market on Close comes back.
Dow Jones down 334 points. Dude. Well, my position's not as bad as it was. I held some, thinking that we'd go ahead and break out more, but we didn't. I'm still green though, it's not by much. It'd be nice if we broke out here. It's now less than 31 minutes till the market closes. Doo-doo.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden alongside Sam Bottis in New York. Old Dominion, one of the biggest winners in the S&P 500 today after BMO upgraded the stock to outperform while lowering the price target to $170. The firm believes that Old Dominion's position for share upside due to what they call robust free cash flow and increased share repurchases. Shares are down nearly 20% so far this year, though. Let's send it back to Sam in New York for a conversation about our supply chain. Sam?
Thanks very much for that, Marley. Well, to keep the focus on supply chains, I'm joined by Chris Caton, Managing Director, Global Strategy and Analytics, Prologis. Thank you so much for joining me today. You've got a 13-page 2026 outlook on supply chains. There's a lot in there to pack in. I just wanted to sort of get your overview. What were your major takeaways? What should investors be paying attention to come next year as far as the trends that stand out to you?
Sure, Sam. For those who may not be aware, Prologis is the world's largest owner and developer of logistics real estate. We count the world's leading supply chains as our main customers, companies like Amazon, FedEx, UPS, DHL, Kuehne + Nagel. Often we are these customers' number one provider of logistics space. And it's really been a volatile time, a difficult time to understand where the market stands. 2024, even parts of 2025 have really been a transition phase from sort of post-COVID to a new normal. And we're really trying to see the signal from the noise, much like you do here on the program. And we've called on our earnings call about 6 weeks ago, an inflection point in the market. We're transitioning through this volatile phase into a more growth-oriented sector. And what really stands out to us about 2026 is just this new trajectory in the markets. And there are absolutely puts and takes inside the details, which I'm happy to take you through.
Yeah, talk us through what that actually is going to look like. As far as what people are saying about, a lot of the AI investments, but also with respect to what we're seeing as far as decoupling with China, because these seem to be two narratives that very much drive the capital market. So if you could sort of touch on what you're seeing there and what really stands out, that'd be great.
Absolutely. So let's start with technology. Let's focus on e-commerce. So e-commerce continues to grow at a multiple of in-store shopping, and there is a critical need for supply chain to support online shopping, right? It's the holiday season. A lot of folks are buying things online. That really requires a lot of logistics space. In fact, more than traditional uses. You need to have the product in the warehouse shelves ready to ship out. You need to have dedicated spaces to wrap up those packages and ship them out. And you also have to be able to accept them for return. So e-com has stepped back into helping drive growth for logistics real estate. It's 20% of new leasing. And our call for next year is it'll be even higher. So as e-com continues to grow at multiples, that will be one driver. The second will be a sentiment shift as it relates to using warehouse. There's definitely been a tone of caution as we've seen economic uncertainty, cost containment, drive decision making. And we expect to see customers increasingly utilize their warehouse in the coming year, and that's going to translate to more leasing. So those would be a couple of examples.
What are you seeing, because I'm seeing as far as what some of your takeaways are with respect to the volatility and some of the trade concerns right now. Top of mind seems to be economic volatility, the tariff increases, the trade barriers, and also geopolitical instability. What is some of the feedback you're getting? What are some of the questions that you're fielding from those across industries about those three things?
Sam, you're totally right. The last 5 years have been uniquely difficult and uniquely hard in supply chain, and in particular on the transportation space. And so we saw a lot of volatility in the pandemic as it related to pushing product through supply chains and the response in volumes and price. And then there's been an associated drawdown in that activity over 23 and 24 and even in 25. So one of our predictions for 2026 is to be watchful for a move in pricing in the trucking space. So trucking has really been challenged in the United States as it relates to pricing, and that's been sustained by uneven demand momentum and also significant excess supply, particularly smaller owners and of smaller trucking companies. We expect some of that supply. We're already seeing some of that supply come out of the market, and so as customers think about their network strategy, as they think about the size of their requirements, transportation costs are going up, and customers need to anticipate that. So that'd be one. And then the second, and a big trend here, is Prologis is a global company. Logistics real estate is a global business. And typically, the United States is a leader, not a laggard. But what we've seen emerge in 25 and will be increasingly clear in 26 is customer demand, the pricing growth for space. International is outperforming. You can look at Europe, where there's high barriers to supply, steady demand, and low vacancies. And you can look at the emerging markets. And I'm really thinking about Brazil and India, where modern logistics facilities are unlocking whole new ways of unlocking the retail models.
Yeah, and both of those have really been seen as part of the China Plus One strategy as well, particularly with the shift in dynamics across the supply chains too. I'm just wondering, for those who are watching, where are some of the biggest investment opportunities in the supply chain across logistics moving into 2026, given all the geopolitical tensions that we hear about? I mean, how do you help some of these investors sort of cut through the noise and know where to look?
Sure. So there are a couple of categories. The first one that's clearly spooled up here in 2025, and our pipeline is really, really full, is something we call build-to-suit development projects. This is where we get together with a customer, trusted customers. We're the world's largest developer of logistics real estate, and we'll build a building to their specifications consistent with our standards.
Bucket resistance.
So that's a global phenomenon. It's happening in Europe. It's happening in the U.S. It's happening globally. And so for sure, build-to-suits represent both a growth category and really attractive economics, really attractive risk-adjusted returns. So that'd be one category. Another category is we are increasingly seeing attractive risk-adjusted opportunities to build buildings speculatively. So that is in Europe.
Prologis
emerge in parts of the U.S., really situation specific. The main situation in my mind is larger buildings. Requirements are getting bigger. We're talking about 1 million square feet style facility, and this is another growth category. And then the third is those stronger areas. So we're really leaning hard into the international markets. India and Brazil certainly count in that category.
Okay, definitely two markets to watch there, India and Brazil. Thank you so much, Chris. We're going to have to wrap it up there. It's been an absolute pleasure. Chris Caton, Managing Director, Global Strategy and Analytics at
1:15.
Washboardjim. Back over to Marley in Chicago for now.
Fascinating chat from Sam and Chris. Thank you for that. Coming up next, we've got Options Corner. Rick Ducat will join us here in our Chicago studio to take a closer look at recent trading activity for CrowdStrike ahead of earnings tomorrow. That's next on Market on Close.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
We're at 150.
Whether you're an
We're back to a
experienced
triple top.
investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions
PLD,
directly
that's
to an
what
education
it
coach.
is.
It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
It's at a high. CrowdStrike. So we're at resistance.
Okay, great. And I track options flow daily.
Will we break
Identifying
it?
who's buying,
If
who's
we break
selling,
it,
and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
kind of formed another ascending triangle.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more.
This might be it.
All crafted just for traders. And with guided learning paths, stacked with
Not feeling
content
very
curated
bullish.
to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Market on Close.
We're at a 6-year high on
headliner that'll be highlighted
PLD.
tomorrow on Market on Close. Analysts are expected earnings per share of 94 cents on revenue of more than $1.2 billion. CrowdStrike has beat bottom line consensus estimates by at least 10% in 8 of the last 10 quarters. So, of course, that means they are our focus for Options Corner today. Joining us now here, Rick Ducat, our lead market technician here on Schwab Network.
Way too
Take a closer
expensive.
look at CrowdStrike ahead of their earnings tomorrow. You know, how we usually start is just sort of taking a look at how they're performing more broadly against the market and some of the competitors in the sector. But I can see from the chart that CrowdStrike's a strong outperformer here.
Yeah, to be sure, up about 45% versus the tech sector, up about 21%, outpacing the S&P about 13%, a little under 13 here. But when you look at other cybersecurity companies as well, CrowdStrike is once again the clear outperformer here. Zscaler was the only one who was kind of on pace, and they had a very severe drawdown recently here. But others like Checkpoint, Palo Alto, Fortinet, and SentinelOne, all to some degree or another underperforming, with Sentinel-1 down almost 41%. So really, CrowdStrike seems to be one of the leaders in this field of ever increasingly important cybersecurity here.
It would have been interesting to take a look at this in advance of some of the earnings of some of these competitors as well, because Palo Alto did put out good numbers for their quarter, but just didn't receive a good market reaction for their response. So an interesting setup looking at CrowdStrike as clearly the strong outperformer here in the sector. As we look at them standing alone, though, on their own chart, as far as the technicals and what the setup looks like, I see we've got upward and downward channels here, so walk us through it, Rick.
Yeah, kind of this trend line was the prevailing theme for the past quarter or so. But then you can see that we have started to moderate somewhat here. We hit our highs, 560, 690, and then we retreated to this level here, 476, where we have reached a low point several times, most recently only about a week or so ago. We also had another gap to keep an eye on here. The high point that we had before the gap up began was around 455, so that would be another downside level to watch. When we look at our moving averages here, we can see that our 3 shorter-term moving averages, 5, 21, 60, 3-day EMAs, all clustered together between about 500 to 517. A bit of a broader range here, but just the idea behind this is when moving averages start to cluster and move together, the trend is starting to slow down. There's less momentum, which is being
Do you hear what he
exhibited by
said?
that RSI kind
When
of
moving
moderating here
averages
and trailing off a little bit, stagnating somewhat.
get
as we head
closer
into
together,
earnings. Pretty
momentum
common
slows down.
Yeah, a pretty common situation here, but as we're taking a look at CrowdStrike, and as I was looking at some of the stuff I've been talking about today, I was talking to George Tillis earlier on Trading 360 about CrowdStrike and some of the analyst action in advance of the earnings. They got some price target raises. Overall, how is the sell-side community looking at CrowdStrike ahead of earnings?
It seems to be quite positive. When I look at just the coverage today, we saw JP Morgan and KeyBank both raising their price targets to 580 and 570 respectively. So pretty hefty bumps because they originally were at 500 and 510. But also just in the past few weeks, D.A. Davidson, Oppenheimer, Jefferies, Truist, Rosenblatt, Mizuho, etc., all price target bumps, all more positive activity. Everyone had a buy rating except for Mizuho as well, which had a neutral rating. Dan Ives from Wedbush said he expects a solid quarter. They have a price target of 600 with an outperform rating. And they discussed agentic security. The strategy is still in the early stages of playing out with strong opportunities to expand. That was most of the news I saw too. They have a partnership with HPE as of today for agentic security. They also got approval from the government for high authorization of its Charlotte AI agentic system. So this seems to be kind of one of the main themes to be looking for.
Sure, and potentially a decent setup for their earnings. As far as the options activity we're seeing, is it increased because of the earnings event?
It was, this is not the most actively traded name, but there was some decent activity here. When I look at the December 19th expiration, about 18 days out, the highest levels of call open interest were at 550 with about 2.3 thousand to 2,300 contracts, excuse me. On the put side, the highest were at 400 and 530, both about 1,200 open interest contracts or so. One interesting trade, a longer term trade, more than a year out, plus 50 January 15th, 2027, 750 strike puts with about a $1.3 million debt, a bearish opening play, break even 487.27, only about a 3.5% to the downside.
Yeah, 750 strike right now. CrowdStrike trading at 503.16. Rick, thank you for being with us to break down CrowdStrike for Options Corner. Their earnings we'll have on the show for you tomorrow after the close. But I do want to send it back to Sam on the floor of the NYSE and find out who we'll be talking about for overlooked stocks today.
Thanks, Marley. Well, overlooked stocks. George Tillis has his eye on Unity Software today, heading into the close. He'll break down the news on that name and what you need to know about the company coming up next on Market on Close.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I'm Jenny Korn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the market.
Boeing's getting back to my resistance to break.
Subscribe at schwabnetwork.com.
How's it going? First day, so.
Sometimes,
Next. Try it again.
you could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Welcome back to Market on Close. I'm Sam Bardas, live from the floor of the New York Stock Exchange. It's time now for Overlooked Stocks. I'm joined by George Siller, Senior Markets Correspondent, to get us across this one. We're highlighting Unity Software today after it got an upgrade on its shares to buy from neutral with a $48 price target. So what stands out about this name? What should we know? What's the reason behind this price target boost and the reaction of the stock today, George?
Well, it's a good question. I think there's something happening here with Unity Software in terms of a business pivot, particularly why the stock's actually holding up quite well this year. I mean, year to date, this is a name that's up about 79%. The last 6 months, it's up over 60%. But nonetheless, this is, for those who don't know, basically started off as a software platform that is used to create, interactive games and online content. They essentially develop, game content. They also have software that helps develop and animate things like architecture, design, as well as automotive manufacturing elements to design. But at the same time, what's been going on in Unity is they're morphing their animation and design software into marketing. And in fact, they're moving quite aggressively in advertising, so they're becoming more in line with companies that have performed really well this year, like AppLovin, especially when it comes down to integrating artificial intelligence, data recognition technologies, and user behavior recognition technologies that they're now integrating alongside their developer platform for software. So I think the story behind Unity Software isn't necessarily that they're growing and monetizing effectively their core software. They're actually adapting to the changing environment, looking to monetize games, becoming more of an advertising platform, but also potentially expanding their revenue base into places like e-commerce as well, which has actually done extremely well or performed extremely well relative to competition like AppLovin. So with that said, some of the analysts are looking at this carefully for a potential growth story for Unity Software. REIT did increase their price target to, of course, a buy rating from neutral. They got a $48 price rating on the stock, and that's pretty much in line with near the high of the street, which is around $50. Midpoint right now around 44, but also the low target on Unity Software is still around $21.
Yeah, I was going to say, I was just actually looking across some of the analyst consensus here. The stock is up about 9% or so year to date, so it's obviously doing something right here. But to your point, I mean, you've got, in the highest price target range of around $54, the lowest being around 21. We're currently trading at about 43 and change right now. But as I look across, how the analysts are looking at this one, I mean, you do have quite a considerable cohort still with a whole rating here. So, I mean, what exactly are the analysts saying? What are they looking out for? Because I've been sort of combing through some of the notes. It does look like they are still waiting for a better sort of performance improvement on Vector within the company. So could you just sort of run us through exactly what the analyst community is saying here?
Yeah, so the Vector AI platform that they've been rolling out is essentially the monetizable advertising component of the business that is going to be added to their traditional game design platform. So that's important in terms of the prospects for the business going forward. I think this is an interesting story associated with a business that is now adding, some accretive top-line sales and potentially scalable profitability on a forward basis. The challenge still lies for Unity, and I can see why the analysts still have pretty much a consensus hold rating on the name, is that the company's still structurally unprofitable. And considering now market capitalization around $18 billion, sales are growing in the high single digits, not too monumental, considering some of the competition out there in the game design software space. I think if you look at top-line sales at $1.8 billion, the challenge still lies that they have a negative 24% net income margin. So they lost around $435 million last year on $1.8 billion in sales. That's the overhang, I suggest, on the financials for the business. But nonetheless, the price performance of the stock seems to be more in line with the non-designer software companies like App, which is moving, AppLovin which is moving quite aggressively into monetizing advertising across, all gaming, if you will, spectrums.
Well, we got 7 minutes
but also
left.
E-commerce platforms. So that's the pivot that Unity Software seems to be moving towards. They just haven't shown some accretive earnings relative to that changing business plan. So for what it's worth, I think this is an interesting pivot story for a company that, again, is moving not necessarily completely away from their traditional business, but they're adding to their traditional business. And that improves scalable prospects going forward, and that's why I think the stock is performing quite well this year.
Yeah, it's up today, yeah, but still quite a way away from what we were looking at the end of 2021 as far as that high is concerned. But thanks for getting us across that name today, George Sillis. Appreciate it. We'll send things over to Molly in Chicago for now.
Thanks so much, Sam and George. We're nearing the end of our market session for today. We'll be bringing in Alex Coffey to break down the levels he's watching on the S&P 500, as well as today's action and the earnings from MongoDB. That's all next on Market on Close.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
Make or break.
Short to near-term catalyst.
Next Gen Investing, 1 p.m.
Well,
Eastern.
Only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
We're back here on Market on Close. I'm Sam Barnes on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. We've just got a few minutes left now in today's session. Let's welcome in Alex Coffey, Senior Equities Contributor, to help close out the day. And Alex, what levels really stand out to you on the S&P 500 today, as we've seen stocks under some pressure today?
Yeah, no doubt. It's been an interesting session, guys. When you look at how the markets performed, this is a story to me of one, a little bit higher yields, but mostly a market recovery that was rejected essentially at the unchanged line. Levels that I'm watching into the next day or two would be, first off, the 5-day EMA, which we talk about quite a bit. That's represented by that teal line. That's coming in around 67.80 or so. That represents a 1-week moving average. And then below that, the 1-month moving average around 67.40 is represented by that more purple-colored line. Most importantly, both of these are upward sloping. The 1 week is well above the 1 month now, and the current price is above both, all of which does suggest, even with the pullback, that the short-term positive trend is still intact. And for those who caught our program in the middle of last week before the Thanksgiving holiday, these boxes to the right represent just visual representations of what the current implied volatility and option prices in the S&P 500 index suggest is a 1 standard deviation range over a couple different time frames. The first one is over the rest of the week. So this just goes out basically till the end of the day Friday. And the current 1 standard deviation range is essentially up or down 85 points from here. So just a little bit over, 1%. Let's call it 1.3% or so. The next level, we actually looked at the December monthlies last week, but this time I actually adjusted it to December 10th. That's meant to represent through the Fed meeting, basically the day that's going to have the expiration that will get that Federal Reserve announcement on whether or not we'll get the rate cut, the subsequent press conference. No, as what one would expect, it does add a little bit of volatility, guys, and basically a 1.9%
Never seen a chart like that
move
before.
up or down, about 130 points, and then finally that last larger box represents the potential volatility into the end of the year. And what I think is most importantly here is we hear all these price targets for the end of the year. Well, here's what the market suggests is a reasonable expectation for the price movement. Basically a move to essentially new all-time highs in the 7,080 range, and then to the downside, essentially back to where we were at the lows of last week in sort of that mid 6,500 level.
And Alex, I want to talk quickly about, you were throwing out some of those levels that people are talking about, but the other levels we've been talking about all day today are these cryptocurrency levels, particularly Bitcoin, and how they're starting to weigh on sentiment, and we're starting to see this downward pressure sort of put more broadly on the overall market. Just today alone, we saw Bitcoin drop more than 6%. It's below that 86,000 mark. What are your thoughts on if this is just a liquidity event versus something that's more structural?
Well, I do think that it's a testament to the structure of the marketplace. And where it's different is the S&P 500, particularly the futures in the S&P 500, have a way deeper market. So if someone wants to liquidate hundreds of millions of dollars or billions of dollars, it makes an impact, but the market can handle that. What we're finding, I think, especially as this becomes a bigger move and more prolonged,
Google closed with a new low
the market
today,
just isn't as deep.
day low.
And these big, whether they're levered longs that are being liquidated or people who are taking profits at higher levels from a long time ago, it doesn't really matter. The buying is not there to sustain the level of the selling. And so when you look at it that way, I do think that it's a testament to Bitcoin's whole premise, which is you essentially need a buyer at a higher price to continue to want to be interested in it, and when it starts to crack.
Okay. I think that's about it for me today. I almost took a nap at the end of the day. Mr. High of Day. Well, Jimmy's going to call it a day. Time to retire, little man. Who is this Isaiah? And we didn't get much snow today. We'll catch y'all later.